7th floor.
We'll see you around the timeline. Feels good to be back.
I think The Rollup is one of the most premier media brands in crypto, and Andy and Robbie are great experts at everything they talk about, and it's my favorite podcast.
Adding it to my library as we speak.
Potentially multi-chain deployments.
We are at DevConnect Day 1 here. I'm Jesse from Base. JP Morgan, BlackRock, DTCC, Fidelity, the entire thing was just institutions. It's next level. This industry is going to the next level. And guys, I don't know what else to say. I'm bullish.
He said it, he finally said it.
I'm so bullish.
Andy's bullish, I'm bullish, we're bullish. Headed to the top. If we're not already at the top, we're going to the top.
We're going.
Rollup is my favorite.
From all walks of life, all over the world, all over this industry, come together for the roll-up.
The institutions aren't coming, they're simply here. It's the golden age of crypto, guys. Get right, let's go.
Welcome to the nest. See you on the show.
We are live. Let's go. Welcome to Vegas. Welcome to the city that never sleeps. We are at the Aria Hotel, and it is an absolute pleasure to see you guys here today. Fantastic on-site conference. We're going to have a lot of fun for you guys today. Give me some air horns. Let's hear it. We are rocking with you guys. I think we've got about 5-6 hours that we're gonna hit live, no breaks, back to back. They just got started with a fantastic panel. Friend of the show, Cody Carbone and Eleanor Terrett got us going here today, and it's a fantastic lineup that we've got here for you. They've got the speakers up on the stage. We're gonna be talking with all the speakers here. They're coming right off the stage to sit down with us at the roll-up. Like I said, fantastic show. It's my first time in Vegas. I already played a little blackjack. We're having a lot of fun. And we've got a ton of fun speakers coming at you guys today. We're gonna start off with Juan from Bitwise in a few minutes. First, shout out to Plume. They've got their Nest product. They're building institutional liquidity. This is the institutional yield farming days. We're hoping the Clarity Act goes through and gives us a catalyst for us to bottom this market. But otherwise, Plume is continuing to build. They are the sponsor of the tokenization tower. Big shout out to Plume as always. And we're gonna keep it rolling for you guys. Like I said, fantastic conference here. It's the Rare Evo conference, the first time that we're doing this conference. And we're planning on having a lot of fun here today. We're gonna be live all day. Topics today, we don't have all of our speakers on here, but as usual, we're gonna tell you about the market and weather. We're gonna tell you about streaming from this conference, and we're gonna get into founders, CEOs, and the entire show. I mean, it's a pretty eclectic group out here. Like I said, we're gonna start off with Juan from Bitwise. We're gonna get Denis from the XRPL Foundation. So for all you Ripple bulls out there, we're gonna get a little bit of an update from the ecosystem. Ask ROI, we're gonna get Todd, Ault, and then the big news of the day is gonna be not Jerome Powell, it's gonna be Kevin Warsh speaking on behalf of the FOMC board. And we're gonna get into that. We're gonna show you guys everything that is happening at the Fed meeting today. Let's keep it rolling, get into our markets and weather. Before we do, big shout out to Frax. We are gonna get the guy, the man, Sam Kazemian on the show later today. I already said what's up to him. Frax is, we're gonna put Frax on the moon, and Frax is going to, I've been hearing that they've been spending quite a time in Vegas, and I think we're gonna be talking more about that. So I'm excited for Sam to come on the show. Frax obviously powers our stabled up show, and so we're gonna be getting into our stablecoin segment in a little bit. It is 100 degrees in Las Vegas. You guys know that I hail from Florida, where it is also close to 100 degrees, but the humidity is just zero here. It's very dry, and that makes it a lot more tolerable. So I'm actually enjoying it here in Vegas. It's actually a little bit more comfortable despite being 100 degrees. And of course, our weather segment is powered by Relay. From Vegas to Florida, from Florida to New York, Relay will take you anywhere you need to go. Obviously powering a lot of the Robinhood flows, everything that's happening in a cross-chain ecosystem. Relay will take you wherever you need to go. So let's keep it moving. Also, shout out to Denari. These guys are absolutely crushing it. I'm hearing things about Denari. They've got big news on the horizon. Obviously, we're here, and the big talk of the town is tokenized equities. There's a drone flying behind our producer table. So our producers are looking at me, but if they turn around, they'll see a drone directly behind their heads. There's amazing things happening here in Las Vegas at the Aria Hotel. And big shout out to the Rare Evo guys for having us out here today. Put us up in the beautiful Sky Suites in the Aria Hotel. So couldn't ask for much better on that front. Let's keep it moving. Our markets today, powered by Zama. I'm interested in hearing our thesis from Juan, who we're gonna have up in just about 5 minutes. Bitcoin is flat today. And the thesis that we've been thinking through over the last few days on the show is that the stock market is obviously teetering, and a lot of the altcoin complex is sort of tracking very closely to the altcoin complex and the stock market. And so Bitcoin has started to decouple. It started to decorrelate from the rest of this market. However, stocks, NASDAQ, the tech indices, the Korean market continues to limit down. All of these things are very correlated with the rest of the altcoin complex, but it seems as if Bitcoin is starting to decouple, and so we're gonna be getting into more of that. Markets obviously powered by Zama. These guys are absolutely crushing. We don't have Zama on the lineup for the prices, but Zama is flying, part of the privacy narrative that we're seeing play out as well. Zcash also is part of this category. So we anticipate this is going to continue to rise as a result of everything that we're happening in the AI, the robotic space, just playing into privacy as well. Let's keep it rolling. Guys, our exclusive AI partner is Near. These guys are also firmly in the privacy category. They had a big release of Ironclaw 1.0 along with their Near AI product stack. So they're continuing to verticalize and just ship great products. These guys are really an AI company, but obviously you can get exposure to privacy AI through Near. So they're doing incredible things, big things on the horizon for Near as well. First tweet, we've only got a few tweets before we bring up our first guest. Hayden Adams, they turned on the uni fee switch. Now you would think if you're a uni holder, this is fantastic, right? You're gonna start to get some flows, but this was highly contentious across the entire ecosystem. Of course, there's this heated battle between the Aerodrome guys and the Uniswap guys. And so tons of FUD and misunderstanding, according to Hayden, around the fee switch. LPs are getting reduced. False. Protocol fees are additive, not subtractive. LPs earning 30 basis points per swap, still earn 30 basis points per swap. Obviously, the retort to this is that as more fees are added, if you have a 30 basis fee and then all of a sudden you add an additional uni fee, right, there could be less demand. You could be less competitive on the rates that you're providing. Flows could allocate elsewhere. The protocol is taking 25% of LP profits, made up math. 25% of LP profits on a 30 basis point pool. The protocol fee is 5 basis points. That's 5 out of 35. About 14% of total swap fees and 0% of what LPs were already earning. Sort of contradicts the previous statement, because now he's saying that there is 5 basis points, and that does sort of cut into the 35 basis point, but he makes the point that's only 14%. 14, 25 feels like we're splitting hairs. The cut is too high. Sexes charge 100 to 200 basis points per swap. 5 basis point on a 30 basis point tier is 20 to 40x cheaper for the deepest distribution in DeFi. This is where I seem to agree. Guys, if we can get deep liquidity and competitive fees on decentralized exchanges, the decentralized ecosystem, the on-chain economy is what wins, and we start to take market share from the centralized exchanges. The sexes are always going to appeal to retail that are prioritizing convenience. But the idea is that we're going to see the decentralized exchange ratio to centralized exchanges continue to cut in to centralized exchange volumes and order flows and users. More of that is going to come on chain as functionality, fees, and liquidity all become much, much more competitive. I see everyone rocking out in the chat. Greg, let's go. Christian, greetings from sunny beach in Bulgaria. Very, very cool. One Arm Bandit, appreciate you rocking with us. It is FOMC day. Not sure if we get a surprise cut, but the rate, the probabilities are saying we might get a rate hike. Don't think we get a rate hike. I think the market actually rebounds on no change. Birds 1811 also rocking with us as well. Big, big shout out. Let's keep rolling. We've only got 1 or 2 more tweets here, so we're gonna speed roll through these. Trade XYZ, SK Hynix mark price dropped down from 1127 to 917. This print was based on an executed trade, which was relayed by multiple independent data providers. So there was this big drop. The Korean stock market has been limiting down. The Korean market is in shambles, and we're going to get into that in a little bit. But what is happening here is that there was a big liquidation cascade that happened on Hyperliquid on SK Hynix. You know, there was some debate. Was this, you know, an Oracle slip up? Did the price order feed fail? Trade XYZ is arguing, no, it didn't fail. This thing is just extremely volatile, and there was multiple parties that did print this, this price by multiple data providers. So don't have a lot here. I think, like, you know, we've seen how these perps exchanges operate in times of high volatility in the past, and so I think they're continuing to do quite well. We anticipate that these venues are going to be the home of price discovery in the US and abroad across several asset classes. The fact that they're dealing with some volatility on SK Hynix is also just a result of the markets being closed elsewhere and being open on venues like Hyperliquid. That is causing some dislocation in the price, and you see these big drops and big gaps when there's high volatilities in terms of these market closures. Let's keep moving along. That's SK Hynix. We've just got maybe one more tweet here before we kick it over to our next one. Yeah, here. Total raise, $7.5 billion. Total 24-hour revenue, $1,300. 15,000 years to return investments. The funny thing about each of these projects is that they're still alive. We've seen so many companies that have raised a ton of money and just failed, flopped, died. They just don't continue to build. The thing about all of the companies on this list is that my understanding is that these are continuing to build. They've raised a ton of money. It hasn't translated into revenue. They're not participating in the revenue meta, but they are still alive. And so it is a typical startup path where you just continue to raise money, burn a ton of cash. Don't worry about revenue, because as soon as you start to generate revenue, it's never gonna be enough. So you continue to raise money, deploy that money, burn cash. One day, maybe, these start to generate revenue. It does feel like now is the time to generate revenue if you are one of these companies. But if you've raised enough money and you have a reasonable, thoughtful, considerable, capital reserve strategy, in theory, you could have enough money and enough runway to make it through this bear market, make it into the bull, and then generate some revenue when there's a ton more market participants in the space. That's my take on this. For some of these companies, it's do or die. For other ones that have a decent capital strategy, I think they're gonna be fine. They've got enough money to make it through, and one day, I do think that they will generate revenue, but can't say that for all the companies on this list. Okay, guys. Daily equity is the last segment before we bring up our first guest of the show today from the Aria Hotel in Las Vegas. Let's roll daily equity and get into it. The Korean stock market is getting shellacked. These guys limit down in the last 4 or 5 trading sessions. Memory stocks look like Christmas trees. It is an absolute fiasco in Korea. And so what happens every single day, I've been watching it, I check when I wake up, I check when I go to sleep. As soon as the Korean market is about to open and people are a little bit hopeful, the market actually improves. And then the Korean stock market limits down and everything gets whacked. Now, interestingly, Bitcoin has held steady, and I think that is something of note, and that's what we're going to get into with our first guest today. Even though the Korean market is getting absolutely rinsed, and Koreans, I've heard the Korean government has implemented a suicide hotline. There's just broad systemic fractures in the Korean market. This thing was on an absolute tear. Liquidations are just across the board. South Korea's Kospi fell more than 10%. This was over the last 24 hours. I saw a chart that said the largest liquidation cascades in the Korean market, thinking back, the 2008 global financial crisis, where the market fell about 50% over a 350-day period, 350 days. The second one was when the Kospi fell about 45% over a 700-day period. We have reached similar levels of decline in the Korean market. I think it's down 43% from highs, and it's only taken a month. In previous declines, this type of decline has taken multiple years to play out, and we've seen this type of depreciation in the Korean market in a matter of weeks, which is just an absolutely astonishing pace for the rapid decline of the Korean market. And so obviously this is, a massive depreciation in market value across the board. So this is something that we are seeing play out in real time. Memory stocks in Korea are down 70%, 50%, AAOI is down 60%. Yeah, it is tough times out there. The AI trade is moving from pure momentum to valuation discipline. We saw Micron, we've seen SanDisk. These things were up astonishing amounts, and now they're really coming back to reality. Investors are starting to punish crowded names where competition, capex risk, and weak fundamentals challenge the growth story. We know that Google and the hyperscalers aren't going to be negative cash flow forever, and so these memory stocks just simply can't keep up. Guys, that's daily equity for today. We're paying attention to the Korean markets. The altcoin complex is correlated to the Korean markets, correlated to the stock market in the US, the NASDAQ. Bitcoin is seemingly decoupling. We're gonna be getting into that with our first guest from Rare Evo, live in Vegas from the Aria Hotel. Let's flip the headline. Let's get ready for our first guest, Juan from Bitwise. Let's go ahead and bring him up. Don't need a standby. We're going to keep it rolling all day. Juan Leon is Senior Investment Strategist at Bitwise Asset Management, where he helps lead research product and strategy development, fund and index management, and client relationships. Juan, man, it's your first time on the show. We've had, we were messing around with some of your coworkers. First off, it's great to see you, man. It's great to have you on the show. We've had Ryan, we've had Hunter, we've had Teddy, we've had I think there's even more. We've had Matt. We've had several guys from your team on, and so it's an absolute pleasure. You guys always do a rock star job, and I think it was a trifecta, then it was a quadfecta. We're up to 5, 6, 7 fecta now. So absolute pleasure to have you on the show today. How are you feeling, man?
Yeah, you've had the whole Bitwise gang. I'm glad to join it as well. It's great to be here. Energy is great at the conference, and excited to be here with you today.
Incredible, man. Well, we spoke a little bit before you ultimately came on, and you wanted to. We're going to cover Bitcoin and kind of the levels that we're watching there. Obviously, Bitcoin seems it's like sort of in its own world right now. Kind of separated from the rest of the altcoin complex. Before you came on, I was just sort of making the point, because I've been working out this thesis on the show from some of the people that we've been talking to, which is that Bitcoin seems to be decoupling from equities, while the altcoin complex seems to be pretty correlated to the NASDAQ, to the Korean markets. Altcoins are tracking tech stocks, but Bitcoin seems to have been decoupled, and now it's feeling more like an inflation hedge. We're in a midterm year. I've been hearing more and more about the national debt, inflation, and Bitcoin seems to be taking that alternative role, whereas the entire altcoin complex feels like it's just tracking tech stocks. So Bitcoin seems to be decoupling, becoming less correlated, but the altcoin complex seems to be correlated to equities. That's sort of the thesis that I've been working out. I'm curious what your take is on that, but also just your general take as you see these things play out in the market.
Yeah, I think that's a really interesting take, and I think it's something that we've seen that's developing in the market that I think, to your point, I think shows signs of maturity in the market. If we look at the past 2 cycles, everything moved with Bitcoin.
Yeah.
But now we are in a phase where we have more regulation in place. We have more institutional investors as opposed to only retail investors. We have more products in the space. And you're starting to see the use cases of different cryptos start solidifying or maturing. So Bitcoin's case as a geopolitical store of value hedge asset, I think is solidifying in the public consciousness. Yeah. And I think that's why I agree with you that what is driving it more and more are these issues of fiat debasement, of geopolitical fracturing, and especially in an election year and in the turmoil we've seen with Iran, and that geopolitical situation, it makes sense that Bitcoin is trading more based on that. While the rest of the altcoin complex is much more linked in a way to tech stocks, because they are assets that produce, that can generate fee revenue, that have use cases in technology that are broader outside of the macro case of Bitcoin. So as those assets find their product market fit, I think they will be treated more akin to tech stocks. So that divergence makes sense. And I think it shows signs of maturity in the space. And I think what we've heard from investors is they look favorably on this, because for them, it's now they have an ecosystem where they can trade different assets in different market environments to generate performance, whereas before it was do or die with Bitcoin, yeah. And everything else went along with it. Now they can find differentiation. And as you were mentioning, this year we've seen a decoupling where Bitcoin is down 26%, but crypto equities are up something like 9 or 10%. Many of them are the Bitcoin miners participating in the AI trade because of their repurposing of the data center space. So I think it's great. There's differentiation in the market. There's product market fit for different areas, and I think that shows maturity in the space. Yeah,
and you're absolutely right. In previous cycles, we've seen everything move in unison. Everything's been extremely correlated, but now it does feel like there's there's a little bit more. It's kind of like you can pick your spots, and it feels like the market is more legitimate. It's matured quite a bit, and so now we're starting to get a more sophisticated market where you can pick some winners and losers if there are a thesis and fundamentals that end up playing out. Another thing that people have been just hammering home has been this divide. I see half of the people that I talk to and I follow, they say we've bottomed, we're in apathy, it's just a matter of time, but it's not a matter of price. This is the price level, and we're not going to go much lower. We don't know how much longer we're going to stay here, but we're not going to go much lower. And then the other half says one leg lower, final washout, exit capitulation, and then it's off to the races. What are the levels you're watching on Bitcoin specifically? And then maybe we'll talk about how relevant that is to the rest of the altcoin complex.
Yeah, absolutely. I think it's important to take stock of where we are right now, and then we can assess the short-term and longer-term factors driving the outlook. In terms of Bitcoin price, it's just shy of 64,000 right now. And if we look at key levels, the 200-week moving average, which a lot of traders pay attention to on a technical basis, is at about 63,000 currently. So if we test that 63,000 and breach it and move below, and then are unable to reclaim it and stay above, then I think we can expect going lower to test the current interim low, which was around 58,000.
Okay.
And if that is breached and again can't be reclaimed, stays meaningfully below, then I think we can expect a leg lower. But we're still sitting above, just above the 200-week moving average, and then so that's the current resistance level.
And how much lower? Let's say bear case is that we test 63 doesn't hold, we test 59. Is there a floor that you're watching? Even if, at what point do you think people come in and they say, hey, we're buyers for the long term, this thing isn't going to zero? Like, where do you think that support ultimately holds? Even despite, maybe two-part question, where is that price level and what is the probability that we do get there?
Yeah, you can look at things like where Bitcoin has traded in regards to some of these indicators in past bear markets. You can look at the realized cap of the Bitcoin market, and those levels, like in prior bear markets, Bitcoin has traded below the 200-week. It's traded as much as 15% below. And then some of those realized price levels, I think all of those point to, if we were to go a leg lower, I think we could be looking at the 50 to 55 range as a bottoming area. But again, we're still above the 200-week right now, holding above. Let's see what happens. That's the current resistance, and then we can, as I mentioned, there's 58, 59 as other resistance below that. Now let's look at at prices above. If we look at where the market could go on the upside, we talked about the 200-week, the 200-day moving average, that's sitting at about 72,000.
Okay.
So we're 64, 200-day moving average is at about 72,000. I think if we start moving up and we get to that level, that'll be the resistance up there.
The 72?
Yeah, 72.
Yeah, okay.
72,000, where if we breach that and then go above and stay meaningfully above, then I think we can look at higher price levels.
Yeah.
But that is, I think, the key resistance level. The 200-week at 63 is the key support level. I think that's where investors need to look at where the price action takes us.
Okay. First question is just, if you had it, predictions are tough, I realize, but, and we want to stay optimistic, I get it. But which way are you leaning? You think the 64 is going to hold? Or you think we're going to go meaningfully lower? Where do you think we're upwards of 72? Where, if you had to put a probability on it, flip 50-50, or which way are you leaning?
Yeah, we're closer to the support right now. The Clarity Act, which we'll get into, is facing hurdles, meaningful hurdles, especially this week is an important week, and we can get into that. So I think given the macro environment, given where we're trading, given sentiment in the space, if you look at sentiment gauges, it looks like, as you mentioned at the beginning, investors are pretty apathetic, and we might need a last washout before it's complete agony. People think Bitcoin has died its millionth death, and then we resume, we bottom out and start moving upwards.
Now, if what you're saying is true and what I'm saying is true, and I think they can both be true, I would imagine that if we do get that washout, alts would get rinsed. They would get absolutely whacked. However, if we do get above 72 and we stay meaningfully above 72, I don't know if alts would follow. What do you think? How do you think the altcoin complex would react to Bitcoin going one way or the other?
I think if we go below, probably most everything gets dragged down. There's things that are performing currently hyper-liquid and other things that have outperformed. Yeah. So maybe some exceptions, but by and large, I think things it's a big flush out, right?
Yeah.
But if we move above, I I think, again, because Bitcoin is being driven by geopolitics and altcoins are more being driven by regulation, a lot of it hanging on the Clarity Act, I think that is an independent driver that we need to see progress there before those coins can really take off.
Yeah, I think you're absolutely right. I think they're hinging on regulations. One thing I would add is that, you know, we've seen this revenue meta play out over recent months where a lot of teams have started to prioritize that, and the teams that have caught a bid, the tokens that have caught a bid are the ones that are generating some revenue. Hyperliquid is obviously, you know, the go-to example there. And you know, that calls for a valuation that's tied a little bit more to an equity. And so, you know, given that dynamic, it feels like they're hinging on regulatory and they're hinging on, you know, this revenue aspect. But both of those things, if the market is apathetic and we don't get clarity, are going to be tough to, you know, see a catalyst to the upside for the altcoin complex.
Yeah, I think it's an interesting moment because prices are way down. But in our view, fundamentals have bottomed and are running ahead of the price. And what do I mean by that? Well, if you look at things like tokenized real-world assets, those are up 45% year to date. The top applications in crypto, the top 10 applications have brought in 5.9, almost 6 billion in revenue over the last 12 months. You look at prediction market volume, it's at all-time highs. So a lot of elements in the crypto ecosystem, the fundamentals have bottomed, are moving up, and I think that shows great momentum for when we do turn this leaf and move into the next bull market. I think it's setting up the foundation because there is all of this momentum independent of price. And I agree with you, that drives a narrative to more revenue-driven assets. Hyperliquid, as we mentioned, has done well because of that. But I think we can expect that moving forward. If we look at what these drivers are over the longer term, tokenization is a 600 trillion addressable market, and we're sitting at 33 billion in tokenized assets right now. And we know that all the big established players, from Coinbase to Robinhood to the NYC, are building tokenization platforms. We know the big established asset managers, Fidelity, BlackRock, Apollo, are all building the rails to bring their products and their assets on chain. So the financial plumbing is getting rebuilt, and that is a huge wave of momentum driving the asset class forward. Then on top of that, we have things like agentic commerce, which is just at the very early innings. Protocols like Near are building the rails for that to converge with AI. So I think there's a lot that is being built in this bear market that sets up a really strong foundation for when we come out of it and move into the next leg of the bull market.
Yeah, big shout out to Near, good friends of the show, doing incredible things in the AI world as well as, you know, as that breaks into the crypto world. Another big portion of this tokenization super cycle, the fundamentals, the convergence between, you know, TradFi and on-chain finance here is going to be the macro environment. This is a huge driver. And so obviously regulation is sort of part of the macro environment, and we're seeing progress on the Clarity Act. We'll maybe get in a little bit deeper into that. It's a big week this weekend, next week. We've got an FOMC meeting today, though. And so I'm curious what you expect from Kevin Warsh. Do you think he's going to raise rates? And how do you think the markets are going to react to this? And generally, what do you think about, you know, him, the lack of forward guidance, and the macro environment in general these days, and how you think crypto is going to react to this?
Yeah, I don't think he's going to raise rates today. Market seems to think likewise. Implied probabilities are 66% that they don't raise. So there is a 33% chance it could happen, but I don't think it'll be there because of what we just saw with the latest print in inflation coming down a bit. So I think that gives them the leeway to stay put. I think what will be more important is to see any changes in the policy statement from the Fed or the voting pattern from the FOMC members. I think that'll give more guidance to the market about what the policy outlook is for the Fed, especially now that they're giving less outward guidance, as you were mentioning. I think this is a new era of the Fed. Kevin Warsh has said he's going to be less vocal, so less, hand-holding to the market, which I think may bring more volatility, but I think it may allow the fundamental data to drive the narrative more, the policy more. So I think we'll stay put today. We'll see what happens later on. We're seeing volatility with oil prices now with the recent strikes again in Iran. So we'll have to see where inflation goes. But I think the fundamental backdrop is that AI is a huge productivity driver.
Yeah.
That is a deflationary trend. And so I think outside of these geopolitical skirmishes, which are driving oil and energy prices up and down, I think over the longer term, we may have a deflationary trend coming.
It's an exciting new era for the Fed because it felt like we had gotten so backwards. It felt like everyone knew what the FOMC decision was going to be, and we ended up reacting negatively to good data because it would signal that they were going to not cut rates. They would maybe raise rates, and then bad data, right? The economy's in a worse position. The market would go up because we would be anticipating this reactionary, action from the Fed, and it just felt very backwards from the data that we were seeing. And so I like the point that you're making. We're going to be more influenced by the data rather than kind of playing this like guessing game of what the Fed is going to do. It feels like the Fed meeting matters again, whereas before we knew exactly what they were going to do and we were just reacting accordingly. I've got sort of an off-the-wall question for you just as we're on this topic, because Kevin Warsh seems like, he's a younger guy than Jerome Powell. He seems like he's doing things a little bit differently. He's got these councils out there that are sort of researching these things. And he's also made, some crypto investments in his day. Do you think there's a chance the Fed could put Bitcoin on its balance sheet?
That is a very good question. I think for the biggest central bank in the world, they have to be very cautious in how they move. I think they are studying it and taking it seriously. So I don't discount it. Whether that could happen this year or I think more likely in a couple of years. I think they probably want to see Bitcoin continue to mature. And what we've seen in the pattern of Bitcoin, similar to gold, is that as it went from a nascent speculative asset to an established store of value, and from mainly retail-driven trading to institutional adoption, you saw in both cases the volatility come down over time. And we've seen that with Bitcoin. So they might want to see Bitcoin's volatility come down even further than where it is today before they want to include something like that. But I wouldn't discount it. Okay,
awesome. Juan, I really appreciate you coming on, man. I'm just, we're steady as it goes, trucking through. Any other catalyst that you see on the horizon for this market, whether that's these perp venues, whether that's, these stablecoin businesses in the equities world, in the token world, what are some of the catalysts? We talk a lot about macro, we talk a lot about regulation with clarity, and then there's sort of the technical indicators that we're watching. Obviously, we've got these big tokenization, super cycles, RWAs, all of these things. How do you maintain a patient perspective, and what catalysts are you looking forward to on the horizon?
Yeah, I think touching on clarity, since it's topical this week, we have John Thune, the Senate leader, put the Clarity Act on the back burner to be filed for a cloture motion this week because to prioritize the Russian Iran sanctions package. So we'll have to see if late this week or early next week that motion to go to cloture gets filed. If that happens, then we would see a vote on that to then put it to a formal vote in the Senate. All that needs to happen before the end of next week when they go out to recess. Yeah. So if that doesn't happen within this week, then it's out of the question until the elections in November, the midterm elections. So I think really, of course, it would be better if the Clarity Act passed, but more importantly, markets hate uncertainty. And so I think we need a decision one way or the other so that we can continue to move forward. Yeah. I think we need closure on that. And just today, Chair Atkins from the SEC came out saying that he's ready, the SEC is ready to act in making rules. Yeah. So independent of what happens with the Clarity Act in the very short term, there's rulemaking that's happening. That's going to continue to move the industry forward. I think that's positive. I think that's going to be a slow-moving positive train. I think something people may be underestimating is that the Genius Act, which regulates stablecoins, is actually coming. It got passed last year, but it's coming into effect at the beginning of this coming year, 2027. So I think that's really going to catalyze much more adoption of stablecoins, which will bring more capital into the space. So I think that may help revive trading volumes and use case and adoption of crypto applications. Yep. So I think that can be a driver coming into next year as that takes hold.
Awesome. Juan, thank you so much, man. I really appreciate these conversations with guys such as yourself that have a unique vantage point in the market. And we get a lot of guys on here. They like to talk their own book. They have a project that they work on day to day, and they like to talk about it. No shame in that. But you guys have a very general, high level perspective on the market as a whole, and I appreciate all your takes. And the stream, they like your jacket.
Oh, nice. Vintage, vintage shopping.
I love it. Awesome. Juan, thanks for coming on, man.
Thank you,
Love
Robbie.
to have you on
Pleasure.
again soon. Guys, that was our first guest, live from the Aria Hotel, the Rare Evo conference. We're going to do a quick standby, and we'll bring up our next guest, who is Denis from XRPL. See you guys soon. Be right back.
Yo, what's going on, guys? This is Itan with The Rollup. We're going to be patrolling the streets of New York City, getting answers to the questions that you guys have most. What are people trading? What are people investing in? How much do people actually budget? We're gonna have people from all over, all different investment classes, people who are dead broke, people who are dead whales, people who are just loaded. There won't be a mayor or politician to stop us on the streets. We're going to go everywhere, all 5 boroughs. We're taking over the 212.
We get deep, you know we get deep. We get deep. We get deep. We get deep hard. You know we get deep.
Money, power, and
Welcome back, ladies and gentlemen, from the Aria Hotel at the Rare Evo conference in Las Vegas. We've got Denis, the CTO of the XRP Ledger Foundation. They've got quite a presence around here at the conference. This is our next guest. Denis leads engineering, direction, protocol contribution, and standards development at the XRP Ledger Foundation. Previously spent years at XRPL Labs building core infrastructure and tooling. We don't frequently have XRP representatives on the show, and so I'm excited to hear because you guys have been around a long time. And typically these ecosystems they go in a million different directions.
Right.
And so I'm excited to hear what XRP has been up to because I see a lot, and I want to know more about what's happening underneath the surface.
Sure.
Because I think sometimes there is a perception that people have from, and I think it's inside, I think it's outside, and so hopefully we can clarify some misconceptions here today. Dennis, welcome to the show.
Thank you.
First time on.
Yeah.
Welcome to Vegas. And man, how are you feeling at the conference?
I'm doing well. Thank you for having me. I'm excited to be here. I've never been to the Rare Evo before. This is my first time, but
yeah.
I love what I'm seeing here, and I'm excited.
Very cool. So I'm first curious, because it's your first time on the show, tell us a little bit about how you found the space.
Sure.
What ended up speaking to you about Ripple and about XRPL, why you decided to join them, and ultimately we'll get into more of what you guys got going on.
So I started in Ethereum, actually. I have a finance background, but I got really immersed in Ethereum, and I quit my job and sort of started developing smart contracts.
And what time frame is this?
2016,
okay,
right?
Cool,
so around
cool.
2016. Yeah. And I was building a wallet on a mobile phone, and I had Ethereum on there, and a friend of mine came up to me and said, why don't you put XRP? Why don't you try it out? And I had sort of my own bias at the time against it, but I put it on the phone. I was able to transfer some value immediately, and I saw the 3-second finality was really, really interesting at the time, right? Coming from Ethereum, where it took a long time, to the XRP, where it was really fast, and you kind of had to give up smart contracts for these protocol level implementations. And I really liked it, and I thought for some of my business cases that I was looking into, I could do it without the smart contracts.
Okay.
So.
Were you primarily looking at payments? Is that why you didn't need too much smart contract?
Yeah,
okay.
100%.
And what were some of the you mentioned, you were in the Ethereum ecosystem, you had some biases, towards the protocol itself until you actually tried it. Just curious, what were those biases that ultimately became that you overcome and went into the ecosystem?
I think the number one was no smart contracts, right?
Okay.
And so when I got into it, what was really cool is compiling that binary, shipping it onto a consensus mechanism where everything comes to the same conclusion at the same time, and then you could write this smart contract and execute it. And XRPL just didn't have that, right? And it wasn't until I really started looking into it that it could do my use case, which was just something simple with payments. And so I didn't need the smart contracts, but that 3-second finality was able to really, I felt like would put me ahead or put other use cases ahead.
And so this is almost a decade ago at this point. Right. And so a lot has changed both in the Ethereum ecosystem as well as in I'm sure in the XRP Foundation ledger, that ecosystem as well. Talk us through the evolution. There was no smart contracts to begin with, and very, very purpose built for payments. What has the evolution been like on the technological front? And then we'll talk about the adoption as well.
So 2020 we started adding NFTs, and then right after that I think AMM, so some more payment protocol level stuff. And now one of the most recent one is we have batch payments where we can batch 8 transactions together. We also have lending, which is a really cool new primitive, which will allow you to facilitate a loan through the ledger specifically. And so I think the philosophy is more like, let's build what we need or what clients we have and build for them and not do smart contracts. But we do have amendments out there, proposals for smart contracts. So it's on like a testnet version chain where you can execute smart contracts. And so we're looking at, what does that look like on the ledger in the future?
And the way that these technological innovations work on the Ripple ledger, is it that it sounds like they're baked directly into the protocol. Right. And so when you say that there's lending and there's some AMMs, is there like one Ripple ledger AMM, and when you go to make a transaction, you use that AMM, or facilitate a loan, you use that lending market, or and they're baked directly into the protocol? Is that the way it works?
The first part's right. It's baked directly into the protocol. When we think of a smart contract, that's code that gets compiled in and then uploaded to the ledger. I love to say that kind of the XRPL is one big smart contract, right? Okay. So that lending protocol was written into the ledger as code, C++ code, and then everyone's running the same binary, so everyone comes to the same conclusion. So it's sort of a smart feature. It's they call it something different, but that's basically how it goes. But in terms of like one lending, no. Basically, what you do is anyone can create a lending pool.
Yeah, so it is permissionless.
It is a levels of permissionless. Yeah. So anyone can create a lending pool. I can put money into that lending pool, and then there's a lending broker who sort of facilitates whether or not they're going to take this lending or that, or sorry, this loan or that loan. So it is permissionless. It's not one lending pool. There's multiple.
Yeah.
So,
and you know, it's funny. I got into the industry around a similar time, 2016. You know, first with Bitcoin, then with Ethereum. Sort of, you know, went down the rabbit hole as well. And it's fascinating the way that this industry has evolved. Just look in the recent, let's say, year to year and a half. Hyperliquid has taken the world by storm.
Yeah.
Hyperliquid, you know, you can call it a few different things. Some people call it an L1, some people call it an Arbitrum L3. The reality is there's like a couple, maybe like a half a dozen of validators. It's like rather centralized in the grand scheme of things. And people are okay with that because, you know, it provides a valuable service and people love it and does a good job. There's good UX. And so, you know, it works. And we've given up a lot of the decentralization theater that existed for a long time in the industry in favor of, you know, reasonably decentralized protocols that provide a better user experience and ultimately a better product. And it sounds like the market, and it sounds like Ripple has been building with this in mind for a long time, and the market is maybe, the pendulum of the market is swinging back towards the less decentralized, more verticalized, better user experience side of the world. Is that a fair assessment?
Yeah, I 100% agree. I mean, I was talking to somebody last night, and it's like my parents cannot learn what a blockchain is. There's no reason for them to learn what a blockchain is. It's really hard. I feel like sometimes we kind of nerd it out a little too hard in crypto, and it's like, oh, you have to do this and you have to do that, and that wallet app I built, like you have to manage the gas token and also the other assets and then your yield pools, and it's just too hard to explain to somebody. Hyperliquid made that really simple. They made it easy to use, and I feel like as time progresses, it's going to get easier. So I don't, you know, they have a centralized claw, and you know, like you said, people, you know, really nerdy into it may not like that, but the average user who wants to get yield or wants to invest in futures, they don't really care.
There was a fantastic tweet. I think it was our friend Frank Chaparro, or maybe it was CoinDesk, that put out this Morgan Stanley ETF, and I think it was Solana and ETH, if I'm not mistaken. But the point remains, regardless of the ecosystem, that they're now passing back all of the staking rewards to the end user. And the point of the tweet was that, look, these end users, they're retail, but sophisticated retail users. They're on Morgan Stanley, and they care about yield. And the fact that they can get yield, they don't really nerd out on where it comes from. They're not looking at staking rewards and this and that and exit queue and all these things. They're just looking, I got a 3% yield on this asset that I want exposure to anyway. And the fact that it's getting to me, that's more of this asset that I wouldn't otherwise have. And they don't nerd out on all the details. So I think, to your point, you know, there's value created here, and sometimes it doesn't really. For some people, it matters how that happens underneath the surface. For others, they just want that value.
I agree.
And so, tell us a little bit more about the adoption here, the go-to-market strategy that Ripple has done with payments. I heard Ripple was like doing very fascinating things in Japan, and so I think sometimes, you know, if you're in the Ripple community, you get to understand this, but on the outside looking in, they, you know, just haven't really broken through. In terms of the people that are on the outside of the Ripple community, just haven't looked deep enough to understand the type of progress and the adoption that's happening here. But we've got the guy. You know, you're the man. So I want to help our community understand what has been happening underneath the scene. You know, what kind of adoption has been taking place on the XRP ledger.
And I think it's probably good to differentiate the two, right? Ripple is the biggest client on the XRP ledger, so we can talk about what their interests are. They are really heavily institutional interests, right? They bought that broker dealer. They're implementing some of that stuff. I think they're really heavy into lending. A new thing that we have is actually account delegation. So when you issue an asset, you have like a hot wallet and a cold wallet, and if you need to authorize somebody to hold that asset, that issuing wallet has to be touched. And and you don't really want to open that up continuously signing transaction. So with account delegation, you can delegate that ability to authorize somebody else with another sort of hot account and use it that way. I think there's some other things that Ripple's interested in looking towards. I would say probably revolves around the broker-dealer stuff. It's not really something I can express here.
Sure. Okay.
But one thing that I can express that they're focusing on is less about adoption and more a little bit AI.
Okay.
We saw recently we had some issues with some of our amendments, and there was an AI company that came out and did an audit, a review of one of our amendments before going live and found an issue. And that sparked something really cool within Ripple and the XRPLF, which was like a big budget immediately for all developers to sort of hammer the source code with Claude and GPT and find these issues. And they created a red team, and we had hundreds of issues that we solved, not hundreds of high, just a few high critical. But I really think it put us ahead of some of the other blockchains, because we come out and see that, oh, this smart contract was exploited with AI, and it's like, I'm so happy for us to be able to get ahead a little bit in that, and they have Fable access, and so that's something I really think doesn't really drive adoption, but it drives the sustainability of the chain, and keeps us, where we don't have that negative PR news.
Yeah, and I mean, another blockchain that did something here, got caught a little bit behind the 8 ball, but ultimately rectified it with Zcash.
Yeah, exactly.
They put Mythos on this thing, and they found this bug, right? And they were public about it. They said, look, there was a bug. We don't think there was any infinite mint, bug on Zcash. We don't think, but we're going to implement the solution to ultimately tell us whether or not this happened. And I think the new Ironwood pool was just rolled out over the last couple of days, and moving in the right direction. So, yeah, it was pretty disconcerting to see a lot of those smart contract exploits. Presumably because a lot of these AI models were allowing them to find those things, but now the teams have been adopting or using these AI models for good rather than the malicious sense. So that has been really, really great to see. From everything that I'm hearing, and I appreciate all of the insights on the XRP ledger here and the separation between XRP the client. There's another blockchain that I sort of want to draw a comparison to, because it takes an institutional strategy as well, and I'm just curious about your thoughts on it. So Canton.
Right.
Okay, so maybe you've heard this before. So Canton's obviously got this institutional partner program, super validators, issuing a lot of incentives, but it sounds like Ripple and Canton are taking a similar approach, trying to win the institutional market. How do you feel about the Canton blockchain? Do you think they're doing things the right way? And are Canton and Ripple competing for the same customer segment?
Okay. So first, I like Canton. I looked into them early. I am sort of a permissioned blockchain kind of guy. I think, some of these use cases, they're probably going to lean towards permission, and that probably works for like broker dealers and maybe some other use cases out there. So I always kept Canton on my radar. I went to their docs. I really like their docs. I like how they actually had some smart contracts laid out in YAML form, which is like this really good, easy standard to like write these smart contracts in. I love that they're ran in a trusted environment and you have attestations. Again, it's permission. You have to like that. I think if we talk permission, I think Ripple sits in the middle with a UNL, so it's not like fully permissionless like Ethereum or Bitcoin. There is a UNL, and so it sits right in between that with permission.
What is UNL?
UNL is a unique node list, and it's basically a set of validators who are trusted for the network. And so we put out a UNL list, and Ripple puts out a UNL list, and they can differ a little bit, but they have to really kind of be the same. And that's basically your trusted validator set. So we don't trust all of the validators. We just trust these 35 to continue to make forward progress. And so do I think Ripple and Canton are competing? I think in some categories they are, in some spaces. Like I said, institution, I feel like broker dealers really want for like settlement or clearinghouse, trade desk kind of thing. I feel like that's a permission area maybe. And so I think Canton attacks that well. I don't think Ripple has a focus on a full permissioned like solution for that. You can take that that Ripple source code and write a permission network, but I'm not sure that's their overall direction. I think they're focusing like lending on institutional stuff and really trying to integrate that broker dealer into the chain. Like what do we do over here that we can now do over here is kind of their focus.
Got it. Makes sense. So not necessarily competing, maybe on the institutional front, but there's a spectrum of permissionedness, and they fall on different sides of that spectrum. Makes a lot of sense. On the payments front as well, this is both an institutional conversation and one that's been present in the blockchain space for a long time. Had a friend of the show listen in on the Visa earnings call recently.
Okay.
You probably saw this open US dollar from Tempo. It was like a big consortium stablecoin, Robinhood, Visa, I think Microsoft, ton of people signed up for supporting this stablecoin and sort of putting it in the echelon of Circle's USDC and Tether's USDT. And so it seemed to just catapult itself to kind of that sort of space. And so the Visa initially signed up to support this stablecoin, but on the earnings call, someone asked, hey, how much are you really going to prioritize this stablecoin over others? And someone at Visa, I don't know if it's the CEO, but someone on the Visa earnings call said that they're not trying to pick winners here. They want to be a fair supporting layer to all their customers. And I think they want to encourage stablecoin settlement and stablecoin access to USDC, USDT, all the stablecoins for all of their customers. And so it was really like, pulling the reins back on prioritizing open US dollar as sort of this stablecoin. And so I'm curious how much you're looking at Visa, MasterCard, Discover as maybe we're not competing with Canton, maybe we're not competing with ETH on the blockchain format, but as we prioritize the payments use case, we're really targeting Visa, we're really targeting Discover.
Sure.
How much do you look at what they're doing on the stablecoin front as sort of insight into how Ripple might navigate the competitive landscape?
Sure, yeah. I think they're looking at all of them. I think they will have integrations with all of them. Like you said, like Visa, MasterCard are not playing favorites right now. They kind of just want to grab up market share as fast as they can. And if the XRP ledger has some of that market share, then they'll absolutely tap into it. I think Gemini just came out with a card for the XRP ledger where you can use it like that. They're also targeting Stripe. Another big one you asked, so for adoption, big push, not just with AI sort of security, but AI on-chain, right? I think we have T54, which is a new company that came out from an ex-Ripple employee to do agentic payments. And so in order to facilitate all of that, we do have to integrate with Stripe. We have to integrate with Google. And so they're definitely looking at it, and I would not be surprised if you saw, added to that list for MasterCard, Visa, et cetera, the XRP ledger. I think what's also interesting is it sort of comes from a wallet perspective as well. I know the number one wallet in the XRPL ecosystem is the Zaman wallet, and they've partnered with a company and built out a product to facilitate those payments. So it doesn't just have to be from Visa or MasterCard, right? You can get that merchant below, that bank merchant that can then issue a card.
Yeah.
So I think that's interesting.
Okay, fascinating. I mean, this is a use case that I know, Ripple has prioritized over the years since the beginning, right? And the lack of smart contracts. Really just one more question. It's sort of a two-parter. We had the Kwok brothers on the show.
Yeah, okay.
They threw out some astonishing numbers when it came to XRP price targets. We're in the middle of this revenue meta. It feels like that everyone is focused on buybacks of the token, funneling revenue back to token holders. Currently, what does the revenue landscape look like on XRP Ledger? How much value is being accrued, and how much value is flowing back to the token holders? Sure. And then taking those as inputs, what is your price target of the XRP token?
So I think we've struggled. The XRP ledger has struggled for a while to get yield bearing products, right? We don't have smart contracts, so we can't just deploy those things. The new lending protocol has within it what's called a single asset vault, which is basically a fund product. So you deposit in and you can withdraw out, and then the lending is sort of built on top of that. And there's more ideas to come later in the future to build on top of that single asset vault, to issue bonds and then make coupon payments kind of thing. And then there's a couple other ideas. So I think we're not quite there yet with yield generation. A lot of it ends up going off chain somewhere else, so like staking and then moving it off. But I think next couple of years we're really going to have that with this single asset vault and the ability for people to pool money together and then create a product to sort of earn interest on that, and that goes back to the pool.
And the idea is that that product would generate fees,
right?
And those fees would flow to the token and not the foundation.
Yeah, exactly. Well, they wouldn't flow back to the XRP token. They would flow back unless the XRP was the underlying asset, right? So when you deposit in, you can deposit in with USD or XRP. Mm-hmm. I think a lot more people would deposit in with USD and then earn value on that. But I think, when we think of in terms of like what raises the price of a token, I think the use case, the utility, the more people using it, I think that definitely helps. I also think that what is that? The tide raises all ships.
Right.
And I think, there's no way to look at something and be like, it's going to be up forever. Like, take a look at memory, right? Memory shot up and then it's coming back down again, right? So you just have, and it'll go back up again, right? So I think you just have to wait this one out. I think we're finally getting to the level where like actual institutions are integrating the software, and not from like a cryptocurrency, but a blockchain level. Like, how does a consensus mechanism where everything has to come to consensus, how can that work in our technology today? And the more we use that and the more it's implemented, whether or not it's even XRPL or it's a private blockchain, the more that's used and becomes mainstream is, I think, what raises everything.
Okay. And can you, and a number to go along with that?
A number. Right. Oh man, I might get in trouble, but I would say over the next at least 2 years, probably $5 to $6.
$5 to $6 XRP target over the next couple of years.
Yeah.
All right, that is much more reasonable. About 1/100th more reasonable of the number that we got from the Kwok brothers. Dennis, thanks. Didn't mean to put you on the spot there. Really appreciate you coming on and giving us a little bit more of an update on what's going on in the XRP ecosystem. Appreciate it.
Thank you.
Thanks so much. Guys, quick standby, and then we're going to be right back with our next guest. It is Todd Ault. He's been on the show before with our AI Supercycle segment for the show. Don't go anywhere. We'll be right back.
Yo, what's going on, guys? This is Itan with The Rollup. We're going to be patrolling the streets of New York City, getting answers to the questions that you guys have most. What are people trading? What are people investing in? How much do people actually budget? We're gonna have people from all over, all different investment classes, people who are dead broke, people who are dead whales, people who are just loaded. There won't be a mayor or politician to stop us on the streets. We're going to go everywhere, all 5 boroughs. We're taking over the 212.
We get deep, you know we get deep. We get deep, we get deep, we get deep hard. You know we get deep. We get deep, you know we get deep.
money, power, and money, power, and
Welcome back to AI Supercycle, our premier AI show, airing every single week, presented by Near. We cover the ins and outs of decentralized AI, privacy, and the future of this massive technology.
Near is the blockchain for AI and the execution of AI native apps. You can check out Near's latest AI product at near.ai. Now sit back, relax, and enjoy the show. We are back at the Rare Evo conference live in Vegas from the Aria Hotel. We've got our next guest here, Todd Ault III, seasoned American financier, entrepreneur of the Ault blockchain, as well as many other companies, and the 41st largest corporate holder of Bitcoin. The Fed just decided not to raise rates. So Todd and I are sitting here with a smile on our face.
Yeah,
We're both
I was
feeling
nervous.
good. Todd's feeling a lot better than I am, given that he's the 41st largest holder in the world, but we're both feeling good about the price of Bitcoin. Todd, man, it's not your first time. It's good to see you again, and welcome back.
Good to see you. Bitcoin for us is pristine capital, and we're part of a conglomerate. We own a data center in Michigan that we're funding, and we're using Bitcoin with really low cost of capital. You can borrow on Morpheo and other for as little as 5%, right? Yeah. So the stabilization of Bitcoin long term is going to be great for the asset in terms of pristine collateral, because you get that volatility to the upside, right? You get that vol, and you get the ability to borrow against this pristine asset. We continue to buy it every week. We reported 1,106 Bitcoin last week, which is the 41st largest owner. It's actually technically through a public company called Hyperscale, ironically GPUS, but Ault Capital Group is a subsidiary, which is a hybrid private equity firm. We're restructuring the companies as they separate. That's more on that later, but yeah.
GPUS is a great ticker. This is our AI segment. You guys are the AI blockchain here at the Rare Evo conference. And so GPUS, obviously GPUs, you guys are doing quite a bit with AI. Let's just talk about how you're using Bitcoin as pristine collateral. You mentioned on Morpho, you got some very reasonable borrowing rates. How does that work in with the agentic commerce idea of the Ault blockchain? Yeah. And what are you seeing out there in this space?
Yeah, they're really separate transactions. We're a company with a global defense business, a lending business, a hotel group. We own all kinds of assets, 618 employees in 5 countries. So it's a little difficult when it was all a conglomerate at one point, but if you separate the company, you got this Michigan data center with 340 megawatts, currently 20 critical for a neocloud provider that we're building out. We just announced a $1.3 billion contract that grows to $3 billion over time if it's fully executed with options for 52 megawatts. Only 17% of the data center for some $3 billion over 20 years. Really amazing what's happening in AI. And then on the Ault blockchain side, which we call our protocol, we're really a highly developed network for my background, which is TradFi. And I'm a believer to tokenize every asset you can and make a centralized place, which we call Ault Markets, which is a piece of software that allows you to trade all markets. The goal is for Ault Markets to allow you to trade everything, whether it's on our blockchain, where we're effectively going to be like think of like a Hyperliquid. I think a little faster, but we're not claiming that we're faster or not. Just equivalent to Hyperliquid, lighter, the Astras of the world. That's an offshore DEX that's been built on and integrated into the Ault blockchain that we sponsored. We helped fund it like a VC firm. Our blockchain's a little different, and that is we do not give out any coin. There was no ICO. We are all full emissions-based, based on mining, nodes, and verification. 1 million miners globally, I think 13 validators. And what we believe is what we're doing with robotics and others, we've just sort of discovered that agentically these things have to pay for each other, and that high-speed payment rail is going to be super important. We think it's going to be, we think EVM's the winner. Okay. Obviously people have to continue to get comfortable with bridging and how that will work, and sort of the dominant thought process of where stuff remains on what chain. But I think there's going to be a lot of room for what is going to be a global tokenization over the next 20 years. Yeah. I think there's a time where all assets trade that are meaningful on some form of DeFi, right? Yeah. And I'm we own a business called Universal DeFi, which is public on the New York Stock Exchange under the symbol UUU, and we continue to believe that DeFi and TradFi are going to converge, and ultimately the winners are going to make it ubiquitous, where you almost don't know that you're using DeFi, but you can centralize. So you're going to be 2 choices, right? You're going to centralize your own assets with someone else, like a Coinbase, or you're going to custodian your own assets and get comfortable that you can do that. Yeah. As that's a very uncomfortable topic for most people. They're nervous they're going to lose their crypto, right? But I think ultimately those tools work, and one of the ways that works is agentifying everything, where once you get comfortable depositing with the agent, and you can pay for things, and payments are accepted that way, that the networks become really valuable.
So we share in this thesis here on the show, we talk about this quite a bit, this convergence between TradFi and DeFi, the on-chain economy and the off-chain economy. All of this is headed in a very, very similar direction. You also mentioned how AI, this is a work in progress, and it's extremely early.
It's really early. People do not realize how way early we are. We see about these big numbers, 500 billion, 600 billion. This CapEx, we're so early, we have no idea.
And if we think about the trust that we're starting to put into these models, it's already at incredible levels, despite the beginning of this mega trend, right? We're using models for all sorts of research. We're using them to take all sorts of actions online. We're putting health information, private information, all sorts of information. We're trusting them with extremely important decisions in our private life, emotional decisions, physical decisions, health-wise, all over the place. Financial decisions as well is a very important and significant piece of that. As we start to trust AI more and more, it's only a matter of time before we trust AI with our money as our financial advisors. And I think you're in a position to benefit from this. And so as we start to approach this, you talked about tokenization, you talked about alt markets, ultimately all of this.
I can't help but go back to what you just said, right? There was a time where I was approached to invest $10 million in what would be today DoorDash.
Okay.
And I wouldn't do it. And it was a foolish mistake. And I'll explain to you why. And that is, there was a time when people were afraid to give their credit cards online. Now, I know you're young, but that didn't exist.
Yeah.
Like the whole thing with the internet was, why would I give them my credit card? I'm not going to put it in the system. I know that seems archaic today, but there literally was a time when my wife, others would not put their credit card online.
Yeah.
I think the same thing's going to happen with agentic AI, right? And there's an adoption curve that it's going to be normal for you to have your own wallet. It's going to be normal for you to fund and get a loan that way. I mean, we're doing crazy stuff right now with DeFi, where we're able to borrow millions of dollars in a vault for very low rates. So it's so exciting, the convergence of TradFi and DeFi. I can't even express to you how big of a deal I think this is going to be. The tokenization of stocks, the tokenizations of commodities, the tokenizations of collectibles, the tokenizations of loans. We are presently working on tokenizing all the loans that our lender puts out into the ecosystem. So this is just an amazing time. People have to look through this, look further, look 4 or 5 years ahead, and just plug your nose. It's going to be crazy.
And this tokenization, it's a super cycle. We're seeing it play out. There's this philosophical principle that knowledge wants to be free. I think the same applies to capital. Capital wants to be free, and it wants to be programmable and productive. And on a blockchain, when it's tokenized, it has that much more opportunity to do so.
I think in a world where you see media and you don't know what to question with AI, the most trustable thing is going to be code and programmability. One of the reasons why we've had so many audits of the Ault blockchain was we really want to be diligent on making sure all the holes are patched. I mean, we've almost beat ourselves to death with these audits. Like we audit the auditors. Like
with AI, that's what.
But you kind of have to do that, right?
Yeah.
And AI is helping that, right? So you have your sort of main audit you pay for, your sub audit you pay for, maybe another audit, and then you pay AI agents to audit that. So it's really powerful, but we do need to be in a position of trust. Like, blockchain is trust but verify. It's a Ronald Reagan concept, right? Which is, hey, we're going to trust the Russians, but we're going to verify. Blockchain makes that all possible. You can't hide, which is just wonderful.
And I think people are looking for that verifiability in the age of AI when a lot of these things are so unpredictable. I want to hone in on one piece of the business here, which is the data center in Michigan. Was this always a data center, or was this originally a Bitcoin mining operation now turned data center?
It was a copper plant for about 70 or 80 years that we bought 6-7 years ago, converted into Bitcoin mining, still mines Bitcoin today.
Oh, it still does, okay.
And that we, over time, it's funny, I thought we were really ahead of the curve. We really kind of messed it up. We were ahead. We had an opportunity to do a big deal there. We didn't do it. But now we've signed a deal with a neo cloud provider. And we're converting, and we're ultimately going to move our Bitcoin mining operations to where something's really competitive. But Bitcoin mining is not going to be our focus. Bitcoin treasury is a focus around the asset base of Ault Capital Group, which is a I would say, TradFi DeFi operating business that lends, invests, and does hybrid private equity. And then you have this pure play, which is our data center business, which will ultimately be Alliance Cloud Services, which provides AI, data center for. We have our own Neo Cloud. We have our. We also then allow, and we also rent to others too, like this Neo Cloud that basically took about 20 megawatts of critical that can go to 52. But yeah, it was a Bitcoin miner. And it still is, and it's migrating out of that.
Okay, and so, we've seen a lot of this. This has been a sort of a trend across the board as AI compute continues to be the bottleneck in significantly high demand from all of these frontier model companies. Compute is the limiting factor. And so we've seen mining companies pivot into being data centers so that they can provide that compute. But at the same time, Bitcoin has fallen a little bit in recent times. I mean, Fed not hiking rates is doing good things for us right now. But given that it's fallen, obviously you're familiar with the mechanism here. It becomes less profitable to mine. Miners leave the network. The difficulty adjustment adjusts lower, and it becomes easier to mine Bitcoin. And so what I'm hearing you say, as someone who's on the ground operating this business, despite the difficulty adjustment, despite it being easier to mine Bitcoin, it is still more profitable to turn that data center into an AI data center and not a Bitcoin
there's
miner.
Not even a question this minute. Not even, it's the numbers are not even debatable. Now, we're spending about $130 million of CapEx this year and next year on our data center. That number will ramp up as it goes to 340 megawatts, but then you're talking about billions of dollars in leases, right? Only 17% of the data center represents 20 billion over 20 years. So when you look at that number, you can't compete with Bitcoin. It's way, AI data centers are very profitable relative to demand. And the interesting thing is my partner and I, Will Horn, the CEO of Hyperscale Data, we're fighting off the fact that, we trade at an $80 million market cap. We have 71 million of Bitcoin. We have almost 350 million of assets. And we reported this morning we'll do $300 million in 2027. And on top of that, which is insanity. The market is, to me, insane. I don't think they got it right because I'm a buyer of it. I own a ton of the company. I have 56 million in preferred of our own parent company money in the company. We are going to start reporting EBITDA and we're going to give the forecast out on the 4th, which is August 4th. And with $300 million of revenue, and it's high margin revenue, about 150 million is high margin revenue. I do not understand what the market's doing. I have no idea why GPUS, other than the fact that we're aggressively building the data center. We have an ATM. I know that's a negative, but we're really, we're investing in something where the cash flow and the EBITDA is really going to explode. So I'm not really getting the market, but I'm confident that AI is going to go through cycles, but there's no way to put that genie back in the bottle. No way. We had offers for so much money for our data center, and they were, of course, obviously soft offers, a couple, LOIs and stuff like that. We turned them down with a belief that AI was going to be in demand, and we're winning there in that regard. And so only 17% of the data center was leased out with options for $3 billion. And it is so high margin. It's amazing. And I'll tell you right now, I don't know how the capital markets are going to play this out, but one thing I wanted to tell you that I'm seeing a lot of is we have 618 employees. AI is not eliminating jobs, not on our end. We have to hire like crazy. In fact, I will tell you right now, go on Instagram if you're looking for work in anywhere in crypto, if you're an engineer, if you're a salesperson for crypto, a salesperson for DeFi, if you're a person that is in customer service for financial services, AI is just making us hire more people. This is nonsense right now. These people that say you can just set it and forget it, that doesn't exist today. It may exist in the future, but right now I see the next 5 years of job creation from AI. I think the narrative, it's so dangerous. I sat with someone in Congress, high-level congressman, very high level, been there for years, told me flat out, I'm partners with the Chinese. I've got no issue with the Chinese. But he flat out told me, that people are being funded to be negative on data centers in America. They're spending money because it's an arms race. The other governments are basically attacking our citizens and getting them to protest. Stop using your Apple phone then. I don't know what you're protesting data centers for. Our data center does not use local water. We recycle it. We do not use local power. We meet all noise ordinance, and we still get protested against. It makes no sense. Americans are the only people that protest against themselves. It makes absolutely no sense.
The last one I heard was that AI data centers are replacing our farmland. We have to save the farmland because the AI data centers are eating up all the farmland. I want a farm. I've said on the show before, I want a farm. I want a bunch of acres.
I don't know if you have to beat this. I don't know if you have to beat this. It's total horseshit. This place we bought, which was 35 and a half acres, now we own 88 acres. It was completely unused. They were parking RVs.
Yeah.
They had 30 megawatts of power. They were parking RVs in this 617,000 square foot data center. We've been mining there for 5 years, and now we have people in Michigan demanding the noise go down. It's been there for 5 years. If anyone who's protesting, who's acting now somehow that they're self-righteous about it, oh, listen to how bad the noise is. It's all political.
It's outrageous.
It's below. And by the way, we love that city.
Yeah.
We love the people there. We have no issue with them. But for them to argue that we're bad citizens, we've been there for 5 years mining. It's a made-up concept.
Someone did an analysis. I think it represents 1/3 of the farmland in the U.S. So we've got a long way to go.
Data centers are not taking away farmland. That warehouse, that copper plant was unused. We're going to bring 500 jobs because we have Robotics Center of Excellence there too, with a business we own called Omnipresent. I wish people would just take a step back, allow yourself, whether you're Democrat, Republican, liberal, conservative, get rid of the genre of this.
Yeah.
Take a step back and ask yourself, are you better than you were 5 years ago, 10 years ago, 15 years ago? You got to remember, less than 100 years ago, we didn't even have running water in houses. This is like, we got to walk this back a little bit. AI has completely changed the way I do business, completely changed it. And I am a more productive chairman. I'm more productive with my staff. We are so bullish on AI. The volatility of the market's not going to matter. AI is going to change the game.
Yeah. Well, we've seen you in Miami. We've seen you all across the docket. You're out here. You're more vocal, and you're representing, the company as a chairman should be. So kudos to you. I mean, there are very real things that I want to call out of this outrageousness. Something you mentioned, which is that, you've got partners in China and a lot of respect for the people, but you mentioned that there's propaganda money that's being put into our country by the foreign adversaries to try to
NGOs,
change the narrative and make us fight ourselves, slow our progress.
No question.
How do you know, can you just give us, because I think, there's a lot of people that are affected by the narratives and affected by the propaganda, and then you've got sort of I'm going to put them in quotes because I don't think they're necessarily, they're conspiracy theorists until they're proven true.
Yeah.
How do you know this to be true?
I literally, if you look at my Instagram, you'll see that I'm very in touch with the political community, and I have a couple friends of mine that are good friends, that are in Congress, that are in committees that are high level, that have just flat out told me it's the case. They have evidence of it. And I have to believe that they're right. And I would just say to you that, I had lunch with dinner with the vice president, I think 2 months ago.
JD Vance.
JD Vance. I was with Trump. I'm losing times and dates. I'm getting older. I'm 56 now, going to be 57. And I didn't hear this from Trump, but I'm not going to comment on what JD told me, but high-level congressmen and congresspeople, women, have told me flat out that they have evidence of this. But this one particular congressman who's so high-ranking and been there for such a long time, I absolutely believe this is to be the case. And I think there's evidence that makes sense that, it will slow the U.S. down. I don't know what the reason would be for, other than maybe someone wants to win the AI race, which I don't think that one government can win that race. I think ultimately, as we talk about the U.S. dominating that space from a capital perspective, I mean to be cheesy, but I think it's a humanity question. Humanity deserves AI. This is the point of moving us forward in whatever game we're playing, right? We're here for a short time. We're all going to benefit from it. And if you let all the noise go away, this is a humanitarian thing. It is, I can't tell you, from a guy who is dyslexic, how much AI means to me. From a guy who had trouble in school writing and comprehension, how over time AI has come. I'm a lot better at than I used to be before AI, obviously, but it has changed the game and the narrative of response and research, and that's a humanitarian thing. That literally will live. I think Elon Musk is right, and there's going to be a time and place where productivity is going to take over, and we're going to change the way we think about money. I don't know when that is, by the way.
Wow.
He's a big thinker, right?
Yeah, absolutely.
I think when you look at agentic AI and you put in physical AI robotics,
yes,
and you put in digital AI, and then financial infrastructure and the ability to borrow, you're gonna squeeze a lot of margins out of the system, especially in banking, and you're gonna see that ramp through the economy in terms of productivity.
This is one thing that when people ask on this show about a time horizon in terms of decades, right? We've got our tokenization theses and our DeFi theses on a bit of a shorter timeline, but when I think, 15, 20 years out, robotics is something that continuously comes to mind, especially now that we've got the mind, we've got the intelligence that can be inserted into this robotics, physical form. Now that we have the arguably harder part, it's just about pumping out as many of these physical forms as possible. That's just an engineering manufacturing question. Is this a focus for the Ault blockchain? You mentioned that a very fast, and you think it's EVM, but open-minded. Blockchain is the right infrastructure in order for these forms to be transacting with one another. Is this a focus for the Ault blockchain going forward?
We are focused on the idea of tokenizing all real-world assets and non-real-world assets, making them highly available to trade 24 hours a day, 7 days a week, 365 days a year, and making payment processing so fast and so easy that global trade is effective, that FX is all the idea of any transformation of digital where you're going to use anything to pay anything is agentified and has high speed with trust, with security, right? Yeah. And you're going to get that by adoption. It depends on the numbers you use, but if 3% of the world has ever been in crypto, of any form of crypto, and a little bit, maybe less than that for Bitcoin, there's so much room to go, right? If you think about tokenizing hundreds of trillions of dollars of assets ultimately, and making them, formation of capital is going to be the biggest deal, right? It wants
to be free,
If you look in Africa, I've been there multiple times. In Africa and other parts of the world, when I was there in 2018, I think it was 18 or 19, most of the people I spoke to have never heard of Bitcoin. And now we are 6-7 years later, they're all using some form of DeFi in their wallet for top-up services to get paid in this way. And I think that all that's going to converge. And you see that happening with the commercial banks, with the Visas, the MasterCards, American Expresses. Traditional banking and the way it's done, reserve banking, I'm not going to say it's going to go away, but reserve banking is going to be challenged by DeFi banking. That's my opinion, right? Yeah. Straight out reserve banking and DeFi bank. I mean, when you think about us being transparent, here's how much Bitcoin we have, here's the address, it's not debatable, here's what we use against it, here's our rate. It's the greatest thing in terms of transparency.
Yeah, and we've long said on the show that it is the most powerful tool for human coordination, and that means trust, it means legitimacy, it means the verifiability, and it means all the financial value that's incorporated into this blockchain. I want to close on this and just make sure that I got these numbers right. $300 million of revenue, the data center's at 17% capacity right now, and 17% could generate $3 billion.
Over 20 years.
Over 20 years. But you guys are trading at was it $85 million market cap?
Yeah, so let me be clear here, because obviously we're a public company. So we're publicly traded on the New York Stock Exchange American. Yeah. We've been around for 26 years. It has a lot of businesses inside of it.
Right,
so I ultimately offer to shareholders that I realize they think it's confusing. It is a conglomerate, but its core business is the data center in Michigan. That data center has 30 megawatts of power right now. 20 megawatts of critical has been already leased out to a neocloud provider in California. Fast forward to the fact that they have an option to go up to 52 megawatts. That would be 17% of the data center, $3 billion over 20 years if they exercise all their options, which means we have 83% to go. We just bought another approximately 50 acres of land around the facility. That will be on its way. That's going to be an asset generating a lot of free cash flow, a lot of EBITDA. Inside the business is a bunch of other businesses, mainly a hybrid private equity firm that owns things like cranes, hotels, licensed lenders.
You mentioned this.
It has 500,000 nodes on the Ault blockchain. It owns a part of Universal DeFi through UU, a very big conglomerate, small company. Asset base about 370 million. Cash equivalents, restricted cash, about 100 million, 71 million of that is Bitcoin. And of course, it has an ATM. I think that's the negative that people don't like. But that's going to buy Bitcoin and fund the data center. We do have options now to borrow against our Bitcoin at really low rates. It is, in my opinion, it's very inexpensive. I'm not soliciting the stock. I own a preferred in the company worth 56 million. I have the right to put another 100 million in. I'm very bullish on the company and Ault Capital Group, which is inside there. I'm super bullish on blockchain, which is not reflective of the revenue. We this morning forecasted we believe more than 300 million for 27 in revenue. But when you look at the asset mix of where that revenue is coming from, it's coming from AI data center, it's coming from the blockchain, it's coming from software, and that revenue is higher margin, a lot higher margin. And so we're gonna put out our EBITDA forecast on March 4th, which is next Tuesday, and we're really a big believers in what's happening with AI and the blockchain. The blockchain, the protocol of blockchain. I travel around the world. I've been around the world 3 times in the last year. I met you in a couple different places. Yeah. Nobody knows yet. It's all, as much as you see on your feed, other people's feeds are not that feed.
Yeah.
And nobody understands this yet. I think we're in the first inning.
Yeah.
I really do.
Yeah. Well, Todd, really appreciate you stopping by again. I mean, it's great to see you again. I'm looking forward to the next conference already, and I appreciate your long-term time horizon and your unique vantage point, given that you've got a view on so many different facets of the business. We're going to get Ault on here.
I love the roll-up. I love it. When I first met you guys, I started watching your guys' podcast, and I thought, it's really informative. It's really one of the best ones out there. So I've just become a big fan. You know, I met you. I thought I met you in Hong Kong. You say that's not the case.
Miami.
I don't. You're saying it's Miami.
We're doing this
whatever.
predictive past tense now, where next time it's going to be Hong Kong.
Exactly. Yeah, we're going to be at Token in Singapore. We're going to be in Hong Kong. We're going to be everywhere because the Ault blockchain is going to be in 172 countries. We're going to go visit, as best we can, every single country and proselytize the idea of decentralization, about what's going to happen around DeFi and your ability to move money around. And what's great about Universal DeFi and its new tokenization platform is you can tokenize on multiple platforms. We just want people to be in the EVM networks out there. It's an amazing growth opportunity. And Hyperliquid's done an amazing job, but I will tell you, we're tokenizing all forms of commodities for spot, with the Wyoming Reserve, and there's just so much happening. Imagine the number of assets, the number of public companies, the number of private companies, the number of loans. Imagine the scale that's going to happen in securitization and tokenization.
Todd, man, thank you for reminding us that we're still early.
Appreciate it.
Really appreciate you taking some time with us.
It's funny, I say this to people who look at hyperscale. I've been at this for 10 years. I tried to do a blockchain with my partner, Joe, 10 years ago, and we were told, hey, you're going to probably get in trouble with this one. Now it's legal. It's done the right way. We've got great legal behind it. We didn't do an ICO. We do an emission over 10 years. I'm super proud of what we're doing, despite the stock price.
Yeah, it's in such a unique position, given that it's at the convergence of so many mega trends that are still playing out right before our eyes. So
I beg you guys, consult your financial advisor. It's not a solicitation of my stock. I'm just telling you the way I see this. Please be careful.
GPUS, right? On the New York Stock Exchange?
On the New York American, Stock, I think, is like around 12 cents.
Yeah,
it's insanity.
I was just looking
it's
it up.
Total insanity, in my opinion. That's just my opinion.
11.68.
Yeah, it's completely insane. This morning we announced 300 million of revenue for next year, and it's down. That tells you how insane it is.
Yeah.
I don't want to reverse it. We do have a 5-for-1 approved. I don't want to. I'm doing everything I can to fight that off.
Okay.
But we have not made that decision yet. We're going to do everything we can to get people to understand there's value here. We're putting out our EBITDA number. Listen, anybody who can think about this, why would I be putting out EBITDA numbers on Tuesday? Why would I be doing that? I mean, come on.
You guys heard it here first. Only on the
by the way,
roll-up.
You did hear it here first.
Yes, Todd.
Thanks,
thank
brother.
you so
Thanks,
much,
brother.
man. I always appreciate it.
Yeah.
Guys, we'll be right back. FOMC meeting happening right now. Guys, don't go anywhere.
Thank you.
Yo, what's going on, guys? This is Itan with The Rollup. We're going to be patrolling the streets of New York City, getting answers to the questions that you guys have most. What are people trading? What are people investing in? How much do people actually budget? We're gonna have people from all over, all different investment classes, people who are dead broke, people who are dead whales, people who are just loaded. There won't be a mayor or politician to stop us on the streets. We're going to go everywhere, all 5 boroughs. We're taking over the 212.
We get deep, you know we get deep. We get deep, we get deep, we get deep, hot. You know we get deep. We get deep, you know we get deep. We get deep, hot. We get deep, you know we get deep.
Money, power, and money, power, and deep, you know we get deep.
you'll have to
Fed's rate
eventually
unchanged.
100 basis points below most Taylor rule estimates. You're
See,
hitting your
what
employment
is-
mandate, inflation stays high. Why should rates not be higher today?
There's a lot of so rates are higher today than they were 42 days ago. Markets have made decisions because we step back in part from trying
All right, we're
to
up across the
influence
board, up
those.
above 64.
Market judgments have moved up on what nominal rates are across the Treasury curve. That doesn't mean we take them as by dictation, but we're observing them. So I think it's a mischaracterization to say that markets haven't reacted because we didn't move today. Markets are reacting in real time. In the period ahead, we've got important decisions to make about the policy rate. Markets in the intervening period, I think, have quite a bit of decisions to make. I'll see if I can put it this way. Monetary policy matters not just by what we say or even what we do. Monetary policy matters by how it affects the real economy. And these prices that we see in financial markets is one of the many ways in which it affects the real economy. We'll be continuing to watch that market information, see how it responds to incoming events, and that can help inform our decision making when we meet in 7 or 8 weeks.
How would you characterize in the family fight the last couple of days of you and the other 8 members who wanted to hold? Was that a strong conviction or was that a hair trigger close call on holding versus tightening?
Well, I think the vote was 9-3. The broader discussion to my ear over the course of the last days showed a lot of agreement on the hard questions. The 4 questions I raised at the outset about what's really happening in the economy with the shocks and absent the shocks. What are our tools and our capabilities? What's the effect on prices on output? I heard a lot of commonality on the questions. Were there different leans on the answers? You bet there was. So could people come to different conclusions? Absolutely. But my own judgment is this is a period of watchful thinking, not watchful waiting. And I think the score on that vote was unanimous.
Thank you, Colby Smith with the New York Times. You've mentioned that looking at the Fed's policy tools is one element of a 3-pronged strategy to address the inflation problem. So I'm curious how you view the effectiveness of those tools. If inflation is too high and not coming down, is the best remedy to raise interest rates?
So that was the discussion in the last 2 days. Is that the dominant remedy? If inflation continues to be elevated through the forecast period, interest rates could well be part of that solution. But I wouldn't say it's in isolation. I tried to describe in my remarks today a point that I made to the oversight committees a couple of weeks ago. I think there was a misimpression by some in financial markets, by some households and businesses, that central bankers like me, we set a 2% inflation target, but maybe we were more tolerable of a somewhat higher inflation target. In economics, we'd call that the revealed preference. And so might it have been rational for people to think, well, their inflation target's somewhat higher. What I heard in the last 2 days, what I've heard in 8.5 weeks is no. We will deliver the 2% inflation target. That is the committee's definition of price stability. So one way, absent the tools that you reference, to ensure that we get there is ensure that expectations are centered around the right number. And I think we've made some progress on that. I am not suggesting we're done on that. It's worth reiterating. And ultimately, the business we're in, Colby, is performance. We are going to be judged by how we perform. And that's what we intend to do. The inflation target, making clear expectations is one part of it. Making sure we demonstrate we're responsible for it, we're not blaming as another. And our policy tools, like you referenced, is the third and equally consequential part.
How are you factoring the fact that a large portion of the inflation overshoot is being caused by supply shocks, as it's mentioned again in the statement? Does that blunt the effectiveness of rate hikes in your view?
First, on the premise of your question, it was almost as if you were listening to our discussion in the last day and a half. A lot of our focus was on trying to understand and identify underlying inflation dynamics amid shocks. We take these shocks seriously. There have been a series of them that have been hitting this economy. We're not looking through them and saying, oh, they don't matter. But we're trying to understand is to what extent are these shocks broadening in their effects, broadening in their impact on prices that are quite far removed from it. Our goal is to have growth that is broadening and inflation that is becoming more limited, more circumscribed. I'll be the first to admit the shocks make this job and this policy conjuncture a little tougher, but that's among the chief questions we've asked ourselves. And around the room, people have different views on it. I tend to think in the coming months we're going to refine that view and have a better judgment, and we're going to have market prices trying to help inform it too.
I think they're going to be pushing towards a true inflation number.
I guess I want
trying to get
drill
that down
maybe a
to
little bit.
2%.
What specifically, in your mind, would be the argument then for a pause today?
So I wouldn't characterize what we did as anything like a pause. I would characterize what we did as a rigorous review of the economic situation. I would characterize what we did as a review of the big hard questions, and I'd characterize it as a view of what our own homework is to try to resolve those questions in the period ahead. If you were to try to force a description that this was a pause, I would say financial market prices would take the other side of that. Financial market prices in this intermeeting period, they didn't pause, they reacted to the inflation data in one direction, strong economic growth in the other direction, and nominal and real rates went up. Did the Fed take an explicit change in its policy rate today? No, but I think that's the beginning of the story, not the end of the story.
And if I could, I did want to ask, not forward guidance, but looking forward. Traditionally, a Federal Reserve chairman uses the Jackson Hole Summit as a sort of a reset of monetary policy. How do you look at the speech that you're going to make in August?
I look at it like a blank piece of paper right now. I have not begun consideration with the incredible team here what would go into that document. I think you characterized it correctly. Historically, at least from my first tour of duty at the Fed to more recent periods, it would be sort of a setting up speech more often than not of what was going to be happening in the fall. I haven't made any judgments on that, but those are judgments we'll have to come to. If I could, in the high mountain air in Jackson, Wyoming, I'd like to also frame the big questions. There is a tendency, especially with the proliferation of meetings and press conferences, to get caught up in the myopic. Did you do this by a quarter or do that? Ultimately, whether we deliver on price stability matters some, the decisions we make in 6 or 7 or 8 week periods. But they matter more, what are the big questions? What's really happening with productivity? What's really happening with demographics? What's really happening to the global economy amid the shocks? Haven't made a decision whether it's going to be a big picture speech or whether it's going to be a more traditional setup for all the action we're going to have between September and December. I will tell you one other thing that I am doing between now and Jackson Hole, which is I'm checking with those task forces. My first principle of establishing a task force is find the best subject matter experts anywhere in the world and put them together, especially put them together with other people who might disagree with them. In the next couple weeks, I'm going to be doing a check back in. I've given them time to sort of think hard about their agenda, their debate, their schedule, and when they might be ready for prime time. I'll be doing a little bit of that checking, and that may or may not inform anything I have to say in Jackson.
Nick Timmerose of the Wall Street Journal. Chairman Warsh, I want to follow up on Colby's question about policy transmission. You've said there's no cruel choice between stable prices and full employment. Rates bring inflation down by cooling demand. It's generally thought that can show up in the labor market. If that's not the channel you're relying on, what is?
So let me go back to first principles, Nick. I don't believe that either part of our mandate is generally at war with the other part. I do not believe that price stability and full employment is an either-or proposition. There have been policymakers over the last several generations who have thought that there is a strict trade-off there. That isn't my judgment. In fact, my judgment is if and when we deliver on our remit, we're going to be satisfying both prongs. We're going to have price stability and full employment. And in fact, if you want to do the most harm to the labor markets, you would run a period of high inflation that's variable, such that employers, businesses, wouldn't really know what's going on. So I think the two parts of our mandate are equally important. We have no legislative orphans here. I've been talking mostly about price stability because we're doing pretty well collectively as a country, as policymakers on the full employment side. But we're doing considerably less well on prices. That's why we describe them as elevated, and that's what's taken most of our discussion. In terms of transmission mechanisms of monetary policy, I think different tools work through different transmission mechanisms. The interest rates work through lending channels and credit channels, maybe confidence channels and foreign exchange. The balance sheet probably works through some other channels like signaling and portfolio balance. We're keeping full abreast of all these tools in making policy. But if the suggestion is somehow we're going to be fine-tuning aggregate demand so it catches supply, that's not my mental model. I don't think we're great in the fine-tuning business. We're trying to get supply and demand in broad order, but really what we're doing as we sit here today at this press conference is I think we've got a reasonable sense of what aggregate demand looks like in this economy. We're inferring aggregate supply. We're making a judgment about what productivity is. And in some sense, there's a race between supply and demand. And the surge in business capex in and around AI, it's making that calculation a little harder to judge, but in the period ahead, we're going to be trying to judge just that.
And if I could ask, where exactly was the disagreement today? Was it about the inflation forecast, or was it something more around the risks, the tactics?
Yeah, so I'm going to I'll let the dissenters speak for themselves. The way I heard it over the last 2 days was overwhelming agreement on objectives and authority and commitment. I didn't hear anybody walking away from it. The judgments as to how best to achieve the price stability, that was probably the question that we were trying to answer. What's the best move? What's the best strategy? What's the best way to achieve it? And a second question that was asked is, when do we need to make those harder calls? When do we need to make those decisions? And like I said to one of your colleagues, I was comforted that markets in the intermeeting period weren't reacting to us, they weren't reacting to dots or to speeches. They appeared more than ever to be reacting to real-time events. So they're gauging themselves how restrictive the Treasury curve should be. And that, I think, has been a useful development. We don't endorse any particular market move, but I'd also suggest we observe them with keen interest.
Janelle Marte with Bloomberg. Following up on that, there was more uncertainty in the markets about what the Fed would do at this meeting. To some extent, you might think that's what you want to see. But my question is about, is there a point at which you would not want to surprise the markets if they were pricing in something with higher certainty that was opposite of what you were intending to do? What are the risks that you see associated with that?
Yeah, so it's a good question. Surprise is not the objective function. Surprise is not what we're solving for. We have a clear North Star. What we're solving for is how to make the best decisions. Almost everything else should be in service to that goal. By not spoon-feeding markets, by not previewing our decisions, by not sort of giving nudges and leans, my colleagues and I have found in the intermeeting period, what we're getting is the views from a very accomplished economist. That's the internals of financial markets. Instead of just repeating or echoing what we were saying back to us, they're giving us somewhat, not perfect, their own judgment. So surprises are not the objective, but at the same time, I would say we didn't come into this meeting feeling constrained by the full range of alternatives we had in front of us.
So some of your peers have continued to discuss how they think about policy decisions, and if you don't offer your reaction function or your way of thinking about it, how concerned are you that you're ceding control of the narrative?
So not very concerned. That's a short answer to the question. When some people that follow the Fed say, well, we don't want your forecast, we don't want your dot, we just want your reaction function. Part of me hears what we really want is your forecast, and what we really want is your dot. In terms of reaction function, let me sort of disabuse people of a question that may or may not be real and be out there. Any central banker, especially a central banker where the labor markets are more or less at equilibrium. Any central banker, when he or she sees underlying inflation moving higher, he or she is more inclined to tighten policy. Again, when you've achieved the other side of your mandate and you see underlying inflation falling, he's more inclined to loosen policy. That's my reaction function, and I don't suspect it will cause people to not continue to pry for more, because the truth is, for a very long time in a lot of countries, coming out of the 2008 crisis, where in crisis mode, we were purposefully providing a lot of information, trying to provide a lot of assurance, trying to tell people exactly what we're going to do, offering forward guidance with clarity as if we're tying our own hands behind our back. Well, in crisis mode, that strikes me as a very prudent policy. But in more benign conditions, it strikes me as worth revisiting. But markets and market participants and reporters have learned to devour all of that information, so I take seriously that the pullback of forward guidance requires some transition. Reform isn't easy, but our general judgment is it's going to help us make better decisions, and in so doing, satisfy our remit.
Paul Weissman.
Thank you.
It's coming. There's a mic coming.
Thank you. When you talk about the 2% inflation target, what measure are you relying on?
Yeah, so I'll give two answers. First, let me give the proper standard answer. The Federal Reserve every January outlines a statement of purposes and strategy. And in that strategy document, which I believe was dated January of this year, it describes a measure of PCE inflation as the objective function there. I have enough of my own, so that's our number, we're sticking with it. Who knows come after next January what we might say about strategy. I suspect the task forces might have something to add. But I'll say this, some version of the Lucas critique, some version of Goodhart's law in economics should remind us that when we talk about measures of inflation or something else, and we describe those measures as being consistent with our objectives, we might make them such that they're not very good measures or very good objectives. Broadly, if you said to me standing in front of you, I abide fully by the strategy document, we're going to deliver 2% inflation and not a whisper more. But to achieve that, I'm looking at a broader set of inflation data than PCE. So without sort of fully revealing my cards, I'm trying to understand, like my colleagues, what's the underlying generalized change in prices that are happening in the economy. It is not a perfect science. I might have said 42 days ago, I've got a task force for that. But we have a data project that's trying to look and see whether we can't separate the noise from the signal. And so if you would hear a message from me, yes, I care about what the PCE prints are. I care about what the contributions are from CPI and everything else. But my lens is broader than that, even though the remit is quite narrow.
Mike McKee.
Michael McKee from Bloomberg Radio and Television. I'm struggling a little bit with some of what you've said today, and maybe you can help clarify this. you've said over and over again that your job is to bring down prices, to get prices stable, to hit your target, and that you will hit your target. The market says you're not there yet because they've raised rates, but all you've talked about today is talking about it. And it's not like members of the committee weren't there before you talking about it. So I guess what the American people might be asking is, what are you waiting for?
Yeah. So, believe it or not, this press conference is not all I've done today. We have spent an inordinate amount of time in the last 2 days, 2 weeks, looking at our monetary policy strategy, evaluating our tools, thinking hard about the sources of data that we have at our disposal and we wish we had. We've also thought hard about the period ahead. What among these questions will be answered with more clarity, certainly not certainty? So the decision we made today, the discussion we had in that room, was the farthest thing from inertia I can imagine. As a point estimate at this very moment, in a choice between two alternatives, you heard the results of it, but I would tell you that this discussion was far more robust, and our thinking about how best to achieve that target is advanced. And over the coming months, I expect it to be advanced much more significantly. If you were to if I were to steal a follow-up question, you won't be giving it up. If I were to steal a follow-up question, well, what's the world think about what you've done? I would again reiterate, what we do isn't just about what we say. It's not just about what we do. We're in the performance business. And so if I look at the Treasury curve, if I look at the dollar, if I look at a lot of things that are internals inside of financial markets, I think what they're broadly saying is that this committee does own it, has the credibility to deliver it, and they believe, like I do, that we will. But I don't want to leave you with a misimpression. We've got no magic wand. This isn't something that we're going to be able to carry out in days or weeks, but we're going to deliver on the responsibility that Congress gave us. And today's meeting and the preparation for today's meeting was an important step towards that destination.
I'd like to follow up on the task forces as well and ask, what vetting did you do of the people that you appointed to the task forces? In particular, given Mark Andreessen's substantial political spending, $25 million in just the past year to back candidates who oppose stricter AI regulation, how can the public be confident that a committee he co-chairs will provide an independent assessment of AI's economic effects rather than one aligned with the interests of the AI industry?
Yeah, so I selected 15 incredible subject matter experts to tackle 5 of the most important questions that if we get the answers right, we're going to do a far better job in delivering. And if we get the answers wrong, we have a problem. The comfort that I can give you and your listeners is we're the decision makers. The chairman of the board of the Federal Reserve and the members of the board and the FOMC, we will be the consumers of the outputs from 5 different committees. The judgments we're making will be informed by, but not at all determined by, these outside groups. My theory of the case in establishing the task forces were to pick people with extraordinary talent, depth of expertise, and a divergence of views inside every committee, so they too can have a family fight. This is not outsourcing to people that aren't known and haven't been vetted. This is seeing whether new ideas can catalyze a broader, better, more informed discussion inside the room. And I'm very confident that we're going to be able to do that. I am impressed by the credentials of these 15 people. And full disclosure, I've known almost all of them for a very long time. And I think they're going to give their best views on the subject. But ultimately, these are decisions we're going to make, and we're accountable to our oversight committees and to the remit Congress gave us to deliver.
Hi, Ann Saphir with Reuters. Nice to see you again. So I need a little help here too. You've said repeatedly you have no tolerance for inflation, and yet we are seeing above target inflation repeatedly for 5 years and through your term so far. And sure, you have no magic wand, but you have not taken action. You just gave us a little peek at your reaction function as well. You said that if underlying inflation is rising, that you would tend to think that you might need to tighten. And with the exception of the most recent inflation print, that is what we've been seeing. So could you explain what you mean by no tolerance for inflation and what you plan to do about it?
Sure. So, Ann, I hear from you what I hear more broadly from households and businesses: impatience. Deliver it already. This is not an excuse. This is a fact. This FOMC, this board has been in business for 8.5 weeks. The patience, the impatience that households and businesses feel have been going on for 63 months. We are on the job. We will deliver. We are focused like a laser on making sure we can do it. But the suggestion that we're going to be able to do it with our magic wand is one I want to disabuse you and everyone else of. But the discussion in the last 2 days give me more confidence even than I had 8.5 weeks ago. This team that we have at the FOMC, the support that we have from board staff, and the new hard questions we're asking, we need to resolve those. And as we resolve those questions, get smarter on those, we're going to deliver on the remit. You don't have to take my word for it. If you look broadly at market prices, they are certainly not saying all clear, but they are working in concert to keep us on our toes, and they have tightened financial conditions in this intra-meeting period, and that has given us, that has provided us some comfort that we've got the ability and capability to deliver.
And is your read or your, I guess, faith in markets' ability to sort of make a judgment and then you to take signal from that judgment, how does that affect you when you come up on the September meeting and markets are seeing a near 100% chance of a rate hike as they see now? How does that feed into your decision making and your thinking?
So we're not going to be constrained by market prices. We're not going to be constrained or take verbatim from what the market's doing. But I think it's useful and to understand that markets can be a very good source of information. Not a determinative source, not a perfect source, but if we're trying to land the plane and deliver 2% inflation, and we take a very useful source of information and we get it all fogged up by giving it our own forecasts, by providing rolling commentary, I can assure you that we're going to have less information, less ability to land the plane successfully and deliver price stability. We're just trying to make sure that that source of information is as direct and unfiltered as possible. It isn't to the exclusion of data sources and opinions and other surveys, but if you're hearing from me, we wanted to make sure we were getting a better source of information. I think in a relatively short time we are.
We'll go to Brian Chung for the last question.
Hi there, Chairman Warsh. Brian Chung with NBC News. So you said you'd be open to having press conferences when there's news to make. So today, no change to rates, no forward guidance. For the average household, I guess, what was the news today?
So apparently it was news that I had a press conference. Let me just see if I can offer some clarity on that. Between now and year end, my predecessors and the Federal Reserve committed to press conferences this year. I'm committing to press conferences this year. That might be news to the people in this room and of no particular interest to your viewers and your readers back at home. What I can offer as assurance is that the Fed's on the case, that this Fed chairman feels better about this board and this committee's ability to deliver than I did when I showed up here on the first day, and I showed up pretty confident. I've been heartened by the reception that I received. No doubt in some of your commentaries today, you'll talk about a divided.
All right, we are back here in Vegas at the Rare Evo conference, live from the Aria Hotel. It's my first time in Vegas, but won a couple $100 playing blackjack yesterday, so I might be back. Steve Gregory is our next guest. He is the CEO of Binance US, and we're going to be talking about Binance US, Binance.com, everything that's happening here as well on the exchange side of the world. I really enjoy seeing the unique vantage point that these exchanges have, given that, retail's flowing, different asset classes, tokenized equities, whole bunch of things going on. Very, very unique vantage point happening here. Steve, man, welcome to the show. It's a pleasure to have you.
Thanks so much for having me.
Absolutely, man. Just give us the high level. I mean, it feels like we're in this transitionary phase. This is kind of what we've been saying on the show. We're transitioning from bear to this pre-bull phase. Maybe the market's in apathy. What are you seeing on the ground at these exchanges as you're operating? Given that you've got a sense of the flows here, they say bear markets die in apathy. Some people think we've got another leg down, capitulation. Some people think it's just a matter of time. We're not going much further down. We're just going to be here for a little while. Based on the flows that you're seeing, have you seen the typical market conditions that are consistent with an apathetic market? Lower volatility, sort of a consolidation of assets, consolidation of focus. What are you seeing when you're looking at the flows going through Binance US?
Yeah, it's a great question. It's going to take me a minute to go through all these, but what I've definitely seen is more engagement with the passive products. So the staking products, we offer this cool boost product. Other yield products, we're starting to see more interest in that. Less in the trading, but sometimes we're being pretty aggressive with what we're listing now, and we're seeing some of our best listings we've ever had on the exchange with some sort of smaller tokens. So some of the community is definitely excited. We haven't seen the typical volatility in the Bitcoin and ETH. Maybe ETH a little bit of a breakout now. And we've also started to see a lot of older accounts rotating some of their positions now. So I've seen accounts, that onboarded in 2019 that had pretty stable balances start to become active again. We've also seen a bunch of new users come on with pretty significant balances. I think that there's a reshuffling. People have more than one exchange, and we're just trying to win the balances from other ones. So I think we've started seeing stable coins coming from other local exchanges or US-based exchanges to ours because we listed a new token, and then engaging with that new token. And I think we've also seen some of the L1s get more popular too, which is kind of cool.
Yeah, and I think a lot of this is the result of sort of this evolution in the market. People are a little bit less concerned about the decentralization theater, right? So they're kind of going to where the apps are, where the activity is, that's where the action is, and they're caring a little bit less about maybe some of the nerdy nuances that had consumed the industry for a while. And so it sounds like that's consistent with what you're seeing on the exchanges and on the asset side.
Definitely. We offer more staking assets than any other platform. Yeah. So we're starting to see that we think we offer over 40 stakeable assets. So we see a lot of movement into that now, and that's become a good part of our business.
And would you say this is still primarily retail driven, but it's retail that's now gotten a little bit mature? They're not chasing the 10x, 100x. They're chasing this nice passive, stable staking product that can generate them some yield, give them a good return, and they're not gambling and shooting for the hills anymore?
Yeah, I think just for the market cycle right now, I think more people are just holding, getting a little bit of that extra yield from staking, and then just waiting for the next move to come.
Yeah, and so given that you've sort of seen this shift from more trading to more passive staking elements, how much are you looking at the revenue models when it comes to Binance US? Maybe you just scoot in a little bit. I think they're trying to bring you a little closer to the mic. The revenue models for Binance US, where are you seeing primarily these streams? Are you seeing certain streams sort of slip? As you're looking at targeting more market share in the US, I mean, there's teams that are targeting IPOs. They're out there, they're consolidating, they're doing a ton of M&A. Is this sort of a similar game to what you're playing? What kind of game are you guys playing when it comes to growth?
Good question. I think volume largely dominates market share. I think that what I want to have is much more healthy retail to institutional balance. So if you look at some of the Coinbase or something, all the volume's institutional, all the revenues in retail. And that split is getting over the past few years, it's gotten more and more skewed against retail. And I want to be an exchange that's much more healthier. I want to have more of a retail focus and also still be able to get the institutional volume. And I think that's what leads to more long-term success. So like when I'm thinking about our products, I want to do a lot of retail products early to try and bring the users on. And once we get that product going and then the market chooses that, the institutions I think will follow. Because the institutions are much more fickle, but it's very clear the products that they're going to want. We got to nail the retail market first and then like let the public choose our exchange. I think like Binance US was sort of a backup exchange for a couple of years here while we were sort of in hibernation for the past couple of years with regulatory issues. But I want to make it the primary exchange. And I'm like, how do I win people's like primary balance? Like, how do I go take it from the new players? And like, what's going to be the new product for that? And I think, we really think about like our user funnel and what's going to win us screen time. So I'm thinking like, how can I get more products in to sort of entice them to come over, leaving another bigger exchange?
That is fascinating thinking about it in terms of screen time, because when we're looking out there at the competitive landscape, obviously there's the deposits conversation, but then there's also what are you having on your screen at any given time? And so, you could think of that and getting involved in, the model UI or giving more education to these market participants just so that they're continuously coming back. We've seen other exchanges take a more social approach. That has been, tumultuous as of recently. And so what are you targeting just to maintain, this level of attention on Binance US? Is there anything creative here?
I think that you just have to be really, really careful and nuanced with your approach. And like one thing that I really want to work on, especially with our marketing team, is to like understand like exactly how the App Store works. Like understand how in-app events work. Understand like getting featured. You know what I mean? Like if you can make your ad this size versus this size, you're going to get more clicks. And sort of like how you move up in SEO. And I think like we have a lot of things that we can do at our fingertips that probably weren't being done, and some US exchanges are not that good at it. And that's where I really want to compete. And I think like that pays dividends long term. And that's like one thing we're really, really emphasizing now.
And so as we sort of think through to the future, let's first just get caught up here. You mentioned that Binance was sort of in this hibernation. What do you exactly mean by this hibernation, and why did that happen?
Yeah, so Binance US was sort of drug into the legal troubles of Binance.com and CZ. So Binance US actually didn't do anything wrong, but because our founder was convicted of a felony, they'd lost some licenses. And the SEC targeted Binance US as well. So CZ got pardoned, the SEC dropped their case. We've now started to get back the money transfer license we have that they took away because he was charged with a felony. And now we're starting to build it back. So we were basically just in hibernation, sort of like the exchange was operating, but we weren't being aggressive. We were just sort of like dealing with the blowback of that. And now everything is sort of clear. We can really go be aggressive again and go get market share.
Yeah, okay. And so given that you're sort of, it's funny because Binance has got like this Goliath brand worldwide, but maybe playing as an underdog in the US. How much are you looking at, I mean, it seems like now you're making up this ground, but how much are you looking at the strategy that worked for Binance globally and now implementing that in the U.S. to sort of balance this equilibrium?
Great question. Great question. I think that we benefit from the Binance brand like quite a bit, right? So we have, a massive amount of organic traffic because of the Binance brand. It's probably the most recognizable brand in crypto. I think like globally, it's many times larger than Coinbase. It's many times larger than all the other exchanges combined. So I think, it does more volume than NASDAQ on a daily basis. I think what we need to do is we also have the same tech as Binance.com. So we have the same matching engine. We have like largely the same API endpoints. Some of the things like KYC and stuff are specific to the US, but largely the product, we can ship a lot of the Binance code. That gives us a real good advantage because, they have a very fleshed out product that the market has already chosen outside of the US. So we can sort of like move very, very quickly, and that's what we're going to do. We're going to leverage that big brand that the market already chose and bring it here to the U.S. and now like really compete against.
Yeah, and you mentioned how most users have kind of multiple exchanges, and it's just about shifting some of the attention from Binance US being kind of the backup exchange to being the one at the forefront. I want to get your reaction to another exchange now blockchain that has recently gone live, which is Robinhood. Seem to be crushing it, and also kind of have this barbell approach. RWAs, memes, kind of retail, institutional, like the two wolves, right? Just curious how sticky you think some of the things that they're doing there are. Do you think this is like new shiny thing, mercenary capital chasing, the flashy new thing on the block, or do you think, there are things that Robinhood has done with Robinhood crypto, Robinhood chain that are ultimately building a moat and are here to stay?
Definitely. I think they've done really well with that. I mean, it just shows like distribution is everything.
Yeah.
Right. So like we need to leverage on our Binance US name. We have 1.5 million funded accounts. We have like over 7 million total accounts. So we have a pretty good distribution chain too.
Mm-hmm.
We have Binance Smart Chain, obviously, but that we don't control that, but that's on the platform.
Yeah.
I think we want to be sort of chain agnostic. We list everything. I'll list any L1, we'll list any sort of thing. And we just want to provide value for our customers. So we'd even list a Robinhood chain if it came down to it. We see it just better for our customers getting access to like whatever they need. Obviously, real world assets going to be cool. We think that's going to get bigger. We're intending to get a broker dealer to hopefully bring some of that here when the rules get clarified with the SEC. But keep advancing.
How bullish are you on this Clarity Act? Like, what is that? How important is it to the business that this goes through?
Yeah, I think like federal preemption is pretty much everything, right? I think like that'll give institutions like what they need to really be able to build on this asset class. Like if you have 50 different regulators and you're at the mercy of how they define money transmission in their state, it's very difficult. It's great for lawyers, what I used to do, but it's not great for business and continuity purposes. So, I think federal preemption will really give this industry the blessing that it needs to really grow it. And if we get clarity, we may have the biggest cycle ever because obviously institutional capital will really flow in.
And who do you think are the biggest beneficiaries of the institutional capital flowing in? Like, given your strategy as you're thinking through institutional versus retail and then the on-chain component of this entire industry, do you think there's a particular segment of this industry that is particularly poised to benefit?
I think stablecoins most likely, right? And then, by virtue of that, preserving the dollar hegemony globally, right? I mean, I think if all stablecoins are transacted in the dollar, everybody wants the dollar, everyone wants treasury bills, right? It's a default buyer of treasury bills forever. Maybe it gets us out of the debt crisis. I think stablecoins is probably the easy answer. What I think, though, is, what people will say is like, crypto will be the plumbing for everything. Yeah. So it'll be the backbone for everything. Like it'll be how, AI agents transact, how people transact, payments. So, I think like this could be what creates that, unbelievable super cycle that we've all sort of been waiting for.
Yeah, and how does an exchange think through this? Like you mentioned how, given the current market conditions, you've maybe, went a little bit further and broadened the aperture for the assets that you're listing in terms of new listings. Is there going to be consolidation, kind of a narrowing if we do end up in like a bullish phase because you don't need to broaden the aperture in order to get volume? Or how has the listing process evolved over time, through market conditions, but also just through the way that, we've approached new asset listings in the space over the last couple of years?
Yeah, good question. I think that, we used to be much more conservative with listings, I think, a few years ago. And then sort of like after the meme coin stuff happened, the SEC sort of allows meme coins. It's not really much of a risk. We, obviously engage outside counsel to do all the securities analysis and everything like that to make sure we're not going to see any like major market manipulation. But I think, we can list a lot of things that have a community. And if that community has support for something, inherently it may have value. And that's what we want to see. We want to list. And we also want to move the whole ecosystem forward. So if we see cool token projects that our retail may want, or even institutions may want, we're happy to list it. It doesn't.
Yeah, and so like, it feels like a lot of these new tokens. I mean, I'm actually curious. Maybe you can just double click on a couple. You probably can't mention like particular tokens here, but as a category, why do you think new token listings are doing particularly well right now? Because for a while there, I mean, it was low float, high FDV world out there. It was like VCs, you'd get a little bit of a pop, and then, it was sort of not too good after the initial launch. What do you think changed about the way that, the capital structure is with these tokens, listing process? What do you think caused that, and what are you seeing in that category of new listings now?
Yeah, I mean, it's a really good point. I think, last cycle, the last bull market, I think like the meme coin craze kind of ate up a lot of the liquidity for everybody else. Mm-hmm. And sort of that's why we didn't really get the higher highs that we thought we were getting, sort of like the mega caps. Mm-hmm. And now I think that people are seeing like value in this stuff, so they'll see more volatility when it's really hard to move Bitcoin. I think like the ETF flows sort of dampen the volatility a little bit with like Bitcoin and Ether. So now people are seeking volatility outside that. And some of these meme coins, or even just like lower market cap tokens, have that volatility because there's no ETF in a lot of them. And it's kind of back to the crypto original days, which is kind of cool.
Yeah. Okay. And so it feels like, we are sort of like returning to principles a little bit. Also, we washed out a lot of sort of the a lot of the VC capital just didn't really flow in, and it required the space to sort of, get more creative with the way that we were structuring these things. And now I feel like we're starting to see a little bit more of the financial experimentation that, we saw back in like 2016-ish.
Definitely.
And so, yeah, are you particularly, is it meme coins? Is it kind of like this AI crypto stuff? Where do you think that the attention is flowing now that is a more sustainable trend?
What I'm starting to see is a lot of explosion of stablecoin issuers.
Yeah.
So we had a lot of different companies coming to us. They're saying, well, hey, we're issuing a stablecoin. Can we get it on there? Like this is banks, this is asset managers, this is even like prop shops. We're saying like, okay, we'll see where it wins out. They're all usually on like an L2 or on ETH mostly. And then we'll just try to list them and see like what happens.
Yeah.
And I think like in the future, it'll be sort of chain agnostic, and stablecoins will just settle in a centralized exchange. It won't matter.
Yeah.
And I think we'll see how that plays out. But I'm really excited to watch that.
Yeah. I mean, that is ultimately, we have this saying on the show that a dollar on chain tends to stay on chain.
Oh, definitely.
And so stable coins growing is just better for the entire space overall. It's more likely that those stable coins end up flowing into, DeFi protocols, flowing into DeFi assets, and then everything gets re-rated for a TAM that is an order of magnitude larger than what we were ever, picturing before, now that all of these things are considered. And so stablecoins is huge for the entire thing. I mean, earn products, and you mentioned kind of these passive products as well, is just, continuing to build a more sustainable approach. The last thing I want to ask you about is tokenized equities and just kind of RWAs in general. How important is that to the business strategy at Binance?
I know. So I feel like that you just look at the market cap of tokenized equities and like it's exploding, right?
Yeah.
Obviously Binance.com launched it maybe like a month ago. Obviously they're massively. I don't know how big it gets in the U.S. because, by virtue of just being in the U.S., we can get to a brokerage account. I think maybe outside the U.S. it's probably a little more valuable.
Right.
But I do think, the on-chain tokenized equities, if you can get past the transfer agent stuff and make it like the agent of record is the actual token, the bearer instrument, I think it will explode in the U.S. because it's just much more convenient.
Yeah.
But there's some AML issues with that and stuff like that. But we're super excited. We want to get our broker-dealer just to see like where this goes and try to build out products on top of this. We launched a Web3 wallet last week. We're going to have tokenized equities in the Web3 wallet, and then try to expand from there, bring it onto the centralized exchange soon.
And I think a place where typical broker-dealers aren't really thinking, but new broker-dealers, given like crypto-native broker-dealers that are now breaching into this world with whether it's tokenized equities or just listing them on the exchange, are now thinking about using those as collateral, using them as margin and perps.
Absolutely.
How much demand do you see from Binance US customers to add these sorts of things as collateral?
This has been my thing. I think that probably the next cycle is, crypto as collateral becomes like a really, really big product. I just feel like for retail, it just makes so much sense, right? Like we want to do the hold. We don't really want to sell. Interest rates are super high.
Yeah.
Why can't I just borrow against my crypto? If it's a stakeable asset crypto, I can buy down the interest rate. I think it's like the best asset. It costs nothing to foreclose on collateralized crypto, right? We custody it anyway. I think that this is a way for retail to get credit, even institutions to get credit, and this product starts to really explode. And I'm like really bullish on this personally, and I want to bring them a lot of products in-house to Binance US.
Yeah. I think this is what everyone's excited for. It's not only the 24/7 global settlement. A lot of people, I think, now with the on-chain economy, like they just kind of treat that as table stakes. Now it's like activating the capital efficiency of this asset class.
Especially like with younger people too, home ownership being down. A lot of people access credit through like a home equity line of credit, or borrow against their IRA or 401k, something like that. But if you hold crypto, it's just an easier asset to borrow against, right? Like if I borrow against my 401k, like a check comes in the mail after like a month and a half, and then I'm paying it back in some weird way. Like on crypto, it's just so much easier. It's a natural collateral asset.
Yeah.
So I think that's the future.
And so I just another thing occurred to me here, because I want to think through sort of like the exchange landscape in the U.S. You guys are prioritizing. It feels like tokenized equities and margining these is a priority for a lot of these exchanges. I'm curious, as you think through, and predicting is hard, and I'm not asking for like really specific predictions, but the market share dynamic of exchanges in the U.S., right? It feels like there's a half a dozen that are sort of vying for significant market share. And, we've seen the way that some of these technological developments have taken place. If we look at the AI side, it's almost a duopoly at this point. You've got basically Anthropic and OpenAI are like winning the frontier model race in the US, and then you've got Grok, Gemini, you've got some other ones, but what sort of trajectory do you think the exchange dynamic, the market share in the exchange industry is going to follow in the US? Do you think it's a winner take all? Do you think it's a duopoly? Do you think like there's going to be something that Binance US does that sets it apart from the other exchanges in the US? How are you thinking?
I definitely think there's been consolidation. I think like a lot of the smaller exchanges are going down. I think we're, even last week we saw,
right,
Bitmart went down.
Bitmart and BitMEX.
Yeah, BitMEX
down.
outside the US, but Bitmart in the US, at least Bitmart US. So I think that, obviously we're going to see more consolidation. Like Bitstamp was bought by Robinhood, FTX is down. So we were seeing consolidation already. I think right now what I want to care about the most is like creating a healthy exchange, beating the other exchanges on specific categories and specific numbers, and then everything else will sort of fall in place and doing right by our customers. And I think like over time, we will win back the market share we had because the market already chose Binance US prior to all the legal issues. And I think like we can get back to that if we just stay the course.
And what are those categories? What are those numbers that you're treating as North Stars?
Cost per acquisition and average revenue per user. I think that's pretty much the key. Like if you can, acquire users cheaply, obviously organic traffic helps quite a bit with that. And then, how much revenue you get from that particular user, that's what makes you ultimately competitive. And I think but we can win on so many other things, and I think it's looking at it more holistically, not just like a trading fee model. And I think we're trying to institute that. But it's if you keep your team focused and very, very focused on the customer feedback loop, we will get there. And we'll always be relevant if we can master that.
It's a very principled approach, and I think it's a fundamental one, right? I mean, it's just sticking with the basics, strong fundamentals, and ultimately that is what builds a very, very sustainable and successful strategy. Steve, I mean, I think that's all I got, man. Appreciate you coming on. Thanks for doing it, and we'll see you again real soon.
This is a great interview. Thanks a lot.
Thanks
I appreciate
so much.
it.
Yeah, we'll see you next time. All right, guys, don't go anywhere. We'll be right back with our next guest.
Tim, you're good.
Yo, what's going on, guys? This is Etan with The Rollup. We're going to be patrolling the streets of New York City, getting answers to the questions that you guys have most. What are people trading? What are people investing in? How much do people actually budget? We're gonna have people from all over, all different investment classes, people who are dead broke, people who are dead whales, people who are just loaded. There won't be a mayor or politician to stop us on the streets. We're going to go everywhere, all 5 boroughs. We're taking over the 212.
We get deep, you know we get deep. We get deep, we get deep, we get deep hard. You know we get deep. We get deep, you know we get deep. We get deep, we get deep, you know we get deep.
Money, power, and money, power, and we get
we get deep.
And we're back here live from Las Vegas, the Rare Evo conference at the Aria Hotel. Having a terrific time. Might play a little blackjack later, who knows, we'll see. But today, here, next guest, we've got Jamie, the CMO of the Minutes Network. I'm really, really curious to learn about Minutes Network. You guys have been a fantastic sponsor of the show today, and so really, really appreciate it.
It's a pleasure.
What's that?
It's a pleasure.
Absolute-
We're always happy to be a sponsor.
Absolute
and
pleasure,
maybe,
man.
maybe I'll take all of your money later in the casino.
Man, Jamie's the house here. So, Jamie, it's your first time on the show, man. Welcome.
Thank you very much for having me. Pleasure to be here.
Tell us a little bit about the Minutes Network story. Obviously, you guys are partnered with World Mobile. These two are going together very, very nicely together. And you're putting on this Rare Evo conference. I think for a lot of our audience, Minutes Network might be flying under the radar a little bit, right? You guys launched a couple years ago.
Yes.
And so you've got a DPIN network. I was doing my research a little bit. You guys have the World Mobile is sort of the hardware side. It's the cell phone towers.
Data. We like to.
Data.
I look at World Mobile as data.
Data.
And Minutes Network as voice.
Voice.
Two brother companies, though. Two missions and visions, but very aligned, one collective family. There's a lot of integration and connection between the two communities. And then U-Network is an application that we've launched together collectively between Minutes Network and World Mobile. Yeah.
Beautiful. All right, well, that's where we are gonna dig in. There's a lot that we wanna talk about. So first, let's start with the Minutes Network vision, and then we'll talk about maybe the collective vision, and we'll talk about unit network. So tell us a little bit about the vision of this.
So I would say the vision of Minutes Network is connected communications.
Okay.
The vision is to be the largest telecom carrier by user base by 2030.
Who is currently the largest telecom provider by user base? Is it
in the traditional world? I don't know. Probably
AT&T or T-Mobile,
actually probably a Chinese mobile company.
Chinese mobile,
yeah, for sure.
Is it Huawei?
But we're operating in
Huawei,
a very different space, and we are really, I think, at the cutting edge of where intelligent communications are going.
Okay.
And are becoming. We obviously leverage with Minutes Network Token X, decentralized infrastructure, and we're very focused on opening up the sort of telecom sharing economy.
Okay.
We believe it's very important that for everyday users who are participating in helping this industry grow, they should be able to participate in the value that the industry creates.
Absolutely. Let's fill in some of the gaps here as we're visualizing what this telecom world is going to turn into. I heard you mention intelligent communications.
Yes.
Tell us a little bit more about what makes communications intelligent.
Rise of the robots.
The rise of the robots.
Software agents are everywhere. They don't need us anymore. They are talking to each other. So we're actually in the process of launching the Telecom Exchange. And this is where agents can act autonomously, interact with each other, and they can, identify capacity. They can buy routes. They can basically do everything that humans do on a telecom exchange.
Okay.
Now, look, I'm paraphrasing. So AI, we all love AI. We've all got it integrated into our terminals.
Yeah.
We're all full stack engineers now. But AI is playing an increasing role in the importance of preventing fraud, right? Making all of our systems more intelligent. We obviously use it at the switch level, right, for switching calls. We use it to, prevent fraud. We use it to optimize call quality, call economics. And then as we move forward, like I said, with the Telecom Exchange, we appreciate now that AI agents are starting to transact with each other, talk to each other. Devices are now able to communicate. So AI is changing who and what can communicate.
Yeah.
So we're very aware of that. I think very much at the forefront of that.
Absolutely. Absolutely. And so let's think through how this works at the DPIN level. First, I think it would be helpful. Maybe you could explain why Minutes Network, World Mobile. What is the blockchain component Is it even a blockchain component, or is it just more of this distributed network component that fits into this verticalized stack?
So, and then later today in the keynote, I'll try and explain all of the elements in our ecosystem and how the parts fit together. So Minutes Network is the sort of commercial, carrier grade, wholesale, international voice and SMS carrier. Then we have Minutes Network Token X. That's where the blockchain comes in. That's where the decentralized and distributed infrastructure kicks in. And we have 3,000 nodes. We have 2,500 validation nodes, 500 switch nodes. That is the decentralized infrastructure that our community are participating in, and they hold those nodes. And they stake the MNTX token to those nodes. So we have, you're either operating one of our nodes as part of the decentralized infrastructure, or you're a token holder and you're staking those tokens to those nodes.
Got it.
Yeah. So we have a very vested, passionate, focused community who are very focused on the long-term results of our infrastructure. We're like 86% staked of the MNTX supply that's out there is staked, and that shows our sort of the passion of our community and how they are very vested in the long-term success.
And the people that stake the MNTX token and secure the Minutes Network, are they helping to provide telecom services to the world?
They're providing the provisioning, right? By staking the nodes, we now have these 3,000 nodes. Right? And the combination of the validation nodes and the switch nodes, they'll verify and validate network activity. And then they'll switch the calls. They'll make sure the calls get delivered. Now, it's very part of the ecosystem is our proprietary software. It's called MinTech. We have a number of tools. And those tools will ensure that we're optimizing cost, we're preventing fraud, but the uptime of our switches and our validation nodes is 99.99%.
Nice, that's pretty good.
Super reliable. Which then creates trust, which is critical for sort of connected communications. Especially in today's age.
Beautiful. And so, as we're thinking through this, there's a cell phone service that we can purchase from the network, correct?
No, so for Minutes Network, you're not going to purchase cell phone plans
when
or
they're
mobile
switching
plans.
calls, whose calls are they switching?
Okay, so right now, there's probably 600 people on a phone call. Right now, there are over 30 countries where international phone calls are being made and delivered across the Minutes Network platform, our network. So we are terminating paid international voice calls and SMS messages. Do that every day. So on any given day, 1.5 million minutes across our platform, from Pakistan to the Philippines to Vietnam to Spain to Peru, you name it, we cover it.
Incredible. And so how can our audience leverage this network? How can they get involved? How they can purchase this token and they can stake it in the network and they can help provision the network and switch these calls. But if I want to make a call and I want to do that on the network, how do I do that?
So you don't have to worry about making a phone call on our network. Right? So, but if you were, let's say, calling your mother back in England or Spain, you most likely would run across our network. However, if you have a mobile device, another way to participate and more directly with your phone is to download the U-Network app.
U-Network.
Right. So U-Network is a collaboration between World Mobile and Minutes Network Token. U-Network app allows you to do proof of work for the telecoms industry with an application. You're going to connect to our network. You're going to make sure your phone is turned on, has good connection. And then there are a number of tasks that you either sort of are, let's say, network tasks. You don't have to do anything necessarily beyond keep the phone on, make sure you've got good Wi-Fi, good uptime. But then there are more sort of discrete opt-in third-party tasks or first-party tasks like CLI, like entropy, where you are performing proof of work for the telecoms. Why this is very interesting is up until now, the industry, they've had labs, they've had synthetic devices, and they've sort of had backward-looking what they think is intelligence and assumptions about their network in other parts of the world. U-Network is now allowing active devices to provide real-time, real-world intelligence on real networks globally. So for example, U-Network is already in 1,250 cities, over 120 countries, whether it's 25, 30, 35, 40,000 devices that are giving the telecom industry real-time intelligence, not synthetic devices in a lab a month later.
Right.
Very, very, very powerful.
Yeah, absolutely. And so there are lots of deep-in projects out there. Some of them have struggled to find product market fit. But like you mentioned, 1,250 cities, hundreds of phone calls. Like, there's actually real adoption here. And it's happening on this network, and it's secured by these stakers. This is a real deep-in network operating at scale.
Yes.
Why do you think Minutes Network, World Mobile, U-Network, this collective, how was it able to find product market fit, whereas others failed?
Well, so the leadership of both Minutes Network and World Mobile come from the telecoms industry. Okay. Very experienced, and the wider telecom and VoIP teams, all of the team members at Minutes, they understand telecoms very well. They've been living and breathing it. They realized that there was a real lack of innovation, certainly on the GSM side. So there was an opportunity with sort of modern technology and with decentralization and with blockchain to combine existing technology in a novel way and to basically innovate in a very lucrative, very multi-billion-dollar industry.
Yeah.
And I think that's, very exciting. So there's always a need to communicate. There's always people making phone calls, right? We always have to communicate. So I don't know if the problem was always there, but the business model has always been there. The revenue's always been there.
Yeah.
So now it's question, okay, let's innovate, let's apply these new technologies, and more importantly, in terms of the vision and the mission, we now have an opportunity to allow the people that are paying and building and helping these large carrier networks, telecommunications grow, to actually participate and share in the value that it creates.
Yeah. Yeah. So tell us more about the revenue equation here, because I think a lot of our audience is focused and learning about some of the opportunities that exist in the market today. There is this MNTX token. We can stake it. I'd imagine there's some sort of yield or reward that you get from staking it, in addition to maybe the upside in the token.
We have Epoch rewards and our early holders of the nodes and token holders have been receiving monthly Epoch early staking rewards. Every month, Minutes Network terminates X number of millions of minutes and SMS messages in the marketplace. The carrier interconnect partners pay Minutes Network fiat revenue. Minutes Network then, provides Minutes Network token with service fees for provisioning the decentralized infrastructure.
Okay.
Minutes Network token then distributes those rewards, Epoch rewards, to holders and token holders.
So there's real revenue here that is coming from the network.
Yes.
It's not emissions in the token like we've seen so long. You start off with 10% of the circulating supply. The rest of the 900 million tokens are just printed out of thin air, and then they're just distributed. That's not what's happening.
No. We took a baseball bat to the printing machine.
Yeah.
No printing machine allowed.
Baseball bat to the printing machine. I love it. So there's real revenue that's getting distributed to token holders.
Yes.
Like cold hard cash that you can get from staking this token.
Yes. And so we have we have great tokenomics for Minutes Network token.
How much revenue are we?
So it. You know what? That's a very good question, and in terms of as of today, I haven't even sort of thought what are our latest amounts.
Just curious.
But what I would tell you is that on the token side and with the tokenomics, you can see, right? It's very clear cut. No team tokens have been issued.
Okay.
We have a very healthy burn mechanism.
Yeah.
Right. So it's almost like depending on, if less tokens are staked, right, then more tokens are burned. If more tokens are staked, then obviously less tokens are burned. We then also, with Minutes Network token, and not that I want to confuse you, we have this amazing technology called Jingle. And Jingle allows us to turn a voice call and terminate it as a data call.
A data call?
As a data call, which allows us to capture a lot of the margins.
Okay.
Jingle as a technology can be integrated into an existing application, so you as a developer or as a publisher, and then let's say, an app that you use on a regular basis has Jingle inside of it. When you get your normal international phone calls, when you answer it, because it comes through Jingle, We've removed a load of wholesale intermediaries to get the call to you. It's higher quality, it's an HD quality. And we're able to capture more of the margins. Some of the margins are shared with the application owner, and in our tokenomics, some of the margins are shared with the caller and the callee. And so that is really an incredible way to have Web3 mechanisms in the background and to onboard sort of Web 2 users around the world, callers, callees, into Web3, just by receiving the international phone calls they normally get.
Yeah.
It's a lot, and I appreciate I'm sort of
This is great,
paraphrasing. Yeah.
And so I remember watching the BlackBerry movie, which was kind of one of the, obviously.
I loved the BlackBerry. That QWERTY keyboard. It was life-changing.
It was incredible.
Yeah.
And they also had this way of doing phone calls so that they could scale the network an order of magnitude, and that's what it sounds like. Is this Jingle technology allows you to scale the amount of phone calls. We don't think about it because everyone's got unlimited data now and these sorts of things, but the bottlenecks that still exist. So you guys are innovating on the telecom network. You've instantiated this blockchain, and now you've been able to scale the amount of telecom bandwidth another order of magnitude, so that you can supply some of the countries that you mentioned in 1,200 cities with a more accessible alternative to the telecom giants that exist today.
Well, yes, what we're doing is we're providing everyday users with the ability to turn their devices into active contributors to the network. Right? Provide real-time intelligence to the telecoms industry. For example, fraud is massive. Right? You're a carrier, you're in the UK, but you have numbers all around the world. But you have no idea what happens when someone in Mexico or someone in Peru or someone in Nigeria is calling your number in the UK. You don't have the infrastructure, you don't have the people in those countries. So you're assuming. But now with your network and your device, you're able to help that telecom provider understand actually what's really happening to your numbers. Are they being intercepted? Are they going to someone else's voicemail? Are they even connecting? What is happening? So real-time intelligence. Yeah. And that's across telemetry, it's across caller line identification, it's across now entropy. Yeah. We have a lot of tasks that are coming to your network. So Jingle is a very interesting piece of technology that allows us to terminate international voice phone calls in a way that we get to capture a much higher margin, and therefore we're able to reinvigorate carrier profits for our partners. We're able to capture higher profits margins for ourselves, and we're able to then share those with the people making the call and receiving the call. And that's what we mean by the telecom sharing economy. And that's where when we think, all right, so we say our vision, our mission is to onboard 2 billion users by 2030.
2 billion users by 2030.
That's the mission, right? So the vision is to be the largest carrier by user base. Also, because of the MNTX tokenomics and the fact that 15% of the tokenomics get split between the caller and the callee, means that we are going to be able to onboard non-native Web3 users from an action they're doing normally every day, which is making and receiving.
And they probably won't even realize that they're accessing this on a distributed network, and there's this token that underscores
all of a sudden,
the network.
Hold on a minute, you have these tokens, and you can withdraw them. You can withdraw them as tokens or in fiat.
Yeah.
And as we all know in Web3, we're abstracting away the complexities of a wallet, and all the language, and it's just very simple, and it's a couple of clicks, and here you go. Bit of KYC maybe, right? And you can redeem your rewards.
I'm looking at the Minute Network token now. I mean, it's up today. What do you think this thing can do?
Well, this is from my personal opinion, is that we've been very focused on the building. We've been very focused now on the launching, and now we're in the process of scaling.
Yeah.
We are not in a hurry to seek attention, in the sense that we're not trying to trade on, we're not like a Veblen good, we're not trading on social, and we know that the best way for long-term token price is to deliver.
Yeah.
Right. And when we continue to grow the revenue that we translate then into the service fees, into the buybacks for the token, that then go into Epoch rewards, that then get restaked to the ecosystem, that is the best way, right, to drive attention and interest.
Jamie, CMO at Minutes Network. You're saying all the right things.
I know. I was practicing all the buzzwords. I have no idea what I just said to you. I come from video games. I'm like, telecom. It's fascinating what we're doing, and I think it's very, the winter is cold, right? To your point. I think, all industries, it's been very tough. And there are elements, telecom, nothing sexy in a way about telecom, but I think, we're getting to a place now where all of our pieces are coming together, and the concept of a telecom sharing economy, and the way that, now, the communications infrastructure that I'm part of every day, and I'm this generating massive profits in these boardrooms, these barons. Actually, now I can participate, I can contribute, and I can share in that value. It's very powerful.
Yeah, you're the man, Jamie. Minutes Network token. MNTX.
You have to come to the booth and you'll have to download the U-Network app.
Yeah.
We'll get you up and running and you get one of these t-shirts. We've got one in every color. Very nice to meet you,
Let's
my
do
man.
it. It's great meeting you. Guys,
you too. Thank you.
This has been Jamie from Minutes Network. We appreciate their support. This is the most incredible setup that we've had at any conference. Look at this news desk. Look at this banner.
It's so fancy. You should come to our booth too. We've got couches, we've got t-shirts, we've got backdrops, we've got pull-ups, we've got vibe, we've got banter.
Jamie
Good times only.
Yeah, banter and vibes.
Yeah.
Jamie and I are going to be bantering and
We
vibing
are,
at the
we are.
blackjack
And I'm
table
gonna
a
take
little
all
bit
his money at the
later
table.
tonight, guys. We'll see you there. Don't go anywhere. Next guest is Eleanor Terrett speaking on clarity. We will be right back. Don't go anywhere. That was fantastic.
Yo, what's going on, guys? This is Itan with The Rollup. We're going to be patrolling the streets of New York City, getting answers to the questions that you guys have most. What are people trading? What are people investing in? How much do people actually budget? We're gonna have people from all over, all different investment classes, people who are dead broke, people who are dead whales, people who are just loaded. There won't be a mayor or politician to stop us on the streets. We're going to go everywhere, all 5 boroughs. We're taking over the 212.
We get deep, you know we get deep. We get deep, we get deep, we get deep hard. You know we get deep. We get deep, you know we get deep. We get deep hard. We get deep, you know we get deep.
Money, power, and money, power, and we get deep hard. We get deep, you know we get deep. We get deep hard. We get
We get deeper. We get deep. You know we get deep. We get deeper. We get deep. You know we get deep. We get deeper. We get deep. You know we get deep. We get deeper. We get deep. You know we get deep. We get deeper. We get deep. You know we get deep. You know we get deeper. We get deep. You know we get deep. You know we get deeper. We get deep. You know we get deep. You know we get deeper. We get deep. You know we get deep. We get deep. We get deep. We get deeper. You know we get deep.
Welcome back to Crypto in America, live from Las Vegas. I'm your host, Eleanor Terrett.
I was genuinely confused. I was like, Robbie's lost it. All right.
We've got Eleanor Terrett. This is The Rollup. We are live from Las Vegas at the Rare Evo conference, and we're going to be talking about clarity, and more clarity. Eleanor is the woman in the know, and she was a late addition to the slate today, so I don't have her on my run of show, so we're just going to chop it up. Eleanor, how are you doing?
Yeah, I'm great, Robbie. How are you?
I'm good. I'm sort of oscillating between the nothing ever happens and so much is happening.
Yeah.
Because it feels like every day and night there is some new news around ethics language or yield or BRSCA or whatever the acronym is. You're the clarity person. So are you in the nothing ever happens camp or the everything is happening all at once camp?
Yeah, it's everything that's happening all at once, but it feels like hurry up and wait, right? And there's this urgency to get it done. August recess starts next week, but there is very little to suggest that they have the votes to get it across the finish line at this point in time. But I keep saying, it seems it is changing by the minute. It really is changing by the minute. It's a fluid situation. I feel like all I'm doing is, checking my email, checking my text messages, checking Twitter to see what updates are coming through. Also, I'm sure you find this as well, but operating in Las Vegas, 3 hours behind the East Coast, is very confusing when you're trying to keep up with real-time news, right?
Yeah.
But yeah, it is constantly changing, and I think it is a case of, can they get to the 60 votes needed to invoke cloture, which is something that may happen next week. I think there was some hope originally that Senator Leader Thune, was going to perhaps call a vote this week. Doesn't look like that's going to happen now. They obviously had the Iran-Russia sanctions bill that took priority, and it looks like it's going to maybe go through maybe quicker than expected. It looks like they have the votes to push that through. So we could be looking at next week so we got to talk about Senate procedure, right? That it's not just a quick, let's vote on this and it's kind of done, right? There's a lot of arcane Senate procedure that goes into this. You got to invoke cloture. Cloture requires 60 votes in order to go on to the next part of the process, which is the motion to proceed. After the motion to proceed, you start working on amendments, and then you kind of got to start the process all over again. In between those, you've got 30 hours. So when you think about the timing, right? Next Friday, all the lawmakers go back to their constituencies and kind of go on summer recess. there's really very little time. So now we're talking about, are lawmakers going to stay longer over recess and kind of try and get this done? I think there is a possibility, there's a world in which if they get the votes to invoke cloture and they, the Democrats are on board, the Republicans are on board, they could stay longer and get this bill done.
Is there a precedent for that, extending past recess
There
if they
is.
have something on the table?
There is. I can't, off the top of my head, give you an exact piece of legislation, but it has happened before for important pieces of legislation, I believe, like, reconciliation, spending packages, that kind of thing. It's never happened for a crypto bill. I definitely can tell you that.
We're in a lot of
But
firsts
There's
for crypto.
firsts for everything.
Yeah.
Exactly.
Okay, so we've got to get first to this cloture vote, and that is ultimately going to tell us whether or not we're going to proceed. And then there's a couple steps from there. But it seems like if we can at least get to the cloture vote, it would mean that we probably have the 60 votes, and it would probably mean that we're in a much more likely to position for this to continue. There's this 30-hour timeline, and then there's things that happen afterwards. But if we can get some sort of movement in the next week, then we're on a much, much greener pasture even after recess.
Yeah, so it's also going to be a bit of a forcing function, I think, if Leader Thune calls a vote and then it forces those folks to come to the table on the issues that we keep hearing about, right? You've got ethics going on. We saw the ethics proposal come out in the text last week. Go ahead.
Let's take please. Let's take these one by one, right? Because there's ethics, there's yield, there's several other provisions. But let's start with ethics. This is the thing that's been on everyone's mind. It's been the biggest holdup. What is happening with ethics? From the outside looking in, it seemed like they would prohibit people from participating in meme coins as fundraising mechanisms. Maybe you can just help articulate the ethics language and tell us whether people on both sides of the aisle are satisfied with this language.
Yeah, so I'm going to pull up the exact text language, so I can give your audience maximum value here. But what essentially is happening right now behind the scenes is that text did come out last Wednesday. The Democrats, perhaps not surprisingly, came out against it because they say it's not satisfactory. They think it doesn't do enough to prevent President Trump from profiting off of his crypto ventures. That really is sort of the core issue here is President Trump has managed to make a lot of money while in office. In the last 18 months, he's made over $1 billion. Yeah. And a lot of it has been from his meme coin, from his involvement in World Liberty Financial, which is his son's platform.
Yep.
All of this is very unprecedented as well. There's been no sort of blueprint for this before, so a lot of this ethics language that lawyers have been working on, staffers, people with law degrees, 1 million law degrees, have found very challenging because you're running into issues, constitutional issues. You're kind of coming up with a bespoke framework here. And then the White House really has to be the one to sign off on it at the end of the day. So the White House did send over a framework to Senate Republicans. Senate Republicans said, this looks okay. And then when they presented to the Democrats, they said it does not go as far as we want it to. The headline, I suppose, I don't want to dig through my Twitter to find the whole thing, is that it will prevent members of Congress, government officials, the president, the vice president, their spouses, members of Congress, from issuing, sponsoring digital assets while in office. There is a sunset clause of 2029.
Yeah.
So they cannot go beyond that. Basically, they cannot enforce this beyond President Trump's presidency. It also let me pull it up.
I guess maybe the best question here is what is lacking from the ethics language to satisfy Democrats?
Right.
What is missing there?
That was probably the second thing I was going to say, is that it requires government, it requires the DOJ to be able to sue to enforce ethics provision. What the Democrats really want here is state attorneys general. They want a role for these state AGs to be able to sue the DOJ to enforce lapses in ethics provisions, right? The Republicans really don't want that. President Trump, the White House really don't want that. The Democrats really do. And there's back and forth over how that could look. Is it really feasible? That's sort of the key tension point here. Senator Tom Tillis is leading those discussions with Senator Ruben Gallego from Arizona. There may be a breakthrough in the next couple days. We'll have to see. They have to send that proposal, though, to the White House. Trump has to be okay with it.
Right.
If he's not okay with it, there's no bill.
Would you anticipate that, let's say Republicans compromise with the Democrats and they say, sure, we'll let the Senate, or excuse me, the state attorney generals sue the DOJ in order to enforce these rules. How many lawsuits would you anticipate that as soon as the rules go through, we would see this flurry of lawsuits from the state attorney generals, given that, if they are given that power?
Potentially, yes. And you've seen a lot of state AGs take it upon themselves to sue because they feel like they have that, sort of like autonomous power, right? You look at Letitia James in New York.
Yeah.
She's sued a lot of crypto exchanges. She's sued like individuals. She doesn't necessarily like crypto, it seems. She's come out with a letter in the last couple of days saying the Clarity Act should not pass.
Right.
State AGs have, taken on these lawsuits that the SEC dropped after the, with the advent of the Trump administration. A state AG out, I forget which state it was, but they took on the same lawsuit against Coinbase that the SEC dropped.
Yeah.
And so you see initiatives like that, and you have to kind of think, well, if that doesn't worry you, then this could potentially, lead to other things down the line. And I think Republican senators are worried that with the shoe on the other foot, a Democrat administration potentially in the next couple of years, how is that going to look for us?
Yeah. Absolutely. I mean, it kind of goes both ways, because if there is a Democratic administration and now they start using this as a fundraising mechanism or start, finding some loopholes, it could be the Republican state attorney generals that go and sue.
Right, exactly.
Yeah, we'll see how that plays out. But obviously, we're sort of playing the game as it stands right now with the Republican administration and sort of putting rules together with this in place.
The Democrats are playing a key role here, though, because they are the ones that need to bring up the vote count to 60, right? You've got about 53 Republicans right now. They've got the leverage.
Yeah.
You need about 10 Democrats to really get those 60 votes. So if you don't have those, you don't have a bill either.
I spoke to Rebecca Rettig of
Rettig.
She's
amazing.
Fantastic.
Yes.
She was explaining how the Clarity Act is a win for Democrats. They just don't realize it. We've been operating in this unregulated environment, this wild west of crypto for so long. Democrats are, everyone wants consumer protections, these sorts of things. But for some reason, Democrats are opposed to actually regulating this industry because it looks like it would legitimize the industry. And especially while the president, who's a Republican president, has benefited so much and made so much money from it, they don't want to be seen as legitimizing the industry. I also saw, I don't know if you saw this is a fascinating watch because we're so zoomed in on the industry.
Yeah.
John Oliver, he's got like this Tonight Show.
Of course. Yeah.
Did you see the segment that he did yesterday?
Yep.
Okay. What did you think about this? I watched the whole thing. I thought it was fascinating, especially after hearing from Rebecca Rettig, who said that this was a bill that was going to be a win for Democrats, but then the narrative that is explained and put in front of the mainstream media, if you will, is that Trump has made so much money from this industry. We should regulate the industry, but the Clarity Act is not the way to do it. That was ultimately the conclusion that I think John Oliver was drawing, and so I think that is sort of indicative of the narrative at large at the moment. Is that the consensus view right now from the outside looking in? And do you think that's a fair assessment of the Clarity Act?
So I didn't watch the whole segment. I did watch a clip of it that came up on my X feed. And I did see the part where he said, the Clarity Act is not the way to do this. I do think there's a lot of PTSD, I will say, from FTX, especially among Democrats who took money from Sam Bankman-Fried, gave time to Sam Bankman-Fried, who ended up being, what he was. And I think a lot of folks on the Hill have not recovered from that. And they see crypto as synonymous with FTX and with SBF. And I think there's a world where they just can't see beyond that. No matter what the industry does to maybe redeem itself, to kind of, look beyond that time and grow and mature, it's just not going to change a lot of these folks' minds. And I don't think it's just Democrats. I think there's some Republicans who also feel the same way. But to Rebecca's point, I think, there are, in this bill, and as someone who's gone through the latest text, there are things in there that would prevent another FTX. So while Democrats can say, we don't want this bill to enable crypto billionaires, right? That's a common line. I think John Oliver might have even brought that up, and Ben McKenzie, the OC actor, has been on the Hill talking about this as well, saying, do we really want to enable crypto billionaires to keep, making more money than you? And then, there's that, but then there's also the world where you pass the Clarity Act and there are bankruptcy remoteness protections in there where if, God forbid, a crypto business or an exchange does fail, and then customers actually get the same rights that they would if a traditional exchange or a traditional financial platform were to go into bankruptcy. So there are good things in the bill. There are things in the bill that people are not going to agree on. And, it's unfortunately, crypto has become a partisan issue. I think it is for all the I won't say propaganda, for all the messaging out there that crypto is a bipartisan issue. Yeah. I think it parts of it are, and I think it's gotten better, but I think it will always be a partisan issue, and I think FTX played a big role in that.
Yeah, absolutely. And it's indicative. I mean, it was totally unclaimed land, uncharted territory. It just so happened that Trump, and by Trump doing it, representing the Republicans, kind of claimed domicile and dominion over this uncharted territory. It was totally fair game for so long. Democrats could have said, hey, there's a lot of things that we like about this industry. We like that it's fair market access. We like that it democratizes access over the entire world. There could have been a lot of things that the Democrats ended up, supporting about this industry, but they decided to just sort of sit back on their heels. Elizabeth Warren was, kind of the staunch, opponent to crypto for so long. And that has now put us in the position where, Republicans support the industry, Democrats seem to not. But these things can easily change. They are so path dependent, but they can easily change. The last thing I want to chat with you about here is the language that came out last night.
Yep.
BCSA?
BRCA.
BRCA.
The Blockchain Regulatory Certainty Act.
Blockchain Regulatory Certainty Act. Tell us about this. Why is it so important? We've sort of moved from the yield issue to the ethics issue, now to the BRCA as like the highlight of what is holding this up. Where are we at on this? Can we reach consensus?
Yeah, so I've been told that BRCA is one of about 3 verticals that Democrats really care about and really have been the core of the issues that we've been reporting on, talking about for months now, right? You got ethics, you got BRCA, and you got sort of conflicts of interest with exchange verticals, that kind of thing. With the BRCA, Blockchain Regulatory Certainty Act, Tom Emmer, the House Majority Whip, came up with it. It's his bill, technically. It basically assures blockchain developers, software developers, that they will not have to be criminally liable if they publish code. So if you create a platform, a protocol, and someone from North Korea comes in and uses it and launders money, then the writers of that code are not going to be hauled up in front of court and sent to jail. Similar to what's going on with Roman Storm, what happened to the Bitcoin, the Samurai wallet developers. A lot of activity, a lot of businesses have gone offshore because of that. That's what Tom Emmer says, and that's why he created the Blockchain Regulatory Certainty Act. It is contentious because crypto really wants those protections in there. It's sort of a non-negotiable for the crypto industry. Law enforcement has been very vocal that they want to see changes to it because they think it rolls back some of those abilities for prosecutors to be able to go after bad actors and law enforcement to really be able to kind of go after on-chain crime. You're seeing a lot of the police groups come out in recent days supporting the bill as a whole, even with the BRCA in there. It is now mostly the prosecutors who have issue with it. And what you saw last night was Catherine Cortez Masto. She's a Democratic senator from Nevada. She's been kind of key to this whole negotiation with BRCA, put out proposed changes that she said in the statement was sort of the culmination of talks with the White House, with the Treasury Department, with the attorneys groups. And actually you saw White House and Treasury come out and say, this has nothing to do with us. We did not agree to this language. What we're trying to achieve on BRCA is not what you proposed. It's far from it, in fact. And what you proposed is not negotiable. It's going to damage software developers' futures here. It's going to, they came out strongly against it. Yeah. And so what you now have is, Catherine Cortez Masto has been a key sort of get for, she's a key vote. She, it's going to be interesting to see how this plays out really. And as much as ethics is a big issue, BRCA is also a very big issue. So it's still in flux. We'll see what happens. But that happened last night. It was kind of a big drama.
Yeah. This is now taking the spotlight as the most contentious issue.
Yeah.
And it seems
staking and staking. Stable coins is also in there as well. The compromised banks are coming out against it. They have been. Credit unions as well. Right. They are mounting that front against it. Okay. And Cody Carbone told me on stage today you could see technical changes around the Tillis Also Bricks compromise.
Cody Carbone is going to join us in about an hour.
Okay.
So we're going to hear directly from Cody.
Yeah.
Eleanor, what is the probability here? Just
Oh, I hate giving probabilities, Robbie.
It's just what the people want. I'll tell you here. I'll give you an anchor, a little over under here. The prediction markets, which don't have a ton of volume here, are putting this at a 30% chance. It was at 37% most of this week and last week,
Is
but
this passing in 2026?
passing in 2026.
Yeah.
At a 30% chance. Over under. You don't have to give specific predictions, but over under 30% chance of this thing going through this year.
Can you explain over under to me?
Do you think it's over 30% chance or under 30% chance?
Of passing this year?
Yeah.
I think over.
Oh. All right, guys, you heard it here first. That's a bullish word on the probability of the Clarity Act happening
I think
this
30
year
is
from
very
Eleanor
low.
Terrett.
And then because you're hearing, maybe there's some strategy to get it done in September. I mean, for all the, the deadlines that have been missed, and there's always the situations and the expectations, they always sort of seem to be in flux and they always change.
Yeah.
And, we'll just have to see. It's never done until it's done, I feel like.
Yeah.
And someone who's been covering this, from the beginning, like I said, it's not over till it's over.
Yeah. Awesome. Eleanor, thanks so much. Absolute pleasure.
Thanks,
as
Robbie,
always.
as
You're
always.
doing incredible work in DC, reporting on the most important developments in crypto. Guys, we'll be right back. We're going to set up our next guest, and don't go anywhere. This is The Rollup from Vegas.
Cheers.
Cheers.
Yo, what's going on, guys? This is Etan with The Rollup. We're going to be patrolling the streets of New York City, getting answers to the questions that you guys have most. What are people trading? What are people investing in? How much do people actually budget? We're gonna have people from all over, all different investment classes, people who are dead broke, people who are dead whales, people who are just loaded. There won't be a mayor or politician to stop us on the streets. We're going to go everywhere, all 5 boroughs. We're taking over the 212.
We get deep, you know we get deep. We get deep. We get deep. We get deep hard. You know we get deep. We get deep, you know we get deep. We get deep, we get deep, you know we get deep.
Money, power, and money, power, and
We are back live from Vegas at the Aria Hotel at the Rare Evo conference today. This is The Rollup. We're going to be chatting about Clarity with Ron Hammond, head of policy at Wintermute. Ron has been on the Hill. He has also participated in the early days of the Clarity Act. He's seen this thing from start all the way to where we are today. Can't say finished quite yet, but we are hopefully nearing a conclusion and some closure on this whole thing. Ron, man, absolute pleasure. Thanks for coming.
Dude, likewise, man. First time on the roll-up. It's your first time in Vegas. I mentioned that.
Yeah.
So, yeah, a lot happening, a lot of good energy here, and I know, another talking clarity. That's what everyone's
No,
talking
no,
about. But
that's
Eleanor's,
that's what we want to hear about.
Exactly. So.
And so, tell us a little bit. It's your first time on the show, so give us a quick background on like how you ended up at Wintermute, your journey through policy in the digital assets industry. You mentioned before we started that you were on the Hill, so tell us a little bit about ultimately how you found yourself in the position today.
Yeah, sure thing. So I used to work for Congressman Warren Davidson. This is back in 2016. I was his financial services staffer. So I was in charge of anything financial services, taxes, trade, healthcare, a whole slew of things. But I was one of the young 20-year-old guys that works on Capitol Hill that you might have heard of that can't really do a lot of the legwork here. Even though I'm not a lawyer, rely on a lot of important lawyers in that space. But my job task was to write the first market structure bill to regulate the crypto industry, which was, at the time, no one's ever done that before. So I worked with 4 Republicans, 4 Democrats. It took a long time to get this moving, but in 2017 we had the Token Taxonomy Act, which has morphed over the years, and about 800 pages later to the Clarity Act that is now. So I've been dealing with market structure for almost 10 years now of my life, but started on Capitol Hill for 5 years, worked on that bill, and when I saw that bill went as far as it could in the House side, moved over to Ripple to be their in-house lobbyist. It was the first of its kind, which was exciting back in 2020, right before the SEC lawsuit came out. Which is something else to say the least. And then moved over to the Blockchain Association. So I was their lead lobbyist, more on the Republican side, but represented about 115 companies, ranging from folks like Wintermute, but you have your Coinbases, your A16Zs, your Fireblocks, all across the spectrum. I was their pretty much de facto lobbyist, whether they had a lobbyist in-house or not, for 5 years during the Gensler era. Yeah. And then when Trump came to power, Wintermute was deciding to expand over from the UK to the US office. And they reached out to me and said, hey, I think you guys would be a great spot. And so now I'm the head of policy for Wintermute, and I do both London and DC. So I was in London last week, and they were talking about the Clarity Act. They were talking more in the way of like, I think America's going to screw up, and I think we got an opportunity here to move forward. So it's a little weird now doing both kind of different jurisdictions, but at the same time, and I've been involved in this fight for quite some time, so got all the tea and everything I can help out of. Hopefully.
Very cool. So we were just talking about how John Oliver did this segment and described. Did you see this?
Oh yeah.
Okay. Did you watch the whole thing?
I didn't watch the whole thing because I couldn't go through it, honestly.
I just want to make sure that we have proper context here, because I watched it, and it ultimately, look, it was a 25-minute segment. The first 23 minutes was essentially just explaining everything that we already know about Trump's involvement in crypto, business practices, how much money he's made, the World Liberty Fi, as well as the meme coin, explaining meme coins. It was really 23 minutes of just level setting. The last 2 minutes drew this conclusion of the Clarity Act. Look, the last 2 minutes of this segment was essentially, we need to regulate crypto, but the Clarity Act is not the way to do it. That seems to be the narrative that the legacy media complex is running with. And so and that's in the US. And so I want to juxtapose that with what you're hearing abroad. Is that a similar sentiment? Because I heard you say that the London sort of, environment is looking at the Clarity Act thinking that we're going to mess it up. It sounds similar. It sounds similar to John Oliver saying, look, we should regulate, but we shouldn't do it with the Clarity Act. What are you hearing abroad? And then, tell me about your reaction to this segment on John Oliver.
I'll start the reaction first, because I call the cast of characters that would come out of the woodwork. Every single time a crypto bill seems to be moving in the right direction or in the precipice of getting a vote. It's always, John Stewart's been in the past, but John Oliver's now a new one. And of course, it's right the week, hypothetically, they could potentially have a vote on Clarity. Great timing. Not at all correlated whatsoever.
Yeah,
and this is what the legacy media does. At least on the lobbying side, a lot of people think it's interacting with folks on Capitol Hill, the politicians, the staffers. A lot of my time is with the media, because candidly, that media carries so much weight narrative-wise, and it's really unfortunate when you have these, really biased sources on one side or the other who are trying to juice it to get their own gain, stuff like that. But at the end of the day, narratives drive politics, and that's the unfortunate part. How can you really boil down the Clarity Act of 800 pages into like 2 or 3 sentences to do whatever objective you want? In this case, for John Oliver, not shocking. Ben McKenzie, not shocking. It's very this enables Trump corruption, or this deregulates the crypto industry, which what regulations are we going to be deregulating, because there's not many on the books right now. It's just the rules within the CFTC and others. So, but I'm not shocked. Like this, we had the same thing in the Genius Act like a week before. There was a huge 60-minute special actually on like the corruption of stablecoins and Tether being an issue. So there's always these forces at play. And I mean, to be completely honest, having been inside the belly of the beast, a lot of it does reside in DC. There's an apparatus, again, for clarity, anti-clarity, pick an issue. But there's these apparatuses that use the media, podcasts, whatever, to try to get their narrative out there. And that is the most damning thing, because guess what? We're dealing with a bunch of new senators who have never dealt with the Clarity Act. We have dealt with a subset of senators who dealt with it, like about 28 or so. But there's about 75 others who have never voted really on clarity, have not dealt with clarity. And they're being told by the banks, hey, guess what? Rural lending is going to be decimated, if not completely gone, from your state if Clarity Act passes. And you're hearing this for the first time saying, what do you mean like rural lending is gonna be gone? Or they're saying, hey, guess what? Trump made $2 billion, but he's gonna make $4 billion after this bill passes. And if you have never dealt with this space, you're gonna try, or you're gonna at least latch on to that narrative. And that's unfortunately what drives DC a lot. So the media, lobbying and Hill staff and the drafters and the senators themselves really ties them together about how you present this. And that's why, candidly, the crypto industry has done the best job of being a vocal mouthpiece of like what we exactly want. There's also, of course, we're decentralized. There's a lot of competing voices, a lot of different viewpoints, but overall, it's kind of sad, but also not shocking to see this. I mean, I would not be shocked 60 Minutes has another special on Trump corruption or clarity or some of that fact coming in pretty soon. I wouldn't be shocked Jon Stewart gets back in the mix. But these are things that we've been through before. I've seen it happen multiple times. And it's a little unfortunate. Moving over to the UK side, though, at least again, I was there last week, as I mentioned. And it's been really weird because, at least in the United States, we've been talking for years, we are behind when it comes to pretty much every other jurisdiction. Take tokenized equities. I mean, the EU's got rules in the books for that. We don't. But that has been the theme for, almost a decade now, where you've seen the EU overregulate, take the first step, the United States saying, we're going to do better, and a lot of it, unfortunately, falls to Congress, which takes time. But at the same time, the UK, so they're at least how their system works, their framework goes into place October 2027. So that's full on. Rules are out there. Get in compliance. You have a year. And I was at the House of Lords last week, and they were a little giddy. They're saying, I think the US is actually kind of screwing up here, and we can take the lead. And for them, at least the UK narrative, I've seen a lot in my year or so lobbying them, has been investments. They're seeing a lot of foreign investment not come to the UK. They're seeing a lot of investment leave the UK for Abu Dhabi, especially Dubai, in the United States recently. And they're saying, we want to onshore that. And so I've seen, especially in my short time doing the UK in a year, it's pivoted. In the past 8 months, I've seen the UK say a little more standoffish, we're not sure this industry should be here, or hey, we're going to put some pretty onerous rules, to now saying, hey, we're going to work with you. Very similar to kind of what we get with Hester Peirce and the SEC now. They're saying, we're going to work with you. Oh, and by the way, ours for sure goes into effect next October. And I don't think the U.S. is going to do that. And especially a company like Wintermute, we do $5 to $10 billion transactions volume-wise daily at this point. That's a lot of regulatory risk to leave out there saying, hey, we think your business model is going to be fine, or trading-wise going to be fine in the U.S. for the next 2 to 3 years. But that uncertainty, creates this question of, are we going to worth the investment of putting the United States this much if we know this could potentially get rolled away, just like that if it's a new administration? So these are tough decisions to have. But again, when you have billions of dollars on the line, this is just for one company. Think about all the ecosystem here as well. Why would you take that risk? And so that's the situation we have now. But it's weird to the UK go from, we got to catch up to the United States, we got to catch up to the United States, like they're kicking our butt, to now saying like, I think we actually got an opportunity here, and they're kind of like they're saying it with a grin, and I'm like, I don't blame them. They're right.
How real do you think that opportunity is? Because we've got this friendly SEC, CFTC regulatory regime, yet we are having trouble getting this thing through, the Senate and into legislation. Do you think that there's a real risk of American companies leaving the U.S. in order to go to somewhere where there is a regulatory complex like the UK, and despite the friendly SEC, CFTC complex that we have here?
Yeah, take Wintermute. Before I joined them, actually, they were not involved in the United States whatsoever because it was the regulatory hang-up of saying, hey, I think if we get involved in the United States markets, we're going to have an SEC subpoena weighing our desk in a couple months. And, candidly, a lot of companies, that ran the gambit and said, we'll take that risk. They got on the receiving end of a Wells notice. And again, many times, if not almost all the times, was unjust. And in some cases, struck down the courts. So, but that's millions of dollars you got to put up in legal fees. It's millions of dollars you got to think about for staffing, as well as wondering, hey, are we going to actually be here in like 3 to 4 years? Or are we going to pay an extra hefty amount just to deal with the regulatory compliance? It's kind of weird, but lobbyists, as much like my role, it sucks that you have to employ them because you really just want to have the clear rules so you don't
Right.
have to hire a lobbyist.
Yeah.
But this is unfortunately the situation that the industry finds itself in. And of course, tech, same thing, AI, same thing.
I think you're going to be fine, Ron. Even if the ZAC goes through, I think you're still going to be with a job.
we
even
haven't
though the
got
lobbyists,
taxes yet, man. So
lobbyists,
we
they
got
just-
plenty of time.
It just goes somewhere. They just get reallocated to the next bill that we're
Exactly.
pushing through. Whether it's perps or prediction markets, I'm sure there's something on the horizon
Oh,
on,
yeah.
on both of those categories. I mean, feel free if you want to comment perps and prediction markets.
I think, honestly, tax is going to be the next big thing for crypto. Like,
Taxes.
if hypothetically Clarity Act got signed into law tomorrow, there's a lot of question on tax, mark to market, like-kind exchange, de minimis. These are kind of huge issues, at least when you're trying to tax, at least have the regulatory rules for crypto tax. There's a lot of question marks on it. The bill I worked on back in 2016, I referenced, did include a de minimis tax provision, but again, that's small. There's about 15 other provisions that we need to have clarity on. And this is not just crypto firms wanting a tax break. This is traditional finance firms saying, hey, if I'm hedging this, what actually is the tax implications for hedging such an asset? So these are major questions that major institutions, not even just crypto native, are asking.
Yeah.
There allegedly is going to be a vote on a package of sort for crypto taxes in September from the Ways and Means Committee. Now, it won't probably get signed into law this year, but that progress has been moving slowly behind the scenes. If clarity wasn't the big thing we're talking about, we'd be talking about the tax stuff because that one's really moving up fast.
Yeah.
And especially in a bipartisan, if it's a split Congress next year, those things should still be on the table here. I think also you have to think about closing the wash sale loophole. I think that's the big pay for they're looking at. So if they can close the wash sale loophole as a way to pay for all these other tax either incentives or breaks, it's a pretty balanced approach, I think, honestly. So we'll see what happens there, but I think tax is going to be probably the number 2 thing coming up. And to your point, prediction markets, man, that's going to be likely the Supreme Court. Going to be a decision in 2 to 3 years probably. We'll see what happens with sports betting. But for Wintermute, we just got involved in the prediction market side of things, providing liquidity for certain platforms. So there's a lot of questions legally, hey, what state is cool with prediction markets? What state's trying to ban it? And then we've seen recently in some cases they've actually told Kalshi, for example, I believe it's Minnesota, to unwind all the trades, which that's ridiculous. And then that's going to cause so much of a headache. Also, if you're a company and that's precedent for one state, you bet New York, California, New Jersey, Massachusetts, all these other states that lean pretty anti either this administration or more blue, they're going to probably follow suit. So again, there's millions and billions of dollars on the line here. And it sucks that some of it is getting hung up on the political reasons. But candidly, too, these are really tough questions that we have to work on and solve. And that's happening behind the scenes right now.
Yeah. There's a ton happening outside of clarity as well. And so we've got lots of time, and those prediction markets have a ton of money to pay any sort of potential fines there. But I'm sure we're going to be talking more about that. You mentioned that you had some tea. And I want to get to this because look, I think it's no surprise the narrative from the legacy media has been, hey, we need to regulate this industry, but they don't want to legitimize it. And so they're sort of caught between a rock and a hard place. And so they've resulted with John Oliver saying, hey, we need to regulate this because it's a Wild West and the bad actors are making too much money from this, but this is not the way to do it, right? Because this would legitimize it too much too quickly. So what's happening here? What are some of the things that you can tell us and maybe we won't hear from other people reporting on this?
Yeah, so behind the scenes, so that you actually make a really good point of how you frame it. It's if it's not clarity, then what is it? And typically for a lot of these big bills, the ones that actually have a chance moving or do move eventually, there's usually a Republican version of said bill, there's a Democrat version of said bill, and they usually meet in the middle, they clash, whatever party has more power, maybe gets a little more they want, but overall it's the balance of both ideas, they clash together. The Democrats for years, and again, a lot of this to blame is Gary Gensler.
Yeah.
He was telling them, don't worry about this, you don't need legislation, this is all SEC, these are all securities, don't worry about this, my remit. And for years, we were saying, that's not the case, man. Hey, Democrats, and maybe the Democrats eventually did join the Republicans on this, they're saying, hey, that's not the case. This is a new asset class. The securities laws have been updated in 90 years. They probably didn't think about crypto back in the 1930s. There are a lot of different risk parameters here. So the Democrats did not have a counter bill to Fit 21 last year to clarity this year. And so now it's saying, well, we hate it for, and this is where I get personally frustrated, is just, we hate it for the yield issue, and that's the bank lobby. We hate it for prediction markets not being closed off. That's the American Gaming Association, probably the people who fund this room.
Right.
And, a bunch of things. I think the worst one I encountered me personally, again, this is back in 2017. We had a Democrat sign on. The congressman I worked for went on NPR, and at the time, there was a lot of kerfuffle about the border wall, which is kind of seems like it's so long ago. But the congressman I worked for, he got asked on NPR saying, hey, like, how are you going to fund the border wall? The bill he was working on was like, buy a brick for the wall, even though it wasn't a brick wall. And the congressman offhand says, like, I don't know, I mean, you can fund it with, personal donations, whether it be in dollars, crypto, stock options, whatever. Like, there are many funding mechanisms if you, as an individual citizen, this is a Republican that said this.
Republican, okay.
But this is not related to the Clarity Act or the Token Taxonomy Act, what I was working on. Nothing related to crypto. He just made an offhand comment at NPR saying, you can maybe fund the border wall with crypto, among other things. Right. The headline that comes out of NPR the next day says, Congressman wants to fund the border wall with crypto. And I get a call from the Democrat office that we had lined up, that I was, my boss and I were working on for
One
months.
little offhand comment just puts your work in a precarious
the Democrat
position.
balked, and he said, I don't want to fund, or I don't want to on this bill because I don't want to fund the border wall, and it's politically looks horrible for me in election year. And we had to explain to him multiple times, saying like, this is not about the border wall.
Right.
There's nothing to do with this. And eventually he saw through the politics and said, you know what, I'm going to go forward.
Okay.
But that's the kind of crap that unfortunately we're kind of seeing that now with the Clarity Act, where Democrats are throwing any excuse whatsoever. Some, maybe have some merit, others may not. But like, I've been through a situation where it's, in very cases, no merit whatsoever, but the politics is so strong and the election year is so divisive that they just want to be optically seen as this, and that headline is all it can change it. That's why I mentioned the media in the early part of this interview, which is like, the media carries a lot of weight because that's what the regular people see every single day, and a headline is enough to move a needle.
It's narrative control at the foundational layer, and for so long this industry has moved in unison, and this is true of the way that these assets have moved in the markets. Bitcoin goes up, everything else goes up, everything stocks, zero interest rate environment, everything goes up at once, everything goes down at once, everything has moved in unison. We're finally, it seemingly, starting to get some market maturity, and this market is getting a bit more sophisticated where, look, if you're a token, but you've got some really strong revenues, hyperliquid, right? And you're buying Method token, you've got a good business model, token's gonna catch a bid, but one token is not like all tokens. Like, there is some sophistication in this market now where these things are becoming less correlated, and I think that could be true, and I'm gonna pass this over to you as a question, which is that, is it true of the narrative within DC and the regulatory powers that be, that this is also the case where we've got more market sophistication, more market knowledge, and it's not just crypto, umbrella term, everything gets buckled up into this, perps, prediction markets, Bitcoin, altcoins, everything gets bottled up into this crypto term. No, like, have you seen in the trenches in DC that people are finally starting to untangle Bitcoin from blockchain, from altcoin, from security, from token, from equity? Like, we're finally starting to get some education in this market. It's starting to get more sophisticated, and hopefully we can move forward with a more mature position.
Yes, and I think we were doing really, really well, and that's when the politics gets involved, and that's when, you can have everyone really in the weeds. And candidly, like, a lot of these senators who are in their 70s and 80s are having really deep conversations with a lot of good lawyers that many have been on this podcast before. And like, they're in the weeds, like they're full on like trying to understand the AML obligations or the BSA requirements or the custody provisions. All these other, and every senator has their own shtick or their own angle of what's important to them. And unlike the House, these guys carry a lot of weight. One Senate vote means a lot, especially when you need 60 to get across the finish line. So it's the unfortunate part is that a lot of these conversations have been happening for years. And it's now when the politics gets involved, when the $2 billion Trump headline comes out, that is what masks all of it. And of course, in their mind saying, why would we give you guys a win? Months before the election. It's like, look, this isn't even a win. Also, the amount of negotiations that have happened on this bill, I mean, I'm going to use the word watered down, but like, the Democrats have been involved, even though the Republicans are only in support right now, they have been involved in every single step of the way because Republicans saying, hey, this is a serious effort. The committee that this bill originates from has passed 3 bills in the past decade. And like, these bills do not happen often. So the fact that we're at this point is crazy, but also important, but also shows that at the end of the day, politics can sometimes overtake, and that's the most frustrating part because like, maybe in November it'll be done, and maybe that, the side that is objecting gets their wins in the election, they now feel happy they can do it. But overall, it's just like, it's not about the actual like industry itself, it's about one man. It's like, look, there's millions of people involved in this stuff. If you're gonna make it about one guy, it's a little frustrating. And like honestly, again, having been through this years, it's like if it's not Trump corruption, it's going to be something else next year, next week. There's always an excuse, and that's why that committee's passed 3 bills in a decade. So.
Yeah, and that's it's the state of the world right now. It all sort of, it's been a very top-down sort of regime the last 2 years since Trump took office. And we're now seeing the effects of it. All of the work that, Democrats, Republicans, Senate, lobbyists such as yourself, so many people, so much work has gone into this, yet it does seemingly come to one head.
Exactly. I mean, one thing I'll say too is also, like, trust me, if we could just buy a bunch of the Trump meme coin and all of our regulatory problems would go away, do you think every company would buy the Trump meme coin? But that's what the narrative is out there. And it's like, guys, like, we're going through a broker-dealer application with FINRA. It's like, you bet, like, if we could just, like, make all these problems go away and just buy a bunch of, Trump coin, do you think we would have done that? It's like, do you think any company would have done that? It's like, yes, there are rules of the road for a reason. And, like, it's not this narrative that's put out there, just buy a bunch of Trump's token and you're set, and guess what, you're off to the races. Like, it's totally false.
I wish it was that easy. Ron, let's put a button on this thing. Do you think Democrats can spin this narrative such that the Clarity Act is a win and they're not going to legitimize? They're gonna. It's a win for Democrats, right? And they can spin that to their constituents. What do you think the probability here is that this thing goes through this year, seemingly before the August recess?
Before August recess, it's a 5% chance, 0% chance, candidly, and that's just because there's all these other rules you gotta do.
Right.
Like if you're just like, oh, hey, we want to have a vote, and it's like, all right, we have a whole week now to do said votes. So I'd say 0% chance, 5% chance max in August, because they all leave August 7th. But like everyone keeps, I hate this part of the crypto industry. We keep saying like these kind of make up deadlines, like it has to pass before August 7th or game over. And it's like, I get why you're creating a sense of urgency. I get why the lobbyists are pushing this aggressively. I want this done. I've been doing this for 10 years. I'm like, I want this done. It's been years. But like, let's get it done right. Let's get these folks like there in the room. The text has been out there for months. Last year, 78 Democrats in the House passed this. We weren't talking about yield. We weren't talking about ethics as much. This is like these 78 Democrats realized the writing on the wall. This needs to happen. Yeah. And I think the senators now are like, hey, this is the last train leaving the station. So if I want to get one last shot at Donald Trump, or if I want to get one last shot at the banks, or if I want to capstone my legacy, this is the way we do it. It's like, hey, let's not hold ourselves to artificial deadlines. We got several weeks left in Congress. I know there's a bunch of scheduled things they have to do. But like the votes are there. Like we've counted the votes. Like they are there. It's just you gotta make sure that either A, the politics goes away, and then B, the banks, man. Like I would say the banks have lobbied very aggressively the past 2 weeks, where yield is now coming back up on the table. Like we're saying it's a done deal. It's dead. It's done. But like I mentioned this earlier part, we've been talking to about a quarter of Congress. There's 3/4 of Congress. Now mind you, the lobbyists are talking to them. But they haven't been in the trenches on this issue for years like many others have. Right. And so now we're having like even Republican senators, I had a call from the chief of staff this morning saying, hey, what's this yield issue? I've heard you guys are trying to screw the banks over. I'm just like, oh my God, dude. Like this is a negotiation twice that the crypto industry has made.
Where were you 6 months ago?
Exactly. And I described the whole situation. He goes, oh wait, so the banks already made a compromise and now they're reneging other compromise because they still want no yield? I'm like, that makes a lot more sense. But I'm like, yeah, the way they get dressed up, it is what it is. And back to the media lastly, the like Morning Money, Politico, Bloomberg, anything DC publication, if you pull it up right now, it's all about the yield and how rule of lending is going to go away and yield is the issue. And it's trying to target those 75% of senators who just really aren't in the trenches. And that's why I'm getting these calls. That's why other lobbyists are getting these calls, because they're scaring them and like they have not been through this rigmarole. And it's frustrating because the banks have lost this issue, but they're not letting it go. And it looks like they're willing to have no certainty for market structure if it means in 6 years or 4 years they're able to close that loophole, because they're not going to do it the regulatory way. They're going to try, but they're going to fail. But they're going to try it through Congress, and they have now decided, hey, we are willing to take the long game for a better Congress that will ban yield entirely. And that's short-sighted them, and that's why Goldman Sachs and these investment banks are now bucking the consumer bankers or ICBA or American bankers. Like that's big. It's showing the investment bankers are like, hey, retail, get in line. So, so we'll see. But like that's a really like under the surface, there's schisms in the banks, and some of them are willing to take the long game if it means banning yield, and that long game could be 8 years.
And so you're saying that there's a separation between the rural banking and then the large investment banks like the Goldman Sachs's of the world?
Yeah, and I would say when I was writing legislation back in 2017, 2016, I was talking to Goldman Sachs. I was talking to Wells Fargo, they didn't reach out. JP Morgan, so I was talking to retail, community banks, as well as more investment banks. I will tell you the retail banks were not heavily caring about this stuff. They kind of blew me off early on, but like Goldman Sachs was like right there with me, and like we were talking to him, NASDAQ, IC. So everyone talked about this like a crypto industry bill, but like Clarity started off A, bipartisan, but B, like the banks, exchanges, and TradFi was heavily involved in seeing this text and like giving their input, and they have been for years. Yeah. It's just, unfortunately, the politics gets involved, and also I would say the ethics noise we're seeing in the media.
Yeah.
It's not all the political parties involved here too. The banks are pushing the lever here. Yeah. The American Gaming Association, they're heavily pushing on that narrative as well. So there's a lot of folks who are pushing the political angle knowing that it will destabilize the bill. So there's forces at play that we may not see, but they're heavily involved in what we think is politics.
Yeah. Ron Hammond, head of policy at Wintermute. Man, thank you so much for coming on.
Anytime, Robbie. Really appreciate it.
Would love to have you on again, before this August recess, and just as there's more developments, please come back and keep our community updated and keep myself updated as well, because a lot of things that we hear from you that we don't hear from everyone else. Really appreciate it.
Yeah, no, anytime. And you guys have a great platform. I've been a huge fan, so have you come on anytime. So
thanks so much, man. Guys, we'll be right back. Don't go anywhere with our next guest, Cody Carbone.
Yo, what's going on, guys? This is Itan with The Rollup. We're going to be patrolling the streets of New York City, getting answers to the questions that you guys have most. What are people trading? What are people investing in? How much do people actually budget? We're gonna have people from all over, all different investment classes, people who are dead broke, people who are dead whales, people who are just loaded. There won't be a mayor or politician to stop us on the streets. We're going to go everywhere, all 5 boroughs. We're taking over the 212.
We get deep, you know we get deep. We get deep. We get deep. We get deep hard. You know we get deep. We get deep, you know we get deep. We get deep, we get deep, you know we get deep.
Money, power, and money, power, and we get deep, we get deep.
We get deep. We get deep. We get deep. Hard. You know we get deep.
Yo, what's going on, guys? This is Etan with The Rollup. We're going to be patrolling the streets of New York City, getting answers to the questions that you guys have most. What are people trading? What are people investing in?
Welcome back to The Rollup here live from Las Vegas. We're at the Aria Hotel at the Rare Evo conference, and it's clarity, and more clarity. Cody Carbone, the man from the Digital Chamber, who is in DC making it happen, literally with his bare hands, pushing this bill across the finish line. Cody, man, good to see you again.
It's good to see you, Robbie. Thanks for having me, man.
Absolutely. Just tell us, like, what has been the energy? Like, are you sleeping? Like, what has been the energy like in DC?
Not sleeping. I don't know if that's just from having two little ones at home or it's the bill. It's probably a mixture of both, but no sleep. We're in the thick of it right now.
Yeah.
Like this bill is on the 1 yard line. The time is to get it done now. So it's a lot of negotiating, a lot of back and forth between Republicans, Democrats, the White House, Treasury. And, my role is to offer the industry perspective. Hey, if you guys are gonna, try to push for this tweak, here's how it's going to impact us. So it's been surreal that we're here. We're finally on the precipice of getting a market structure bill done. It's without it, the U.S. will never be the crypto capital of the world. So it's our Super Bowl, and it's all hands on deck. Trying with my bare hands to get it across the finish line with a lot of other help from industry leaders, but right now is the time.
Yeah. Man, I mean, where to dig in here? Let's start with the time frame. It feels like it's the Super Bowl. It's 1 yard line. It's the fourth quarter. It feels like we have to do this thing by next week, next Friday, August recess. All of the Congress people go back to their constituencies. How real is that deadline? We've heard sort of a bunch of goalposts in the air. We've heard a procedural vote. But what are the and how much time is on the clock?
Yo, what's going on, guys? This is Etan with The Rollup. We're going to be patrolling the streets of New York City, getting answers to the questions that you guys have most. What are people trading? What are people investing in? How much do people actually budget? We're gonna have people from all over, all different investment classes, people who are dead broke, people who are dead whales, people who are just loaded. There won't be a mayor or politician to stop us on the streets. We're going to go everywhere, all 5 boroughs. We're taking over the 212.
We get deep. You know we get deep. We get deep. We get deep. We get we get deep. We get deep, we get deep. You know we get deep.
Money, power, I'm money, power, I'm
Yo, what's going on, guys? This is Etan with The Rollup. We're going to be patrolling the streets of New York City, getting answers to the questions that you guys have most. What are people trading? What are people investing in? How much do people actually budget? We're gonna have people from all over, all different investment classes, people who are dead broke, people who are dead whales, people who are just loaded. There won't be a mayor or politician to stop us on the streets. We're going to go everywhere, all 5 boroughs. We're taking over the 212.
We get deep, you know we get deep. We get deep. We get deep. We get deep, you know we get deep.
money, power, I'm money, power, I'm we get deep, we
we get deep. We get deeper. We get deep. You know we get deep.
We're back. We just took all of Las Vegas's money, so they cut our internet just real quick. Can't help that. We're still here with Cody Carbone, and the Clarity Act still isn't through, but the August recess is a real deadline. These guys go back home. They start campaigning for midterms and these things next Friday. But there's multiple steps, right? And so, we've got a time on the clock, right? August 7th, I believe, is one of these deadlines, but there's multiple deadlines out there. Once the midterms take place the next year, September, these things, multiple deadlines, also multiple goalposts, like procedural vote, ultimately signing this thing into law. Just give us a sense of what we should be targeting. What is a realistic goal for us to have before this August 7th deadline, and how much further along do we have to go in order to get that?
You teed it up well, Robbie. I mean, for a bill to pass the Senate, there is multiple votes before final passage that have to happen. It needs to be brought to the floor. There needs to be motion to proceed. Then there's amendments. Then there needs to be a cloture vote, which is historically what everyone says, 60 votes. You need to get 60 votes to end debate. That's the cloture vote, and then go to a final passage vote. For me, where we need to see progress over the next week before they break for recess is that we have to begin that process and have some of those procedural votes. You need to tee this up where when they get back in September, they're only here for 3 more weeks. All they need to do is vote on final passage. And then they send it back to the House, and the House votes on final passage. So August 7th should still be considered a real deadline. If we're sitting here in a week or next Friday and they did not put this bill on the floor, there was no calendar time, there was no amendments offered, there was no procedural votes, then we failed. That means that this bill is likely not going anywhere this Congress. Who knows what happens in the midterm elections? If Democrats win either the House or the Senate or both, we're likely not getting this bill up again. And so then we're waiting until 2029 for a next administration, 2 Congresses from now, to really take up market structure again. So we have to see progress in the next week. If you are sitting out there and watching and you don't want to understand all the procedural nonsense of the Senate, just make sure you look for whether there are any votes on this bill. There needs to be one of those motion to proceed, there needs to be amendments. They have to begin the process, so September is really, really easy. Quick vote on final passage, and then it goes to the House, quick vote there, and then to the President's desk.
And it seems as if this all gets reduced into this procedural vote, this procedural vote, because if it is put to a vote, then it's probably going to pass. They wouldn't put it to a vote if it wouldn't pass. And if it passes this initial vote, then it's most likely the case that they're going to end up signing it in September when they come back. So it really all rests on getting the 60 votes, because that would ultimately put us in a position to have the vote. Where are we on the path to 60? I remember you coming on the show, you gave us literally senator by senator on who was on board and who was not. What's the update? I think before it was 11 and we were closing in on 7. If we could get 7 of the 11, we were in a good spot. Where are we today on the path to 60?
So when you look at the Senate makeup right now, there's 53 Republicans, 47 Democrats. Your hope is that a majority, at least 50 plus Republicans, vote yes. I think we can get 51 votes, potentially 50. Mitch McConnell, we don't know what's going on with him. So if he's not there and can't vote, then you need, and then there's 2 other Republicans, Josh Hawley from Missouri and Rand Paul from Kentucky, who voted no on Genius, historically just don't like voting on digital asset bills, don't like voting on bills in general. So then you've got 50 Republicans, you need all to vote yes. Then you need 10 Democratic votes. There's a group of 12 Democrats that have been working with the Republicans to get this bill over the finish line. There's 18 Democrats that voted for the Genius Act. So we're targeting those 18 to see how many of those we can pick off. We need at least 10. Right now, the biggest issue is ethics. Okay. And I know it's been talked about on your show today by Ellie and by Ron. Ethics is the ballgame now. This bill has become, unfortunately, it's a 616-page bill. Unfortunately, it's less about the substance of what is a true market structure framework, what is a digital asset security framework, a digital asset commodity framework, a tokenization framework, and about how do we from a Democratic side, how do we take the president to task? How do we make sure that the president specifically, and while it's broader than that, it applies to all government officials, how can we make sure that he can't profit off the digital asset industry? It has become a political game. That is a really ugly place to be in DC. And unfortunately, that's where we are in a lot of bills in DC. For Democrats to feel comfortable voting yes and to get those 10 votes, they need to extract enough on the ethics side where they can go back to their base in the upcoming midterm elections and say, while this was a bill that President Trump liked, we were able to really punish him, punish the White House, and make sure that he can never profit off this. The president has to sign this bill. And so getting him comfortable with something like that is going to be really tough, and it has been really tough. Ethics has become the whole ballgame, and that's unfortunate. I wish it wasn't the case. I'm still confident they can get there. They are working diligently, and it's the White House, Treasury, Republicans, and Democrats saying, we need to find a deal here. Let's not hold up progress and trillions of dollars coming into the U.S. capital markets through digital assets by not being able to strike an ethics deal. That's the whole ballgame. There's some other issues that need to be resolved, and I know you've talked about them at length today, but if you get ethics, I think you get those 10 Democratic votes.
Okay, and so, it all comes down to ethics. My understanding of the ethics language as it exists today is you've got this statute of limitations until 2029, and then you've got essentially putting restrictions on certain officials that would prevent them from fundraising via crypto, specifically meme coins and these sorts of fundraising mechanisms. It sounds like, this came from the White House, they put this through, they're okay with this, the president would sign this, but Democrats are not okay with this, they're not satisfied with this ethics language. If I'm trying to cut through this to a breakthrough here, it sounds like the way in which Democrats could spin this to ultimately tell their constituents that they gotta win and stick it to the president is that, hey, Trump made a lot of money via crypto. There isn't really, I don't see Trump bending the knee and capitulating any of the money that he's already made. But if there's a compromise here, it may, and I'm going to phrase this as a question, I'm just curious to get your thoughts on this. Does the compromise here look like Trump made a lot of money on crypto, we can't get that back, but we're going to make damn sure that he can't make any more money on crypto? Is that a compromise that you think the president and the Democrats would feel satisfied with?
I think that's what the president has offered thus far. It was like, I'm going to limit what I've already done. My money's in a blind trust. I'm not going to issue any tokens. Everything Democrats from the beginning have asked for, President Trump says, hey, I agree to.
Okay.
It's pretty unprecedented because there's been no other president that has put controls and limits on himself from making money. Now, it's not going to be good enough for Democrats. They've already told us as much. I think they would like to extract and take away some of the money he's already made, whether that's divestment to his kids or put that money somewhere else. The biggest piece that they don't like is that the sole enforcement mechanism here is the U.S. Attorney General, who is appointed by the president. And so Democrats are saying, how can we trust that the person who is appointed by Trump is going to then prosecute him? They want state attorneys general to also have prosecuting power. There's constitutional questions of whether state attorneys general can even sue federal officials. So there's a lot to work out. Democrats don't like that this provision only applies to this White House.
Right.
They want to make sure that the next administration could potentially go after President Trump for anything that he's done during this White House term. I think there is a deal that can be made. It's going to be really tough. There's going to, hopefully, over the next 24 hours, we're going to see new ethics language that is being brokered between some Senate Republicans and Senate Democrats. I think there's going to be a role for state AGs in there. I think there's likely going to be an ask for divestment of money he's already made. And then it comes down to whether the White House has accepted that. The White House has gone to far lengths right now to offer ethics language that is unprecedented. But it's, you have to get 60, so there's going to have to be more negotiating. And hopefully, the White House sees that any deal here, the Getting Clarity Act is good for the country. Hopefully Democrats see that the White House is being a good negotiator because they have been for a long time. So I'm still confident we can get a deal.
Yeah. Man, Cody, what are you watching? Like, you're talking to the senators, like, what
Baseball.
You're watching baseball?
Anything but politics. No, I'm just kidding. I'm watching we're under this truncated timeline now.
Yeah.
where can we strike deals?
Right.
We have to strike the ethics deal.
Yeah.
To me, that's number one. Where else can we start to strike some deals? Patrick Witt at the White House, if you look at the law enforcement side, has done an incredible job in getting some of these law enforcement groups to move from, I oppose this because of some BRCA language or some DeFi language, into now supportive. If you look at the new text that was released a week ago, there was a whole new section on law enforcement. It's the most pro-law enforcement bill we've ever seen, an incredible consumer protection regime. I'm hoping that side is, yes, there's still some concerns from Democrats on BRCA, but I'm hoping that side is mostly, done. We have to see the ethics deal.
Yeah.
So I'm watching for over the next 24 hours, can we get an ethics deal? And hopefully tomorrow, by the end of this week, we start to get this bill on the Senate calendar. We start to have some floor timeline, and then we have the votes over the next week. If we don't, again, if we're sitting here a week from now and we haven't had any votes and this bill is not on the calendar and they're not going to take any action, I think we're in a really tough spot, and we're probably looking to the future and what rulemakings can do for us.
Yeah. Prediction markets have this about 30% of getting signed into law by 2026. Were you taking the over or the under there?
Over. I'm more bullish.
Really?
Yeah. With all the headwinds that we're facing, all the trials and tribulations of this, it reminds me a lot of where we were in Genius.
Okay.
People forget that Genius failed its first vote. People forget that it was after Genius passed the Senate, went back to the House. It was a group of Freedom Caucus Republicans that President Trump had to call in and advocate to accept this because they were going to oppose the bill. This reminds me of that. Nothing in Washington is done easy. It's a 616-page bill that is going to set the United States up for success for decades, centuries. I imagine this is what the Securities Acts of the 1930s were trying to get something of this magnitude done. It's never going to be easy, but no one has left the table. It would have been very easy for Democrats, to their credit, the fact that they haven't left, when this text came out last week and they didn't like it, to say, you know what, there's 2 weeks left, we're done with this. We're not going to get this done. Everyone wants to get this done. And until people leave the table, I'm going to be optimistic, because I really think there's a chance. We've been working on this for almost a decade. Now is the shot. We've never been so close. And I think policymakers, more than anyone, feel that. This is our opportunity. I still think it gets done.
Cody, you're the man. You're literally pushing this bill across the line with your bare hands on behalf of the entire industry here. We appreciate it, and we appreciate all the hard work that you're doing in DC, man.
No, I appreciate you guys. You guys are the ones getting the message out there, so thank you. Bummed Andy's not here, skipping out on us, but no, appreciate you, Robbie, always, and the whole Rollup crew.
You're the man. Yeah, it's a team effort. Glad we're doing it together. Guys, we're going to be right back with our next guest. Don't go anywhere. We're going to have a great rest of the afternoon here from Vegas. Be right back.
Yo, what's going on, guys? This is Etan with The Rollup. We're going to be patrolling the streets of New York City, getting answers to the questions that you guys have most. What are people trading? What are people investing in? How much do people actually budget? We're gonna have people from all over, all different investment classes, people who are dead broke, people who are dead whales, people who are just loaded. There won't be a mayor or politician to stop us on the streets. We're going to go everywhere, all 5 boroughs. We're taking over the 212.
We get deep, you know we get deep. We get deep, we get deep, we get deep hard. You know we get deep. We get deep, you know we get deep. We get deep, huh? We get deep, you know we get deep. We get deeper. We get deep. You know we get deep.
Yo, what's going on, guys? This is Etan with The Rollup. We're going to be patrolling the streets of New York City, getting answers to the questions that you guys have most. What are people trading? What are people investing in? How much do people actually budget? We're gonna have people from all over, all different investment classes, people who are dead broke, people who are dead whales, people who are just loaded. There won't be a mayor or politician to stop us on the streets. We're going to go everywhere, all 5 boroughs. We're taking over the 212.
We get deep, you know we get deep. We get deep. We get deep. We get deeper. You know we get deep. We get deep, you know we get deep. We get deeper, we get deep, you know we get deep.
Money, power, and big.
Welcome back to another episode of Stabled Up, our premier weekly show covering the ins and outs of digital dollars, stablecoins, and the future of decentralized finance.
The show is made possible by Frax, and Frax is powering the financial engine of the internet, powering FRX USD and Genius compliant stablecoins. This is the stablecoin super cycle made possible by Frax. Now enjoy Stabled Up, our weekly stablecoin. We are live from Rare Evo at the Aria Hotel in Las Vegas, Nevada. It is 110 degrees outside, and we are just on the precipice of the markets being that hot. We're here with our next guest, Las Vegas local. You guys know him well, friend of the show, Sam Kazemian of Frax Finance. And Sam is no stranger to the show and our Stabled Up segment. This segment is powered by Frax, and we are very, very, very grateful to Sam and Frax for supporting the show, supporting education in the space. Sam, I would say welcome to Vegas. How do you like it here? But you've been here much longer than the rest of us.
Maybe I should say welcome out west, and all the way here. It is 110, so I don't know if that's melting for New Yorkers, but welcome to Sin City. Frax is based out of here. For people who don't know, it's a great area because I think we'll talk about kind of the opportunities and things like that people are not seeing yet. But I think it's an interesting time. We're just discussing about how the market prices might not feel bullish, but there's so much good business deals and all these things going on that it doesn't feel like the prices and the deals are meshed.
Yeah. I mean, you've been here, like, through the ups, through the downs. You've been building through it all. And so you've seen a thing or two in your day. When it has, if you were to compare this with previous market downturns, previous market conditions, this one feels a little bit different. Anytime I find myself saying this feels different, it feels like, we had Bitmart shut down and BitMEX wound down, and there have been some casualties in the market, but we haven't gotten the big collapse. We haven't gotten the Terra Luna. We haven't gotten the FTX. People were saying strategy. Some of them are still saying strategy, but do you think we're going to get the big collapse here that some people are calling for? Other people have said that we're bottom. It's just a matter of time and a matter of apathy that we'll move through. But when you're looking at some of the business cycles that are out there, how much more destruction in these businesses? Because it feels like there's a lot brewing beneath the surface. Maybe clarity goes through, maybe it doesn't. But with tokenization, stable coins, which we'll get into, so much that is signaling to us that crypto's not dead. The industry is not dead. Whereas in previous cycles, it has felt like maybe this thing won't come back. It doesn't feel that way this time. Do you think, it's just because we haven't seen the big casualty yet, and then it will feel like that, or what do you think feels the same or feels different about this time?
Yeah, I mean, my personal view is there's no giant dead body under the crypto ocean, so to speak. It'll be macro, whether all this geopolitical stuff is a bigger deal than people think, or it's a smaller deal than it currently is. Who knows, right? That's the only mispricing. Is it too high or too low? And I think that's what we'll find out in the next 6 months. And in terms of where everything's going, like you said, this time feels very different because you can actually describe what the difference is. So I'll say it as you're seeing around here in Vegas. Before, in a bear market, you didn't see the Secretary of State or the senators or institutions actually participating on the ground floor. Here, I was actually just talking to the Nevada Secretary of State, Frax being based here, very apt, good conversation. A lot of opportunities that are not usually talked about. For example, maybe in the government during the incorporation process of a company in Nevada, which has been really hot after Delaware, right? Mm-hmm. You can get stablecoin account, a FraxNet account, a virtual bank account, all of these neobank things that are only currently applied to retail, right? Mm-hmm. Crypto traders, right? You need to bring them to other markets that are honestly bigger than the average crypto trader, right? That there's 200, crypto cards or whatever. That's a nice business, but they're all trying to attack the same exact demographic of like spend your stablecoin and trade and then like get a token reward, right? We're also building something there with a totally different outlook, right? And so like there will be a Frax card and a very interesting programmable card that won't look like any of the other 200 or so, right? That's going every
There's
week.
a lot of them.
And the point is, you need to bring this technology to new opportunities. And when you see the opportunities left and right, it doesn't feel like a bear market. When you're talking to the Secretary of State for a large state, and when you're talking to a senator, and then they're like, we need to bring this banking, this technology, this stable coins, this payment processing to all of these places, to our state, to our businesses, to our people. And they actively want to push that forward rather than being like, oh, well, let's wait like 2 years or whatever. They actively want to schedule calls, see if they can push this forward immediately. That's totally different. You could describe how different that is, right? And so there's also, obviously, Vegas being Sin City and the gambling capital of the world. There's also private sector opportunities as well, right? It spans both public and private.
Right. And so from a Secretary of State's perspective, which I think is a great framing because it feels representative of the actors that are now the market participants, and those typically have not been the market participants. But a Secretary of State is looking at increasing tax revenue for its state primarily, right? And Nevada is a great example because they generate so much income in taxes from the casinos, if I'm understanding correctly. And so, being such a primary income source, I'd imagine that both the private sector and the public sector are looking at new opportunities to increase their income. And by virtue of that, the Secretary of State is able to generate more tax income as well. And so the most intuitive example here feels like, well, the state's got its reserves, it's got a budget, and it's got money, and it can put that money into a stable coin and it can earn money from reserves. Are those the kind of opportunities that we should be thinking about on a state level? And if so, how does Frax help a state accomplish those goals?
Yeah, definitely. So that's a very interesting financial, structural kind of side of it. In fact, one of the things I think that will be pretty popular to do is back Genius compliant collateral, whether it's bank deposits or government debt, with stable coins that are strategically aligned, right? Like, let's say casinos want to integrate like Frax USD or some kind of stable coin, and in return, the deposits are in banks that actually do the pay-ins and payouts for the casino's normal business, right? There's just a lot of these structural things that creates much more positive flow and positive value across the entire ecosystem. There's also just efficiency, right? Like if you think of the Secretary of State, they incorporate companies, they collect corporate tax, incorporation tax. And what do you do when you incorporate a company or startup? The first thing afterwards is you need to open a bank account and run payroll and all this stuff. And that takes a while. What if you could just have that all done digitally, because you could have a neobank, something like FraxNet, something like all these other ones, right? There's a lot of these opportunities, but what if you could have these things just be instant? In fact, what if the real distribution is we just do the incorporation on behalf, and then you immediately get like a full account, right, for your business, and then running the payroll through stable coins, getting yield for however you want your business to borrow, tapping them into DeFi on the first day, right, when your company's actually incorporated. There's all these avenues that you could just bring the efficiency of digital assets, stable coins, payments, and hook them on the actual crypto rails from day one. Those are not really being explored, right? Like right now, we see like a lot of the conversations trading, which is great, right? But it's like perp design. It's like cards for crypto natives that want to borrow and use like Aave and stuff like that. Those are all great, but probably there's going to be 2 or 3 winner take most of that exact kind of feature and functionality, right? There's places where you can really create a lot more value from 0 to 1, in my opinion. What
is your take on these? Maybe you would call them neobanks, but I probably call them stable coin centric banks like Erebor, right? The guy from Andrill is like, kind of gone and done this. And it sounds very similar to what you're describing. You open up a business. If this gets integrated into the business registration flow, you can open up a lot more of these out of the box. And with the current regime, whether clarity goes through or not, an agency, a regulatory agency that kind of flies under the radar a little bit more so than the SEC and the CFTC is the OCC, which is in charge of all the banks, banking charters, these sorts of things. And they've been issuing charters for like crypto native companies to do these things.
They've been giving them out like candy, is what I say basically.
That's you're saying what we're all thinking, and so like, is that sort of the path for? Maybe not every one of these 200 card, you got a crypto card, you can spend your thing, right? But, is that a path that you and Frax are exploring to help integrate with some of the more, regulated bodies at B here?
Yeah, so actually it's great you brought up Erebor because they're actually our like newest partner that we haven't fully
Congratulations.
Announced yet, but we have a official FBO Frax USD reserve account. It's Genius compliant. They're an FDIC insured bank. We're doing some interesting things with them that we'll actually announce pretty soon. But exactly as you're saying, it's these innovative banks. Their software is fantastic, by the way. So I give a shout out to Erebor and Palmer, Jacob, all the guys there. And it's exactly the type of innovation that's needed. The important thing to think about, though, is that you have to have layers, right? Like if you want to accomplish a certain thing, you can get these charters. If you want to accomplish a certain other distribution channel, you don't need it necessarily. So for us, I think we'd look at it probably next year, and so that's kind of our timeline.
And I mean, you're a leader in the stablecoin space. You have been for a long time. And so, just from an educational point of view, because we have operators that listen to Stabled Up and they take away some potential guidance as far as how they should navigate some of the market conditions. Like, when and why would it make sense for a stablecoin company or a neobank to pursue the OCC bank charter route versus not? When does it make sense to do so?
Yeah, it's a good question. So it depends on what services you're offering and in what order you want to offer them, which is actually the other important thing. So, for example, if you want to be the direct actual entity that holds your own reserves, and you can actually potentially do some interesting things with them, right? Like for example, if we deposit Frax USD's Genius compliant reserves at Erebor, which is an FDIC insured bank, Erebor can obviously hypothecate them. They're an FDIC insured bank. They can give mortgages, credit creation, all this stuff. Could we work with them in a positive sum manner that creates interesting credit creation in a specific sector? For example, this is not actually official or anything like that, so it's just an idea. Imagine if we deposit 9 figures at Erebor, and then we say, hey, our predominant business base is in Nevada, for example, and we have tons of companies that have been using our neobank. Could you extend them credit based on your own risk analysis and stuff, obviously, right? But prefer credit creation in this region. That's a win-win-win, right? Triple win. That's like, for example, something. If you want to do that all in-house, you should probably pursue an OCC charter, right? But first, you could do it with a strong partner, right? For example, with us, the other thing that we're saying is we're working on this really novel card in the last couple months of this year, is hopefully when it'll come out in Q4. There's a lot of ways to issue cards, right? That's why there's like 200 of them or something like that, right? But we're trying to get a direct BIN relationship with Visa rather than using just an API endpoint or partner. We looked at a lot of them. A lot of them are great for different use cases. And so it goes back to your question, when would you actually want to go all the way for certain things? It depends what you're trying to offer and how quickly you're trying to actually offer it. So for cards, full 100% interchange pass-through, novel designs of a credit card that's hybrid with crypto, which usually they're all debit, right?
Yeah.
And actually that's the regulatory reason and also compliance reason, because other BIN sponsors would not be comfortable with saying, okay, I'm going to issue credit against some crazy type of architecture. Right. They're fine with saying, oh, okay, safe stablecoin, USDC, Frax USD, whatever. Fine, you could spend it as a debit card. So we had to go direct.
Yeah.
We had to actually take responsibility. We couldn't build what we're actually trying to build without going direct, which makes it harder, but it also makes it more technologically innovative.
Yeah, absolutely. And there are barriers to entry in some of these spaces, and sometimes for good reason, and it takes someone who's up for the challenge to overcome some of these barriers to entry. You reminded me of something that I saw on the timeline over the last 24 hours or so with respect to Visa, but also OpenUSD, which is out of tempo and has kind of been not so much talked about in recent times since it came out. And I think a lot of people and companies that originally endorsed Open US Dollar have sort of taken a more generalist approach, which is sort of a lead into what I want to ask you about here, which is a tweet from Lorenzo, and he's a friend of the show from ARK Invest's digital asset team. And he said on Visa's earnings call, the company was asked whether OpenUSD would compete with Circle and Tether and the established stablecoin players. And Visa's response was that Visa going forward would remain multi-coin, multi-chain. Our role is not to pick winners. Our role is to help clients connect to the stablecoin ecosystem securely and at scale, regardless of which stablecoin network or infrastructure ultimately gains adoption. And so, given that a lot of companies signed off on this Open US Dollar thing, it seems like a lot of them don't want to handicap themselves when it comes to accepting stablecoins across multiple networks. What is your perspective on the way that card settlement networks like Visa and MasterCard and Discover have been approaching the stablecoin space? How has it evolved? And given that now you're seemingly enter the space, and please correct me if I'm wrong there, but what is your now positioning as it relates to some of the incumbent card providers and settlement networks?
Yeah, that's a great question because actually, I guess as a background, since starting yesterday, I should say, Frax has also joined the OpenUSD Alliance as probably the newest member, but this is a great question because that also applies directly to us. I think every single company, depending on whether they're an issuer of a stablecoin like Frax, card network, they have different priorities in what they see the value that they can both bring to the OUSD Alliance and Consortium and then also get out of it, right? For us, for example, when we were talking directly with the Stripe and Bridge team that created the Consortium, right? The idea for us is obviously we issue our own stablecoin. OUSD being Genius compliant means that we can essentially accept it one-to-one. We would like to actually be able to do one-to-one mint and redeems and actually have this clearinghouse ability, offer it in all of our products, although our credit cards, like the kind of the way that it was said on the Visa call that you quoted, if someone wants to spend OUSD for a specific esoteric reason, they're more than happy to, use our product to spend it, right? For us, what's most important is being able to offer one-to-one orchestration, one-to-one on-off ramping, one-to-one system with OUSD, and that is actually a net value add for OUSD if in geographic areas and sectors places use it, right? Same thing with like card networks. They probably don't want to be extremely opinionated, but they would love to have the economics, the one-to-one mint and redeem, additional integration, APIs, and all these things. The power of the consortium is not necessarily everyone having like a strategic alignment of pushing this over another. It's everyone having a strategic alignment to at least accept it at the same time, which is half the battle, right? Okay. Because imagine you're starting a stablecoin that's not in a consortium. You'd have to have Visa accept it directly as a settlement stablecoin on VisaNet, right? You'd have to have all of these like BlackRock, mint and redeem assets with it instead of USDC. Well, now they do OUSD and USDC, right? That's a very substantive thing that I think people are missing. who has the actual incentive strategically to push OUSD early? Probably Stripe and the Tempo team, right? Yeah. And obviously they're very capable, very, very smart team. And I think there's some cool things that we can build with them in DeFi and neobanking together. But they have the farthest alignment, obviously. Everyone else has an alignment to make sure that it's accepted, it's integrated, it has unit economics. And that is a very important thing. I think people are miscounting that. Another way to think about it is if everywhere accepts a stablecoin as a unit, the less likely it is to actually be redeemed in any one particular place, because you have to make upstream payments that are accepted also in OUSD. For example, if we're going to mint BlackRock, BUIDL or something like that, overnight we might hold the OUSD because we know the next day BlackRock would accept it because they're part of the consortium, right? There you go. Now the time duration of someone holding billions and billions of it is increased, right? And all that stuff adds up. So I think it's a very substantive thing, but people might be overestimating consortiums. They're not private shareholders on the same cap table, right? Obviously.
Yeah. And I think we've had previously a similar conversation, and you've explained how the creme de la creme for a stablecoin is to be accepted as money. And if you can get that, you've essentially, gotten yourself into the echelon of staying power, sustainability, and these sorts of things. And it sounds to me that the more cohesion there is in the stablecoin market, the more winners there are. In the sense that, and the question that I'm getting to is ultimately, are you like a stablecoin monoist or a stablecoin pluralist, just in the sense that, like, is there going to be one blockchain or many blockchains? Like, it seems to me that if there are working models where there are one-to-one redemptions and there's partnerships and everyone can have their stablecoin, but they can all be redeemable for one another, it creates a cohesive ecosystem of stablecoins that if one of them is accepted as money, they're all accepted as money because they're all equally redeemable for one another. Is that a vision that you have to get into, like, the positioning of, like, accepted as money? Is that sort of ultimately where we're headed? And is the thesis of ultimately arriving there, is that correct? That everyone sort of forming these partnerships and creating a redeemable network for one another helps to achieve the moneyness of stablecoins?
Yeah. I think to answer your direct question, as a monoist or pluralist, I guess it depends what you mean by plural, how many, right? I'm an 80-20 type of person. I think there will be a few that are 80% of the entire stablecoin market cap, which I think is going to be trillions by 2030. Like at least a couple trillion, 3 to 4 trillion is still Scott Besant's estimates, right? And then the 20 other percent is the long tail, but there will be a lot. So I guess you could say closest to a pluralist, and hopefully Frax USD is in that couple 80%, right? I think 5 or so probably that makes up that 80%, and it would be my guess. The way that you said it actually is really smart. Maybe the next Visa network or MasterCard is all of these consortiums being joined, like Frax being in it, Circle being in it, the OUSD consortium, FraxNet, the one-to-one clearinghouse. There's other clearinghouse companies that have relationships. Like we have a relationship with the Better Money company. It's a new clearinghouse company, and they do Frax USD, they do USDC, they do all of these. And so that network connection of all of them, maybe that is the next VisaNet, right? Maybe that is where most commerce will be in like 5 years, right? I think that there will be a lot of stablecoins. We also do an issuance system. We issue Sonic's USSD, Somnia's USDSO. We're talking to a few others, and one of the first things that they would get out of all of this is immediate one-to-oneness, full rails, all of the integrations that Frax USD has. Maybe not as many as like DEX things across networks, but in their network, which is exactly what they want, they reign supreme, right? And so that network now connects one-to-one and orchestrates with everything that we've built. So I do think it's an 80-20 rule. I do think that the next kind of VisaNet kind of thing is being built right now. Technically, it might be a super network of Visa, because Visa's in this consortium, right?
In the consortium as well. And so Visa could, in theory, partner up with other networks that would have, right, they could partner up with a MasterCard or Discover, where they were typically seen as competitors, but now in this new stablecoin space, they could be seen as partners.
These routes are way more open than people think. I know there's like concerns of like, oh, a consortium made of like US tech companies and stuff like that. But I think you're right in that these consortiums, right, the asset is self-custodial, right? Going between VisaNet or MasterCard, if you like swipe at a different place or there's overcharge or FX fees that there's no way you could get out of. With all these, you could withdraw it to your Web3 wallet. Mm-hmm. You could deposit it in like FraxNet. We'll do one-to-one. If the others don't, we'll do one-to-one. Or maybe one time we might not be able to or something, they probably can. You could withdraw it. And so the actual control and custodial relationship is totally different. And these are open networks, even though, you know, Genius requires blacklist and things. It's very, very much a big step up of what it was before.
Yeah. We've said on the show multiple times, I think every show we do mention Frax at least once. And so typically it goes like, you know, Frax is open, stable, borderless, and Genius compatible. Open, stable, borderless. I think you know are all relatively straightforward. It's the Genius compatible part that I'm just curious to hone in on a little bit more, because with all this clarity conversation, it was we were reminded recently that there's still rulemaking that is happening with Genius. And so when you say that, you know, Frax is Genius compatible, what does that really mean, and how much does that help to separate it from some of the other stablecoins that are out there that don't fall into the Genius compatible category?
Yeah, it's a great question, because I was hoping the OCC would do their rulemaking on July 18th, but like I pushed it back to I don't even know when now. It might even be early next year. Don't quote me on it, but what we mean, and I think what most people mean, is to the best of our understanding and our counsel and Claude, right?
Gotta put Claude in there these days.
Yeah, I have to be honest, right? The assets that back Frax USD and the way that it's custodied in segregated FBO accounts, and the fact that we can redeem the entire supply, and they're entirely custodied by qualified custodians, money market fund securities, treasuries, and FDIC-insured bank deposits, we think it matches the Genius Act. Now, obviously, no one's been licensed, as you said. The guidance hasn't even finished coming out, so we can't
that's why
say
we say
Genius
compatible and not Genius compliant.
Exactly.
There's not even rules that would say what is compliant, which is exactly what you're saying, but to the best of your ability, you've used your best judgment to make sure that it is compatible with the rules that are most likely to be put into place.
Exactly, and actually the importance of that can't be overstated, because there's a lot of partnerships and everything that we'll announce towards the end of Q3 and then into Q4 with either states or private sector well-known companies that probably everyone's heard of, and maybe people have stayed at in Vegas when they're here. But the most important thing when they want to hold a stablecoin in their reserves for like payouts or corporate uses, or accept it as pay-ins and not immediately convert out of it on the spot, is this thing regulated, or is it like compatible with it when Genius is licensed and regulated and everything like that. And if you say, oh, well, it's like a decentralized stablecoin or something, that's a deal breaker, right? And that doesn't mean they can't be good. Decentralized stablecoins can't be good on-chain digital assets, synthetic dollars, yield-bearing dollars used in DeFi and everything else. But this anchor of a real digital dollar that is a stablecoin that companies, states, all of them are fine with holding more than a millisecond before converting out of it. That is a hugely important thing, and we can say with confidence from experience that there will be a lot of companies that have agreed to hold Frax USD, but also other Genius compliant stablecoin, just from the talks that we've had. So we know this exists multiple like places.
Yeah. Well, Sam, as always, man, appreciate the time. You're extremely thoughtful. I love how big we think when we come on these shows. I feel like we ultimately get somewhere where the space itself wasn't there before we had some of these discussions. In particular, the way that some of these networks could be constructed. It feels like we're still early days, which is incredible because we've come so far. You've come so far, and you're a tremendous partner of the show. We really appreciate your support, and we're really excited for the future here.
Thanks, man. Yeah, it's great to be on. Enjoy Vegas. It's good we have AC here.
Yeah, absolutely. Thanks, Sam. Appreciate it, man. That's been Stabled Up, episode 43 with Sam, with Frax. We're going to keep Stabled Up rolling and be back with our next guest after this. Guys, we'll be right back.
Yo, what's going on, guys? This is Itan with The Rollup. We're going to be patrolling the streets of New York City, getting answers to the questions that you guys have most. What are people trading? What are people investing in? How much do people actually budget? We're gonna have people from all over, all different investment classes, people who are dead broke, people who are dead whales, people who are just loaded. There won't be a mayor or politician to stop us on the streets. We're going to go everywhere, all 5 boroughs. We're taking over the 212.
We get deep, you know we get deep. We get deep, we get deep, we get deep hard. You know we get deep. We get deep, you know we get deep. We get deep, we get deep, you know we get deep.
Money, power, I'm money, power,
We are back. We're live here with our grand finale, our last but certainly not least guest from the Lighter team. We've got Maggie Parsons, who is the head of operations at Lighter, and we're gonna close the show off with a bang. And so we've had Vlad on a number of times. Vlad is, he's such a deep thinker, so it's incredible to have him on. And I think it is evident in the way that Lighter's architected, the amount of thoughtfulness and care that you've put into the protocol itself, from the security all the way to the user experience. So we'll get into it. But Maggie, it's your first time on the show, so welcome.
It is. Thank you for having me.
Absolutely. Thank you for coming. I'd love a little bit more on how you ended up finding Lighter. I've got a bit of a background here. You were at Lunch Club, which was an early rendition here. Also product manager, PS Audio Business Management at Enterprise. So a bit of a tour, but these things are sort of general business considerations. How did you find digital assets, and how did you find Lighter?
Yeah, so I've been working with Vlad now for almost 7 years. I kind of fell into tech in this space through a friend that I went to college with, and yeah, kind of joined the early Lunch Club team. I was employee number 7 or 8, I think, and was working on various things, kind of ops related with Lunch Club. And then, a few years in, we decided to pivot into the crypto space. We've been building Lighter now for the last 3+ years, and I've just kind of been along for the ride. I think it's been a really unique opportunity. It's not every day that you get to build multiple products, multiple companies, if you will, with the same core team.
Yeah.
And I think, we all love a challenge. We all love solving hard problems. And so I wouldn't say I necessarily intentionally got into digital assets and crypto, but I think, I was really into working with this team. We have an amazing engineering team. They're brilliant. Vlad's brilliant. It's been such a pleasure working with him and kind of being on this journey with him for the last several years. How could I not? I just had to stay, and I feel so fortunate to be working on the things that I am and kind of at the frontier and cutting edge of innovation and technology and finance, and yeah, it's a really exciting time.
So I want to hear a little bit more about the evolution of Lighter, maybe in the early days, because Vlad I saw a clip of Vlad recently on Twitter talking about how, Lunch Club was sort of this early AI, networking platform. Yeah. And this is effectively the same core team, as you mentioned, the same core technology, as I understand it, that is now Lighter. And so as I was thinking through this, I just found it fascinating, the generality of this protocol and the thinking behind yourself and Vlad and the core team, because at the fundamental layer here, this is a matchmaking engine.
Exactly.
Right? And so maybe you could just talk us through what were some of those conversations like when it was like, okay, we're working on this networking platform. It's almost like an AI-enabled LinkedIn, and it's helping, business professionals network and find one another and kind of matchmake, people that could do business with one another. Now you're matchmaking orders, you're matchmaking bids and asks. What were those conversations like, as you were going through this transition?
Yeah, you kind of spot on. One of the things that our team clearly does well is building matching engines. So that's kind of been a consistent theme. But I think, kind of early days of Lunch Club, we were decently early to the AI boom, if you will. And we kind of built this product. Originally, it was matching people in person for professional development, networking purposes. And then, when the pandemic happened, I joined, I think, 6 months before that. And when the pandemic happened, we kind of were forced to pivot a little bit. So we switched the model to video meetings. It did very well through the pandemic. We raised some capital. And then I think, 2021, end of 2021, early 22, I think consumer marketplace just wasn't doing super well. We still had, 3+ years of runway that we had raised in our Series A. And I think, our board and our investors were really supportive of us just trying new things. The Lunch Club wasn't necessarily the moonshot that we had planned on. We tried a lot of different things. It was a really interesting, great product, but I think it was just a little early. And so, kind of with the support of our investors, we kind of tinkered with multiple different things. I think at the time, there was definitely an interest in crypto, but this was, the entire team was kind of involved in figuring out what we were going to do next. And I think we very much credit Vlad to, not just saying this is what we're going to do. Like it was a conversation. We kind of came to consensus around what it was that we wanted to build together and what, hard problems we were going to solve. So I think, just where crypto was at that point, how popular it was becoming, the interests of some of our engineers when it comes to, tinkering with smart contracts and cryptography, and then Vlad's background kind of starting his career in TradFi and, really experiencing some pretty big market moments there. I think crypto is just a really natural fit for our team. And again, like you said, we built a matching engine for Lunch Club and we built a matching engine for this. So I think it all just kind of fell together quite nicely. But we were all part of that decision and figuring out, what the next step was going to be. And we had great support from our investors as well.
It's evidence that the team and technology is incredibly nimble.
Yeah.
And the capital preservation strategy is extremely prudent to maintain runway, through this difficult time. COVID was a difficult time for businesses all over the world, and have a pivot, if you want to call it that, into a world that was almost completely unknown despite the matching engine technology, and still have the capital and the thoughtfulness to ultimately execute and now be proven correct and be proven successful. It's a really cool story. And I just can't help but think, there's so many companies out there that didn't have the discipline or didn't have the thinkingness in order to, continue to stay determined through the tough times, and maybe, decided to wind down rather than, pivot into what could be a completely, new territory. So kudos on this. And now you guys have built, a Goliath. And so before we kind of dig into another topic here, I'm just curious, is there another pivot? Like what? It seems like you guys have kind of hit a nice product market fit here.
Yeah.
And so I take it the answer is probably no, but I'm just curious how you might even approach that question.
Yeah, I think we've definitely feel like we've hit good product market fit with this one. I think this was just such a natural product for our team to build. We have an engineering team full of, Olympiads basically who just thrive on solving hard problems. And, Vlad's talked a lot about kind of the core pillars that we kind of were our North Star when we built Lighter, so verifiability, security, low cost, low latency, composability within the rest of DeFi and the Ethereum ecosystem. And so I think, our team has done a great job of executing on that. Lighter's been, we started building about 3 years ago. It took us 18 months to really kind of build the core technology and to launch. And, there were others that beat us to market. But at the end of the day, I think we took the time to really solve the hard problems, and that's paying off at this point.
Yeah.
And so it's been great to see, especially, more recently, kind of our thesis being proven.
Yeah.
And it's been an exciting time. I think there's a world of opportunity ahead of us. The team's really excited about building options. The partnership with Robinhood, that's been very exciting. And, I think we're at a time, we're a US-based company. I know Vlad's been pretty outspoken about that and kind of our thesis there. And I think from a regulatory perspective, we're at a really, really important and interesting time in this journey. So it's been exciting to work on those things.
We certainly are. I mean, there's multiple super cycles that are happening right before our eyes, and they're converging. And it feels as if, Lighter is one of the teams that's at the convergence of the tokenization super cycle, RWAs, as well as perps, right, at the center of attention here. Robinhood, you guys are partners, and this has sort of been taking the world by storm on multiple fronts. You got the meme side as well as the RWA side, and so I'm curious how you're approaching this partnership with Robinhood, given their success and given that they've got sort of this two-sided approach. Also, I just want to shout out, I learned that the Robinhood tokenization model is really fascinating because it's almost like a tokenization on demand. An order comes through, they tokenize it, and then deliver it to the end customer. Just curious, how are you thinking through partnerships with Robinhood and continuing to grow the proliferation of assets, RWAs on chain with some of the largest partners in the world?
Yeah, I mean, I think one thing our team does really well is build great tech. And so I think, when it comes to working with partners like Robinhood or Telegram, anywhere where our tech can lend to an existing user base that they have, like when we can blend what we do well with what they do well, that's kind of lightning in a bottle, and we like capturing lightning in a bottle. And so I think, we're really putting a focus on partnerships where that is the case. And I think there's been no better example. The Robinhood team has been phenomenal to work with. They've been easy to work with. And so I think we're just excited to kind of continue exploring more of these, and there's a whole world of opportunity out there when it comes to folks that we can partner with and leverage our tech, and perps and real world assets, tokenization, that's just the start.
Any generic, given that you've now been able to capture lightning in a bottle a couple of times, is there any a word of advice? How have you how have you been able to do this? And for other DeFi teams that are out there and they see you working with Robinhood and they see the success of Lighter and the perps, market as a whole, what would you say has been the cause of your success?
Yeah, I mean, I think we have a great BD team. They're hustling all the time. But I also think, I know Vlad's talked about this before, our engineering team, we have, a number of forward deployed engineers, if you will. So they're very hands-on with the customer. They're very hands-on with these partnerships. I think they're able to execute on these partnerships. And we've also kind of been able to put ourselves in a position where we can now repeat these things much more easily, right? So we've basically set it up so, we kind of did the heavy lifting up front for one of these, and now it's just very kind of repeatable for the next ones moving forward. So we're able to move very quickly.
And I mean, it again speaks to the agility of the team in order to pivot and then find success. It shows that, there are very generic patterns that you've been able to recognize. Matchmaking is matchmaking, whether it's AI, networking systems, or, it's matching in an order book. And so similarly, you've been able to replicate success across, a wide range of ideas and disciplines. Another one is kind of mastering the token. And I'm curious to talk a bit about the burning mechanism and the buyback mechanism that you've implemented, because this can seem very foreign to a lot of teams that are out there. There's been teams that have done incredible tokenomics, but not so good on the protocol side, and then vice versa. There's been teams that have done really well on the protocol side, but not really well on the tokenomics design side. I think Lighter has done a good job on both. Adoption is growing. The token buyback and burn model, people seem to like it. And so it now seems like these can go hand in hand. And so I'm just curious, as you've shifted towards these permanent Lighter lit burns, it's funded by protocol revenue. This is what I think the market is demanding. They want burns, they want token value accrual, but not via token emissions. They want it via revenue, and then they want a very predictable and assured method that they can now use to value the token going forward. And so, how, just generally, a message to token holders, how does finance ensure consistent value accrual for token holders when it comes to making sure that this mechanism is very predictable? As revenue continues to grow, this value will accrue to token holders. How do you make sure to communicate that, and ultimately, how valuable is that for token holders?
Yeah, I think, programmatic buybacks is somewhat of a standard these days, I think. I think it's, we're seeing that much more frequently. And I think that's something that we committed to very early on. Vlad, I don't know if you saw it, but he recently put out a piece that kind of talks about how we think about equity versus token. And I think, we've always been very committed, and we've communicated to the community, and, have just kind of stuck to all value that Lighter generates accrues to the token, right? I think when we raised kind of our last round of VC funding at the end of last year, kind of ahead of the token launch, everyone was aligned on that thesis. So, investors who kind of were around previously, if they, weren't interested in that, they had an opportunity to get out, and at a great price. But I think at the end of the day, our entire cap table is very aligned on value accruing to the token. And so the burn that we did recently, it was just formalizing, kind of what we've been communicating around that. And, we did it on Ethereum. We did it very transparently. And so I think, it's just, we've kind of committed to that and we're following through on that at this point in time. I think when it comes to our structure, we're a US-based company.
Right.
We're a regular C Corp. We don't have a foundation. We don't have a separate labs.
Yeah.
Like, it's all just the same entity. And, this is something that I thought through quite a bit over the, 2 years prior to our token launch. Was really like, I think we saw the trend of setting up a foundation and kind of separating these things. And a lot of that happened for regulatory purposes. I think there was a lack of clarity. Building here in the US wasn't, there was a little bit dangerous in launching tokens. There was just, there was a lot of gray area around it. And so I think, certain projects did what they did to continue to be able to operate and, somewhat out of necessity. But I think, we kind of had the benefit of going back to first principles and kind of really thinking through the structure. And we've been very committed to building here in the U.S. and being a U.S.-based company. And, we placed a bet on the regulation kind of coming around. And, I think we were fortunate in timing and kind of being able to kind of go back to first principles on this and not necessarily just take the same playbook that others did. There's certainly, a lot of valuable lessons that we've learned from folks who have launched tokens before us, and we've adopted some of those things as well. But we are very committed to all value accruing to token holders. We have alignment with our investors on that, and that's something that we're very committed to moving forward.
Yeah, and there certainly is the benefit of hindsight, as you've seen, so many tokens launch before the lighter token, and then you had the benefit of, patience in not launching the foundation prematurely and launching the token prematurely, right? That set up easier and simpler corporate structure that allowed the token to ultimately flourish rather than this split token equity vehicle. And so, as now that you're live and the token's live, there's not so much more hindsight. Now it's sort of a bit of a paradigm shift into being more so of a pioneer for perps in the US. I realize Vlad is, part of the CFTC Innovation Council.
Yeah.
And I think you have also spent, a considerable amount of time working on the regulatory front. What are some of the operational and regulatory considerations that you're making now, given that this is sort of happening in real time and you don't have the examples of hindsight at your disposal? How has the operational strategy shifted, for some of the decisions that you're making going forward?
Yeah, certainly just navigating this in real time and taking, new facts, new circumstances, whatever's happening on the Hill, any advancements that there's, with clarity. I think figuring out what it looks like for us if clarity passes versus if it doesn't pass. I think we've had a number of really amazing conversations with the CFTC over the last several months. They've been incredibly engaged. This is an administration and an agency that is very pro-innovation. They're very forward-looking. And so I think it's been great. We've kind of taken the approach of helping educate. So Vlad and I have spent a lot of time with folks on the Hill, kind of educating them about Lighter, how our technology works, how we think about, the future of finance. I think one of the really important things, especially when it comes to DeFi, I think it can be very scary to regulators because, the focus and kind of the narrative around it has always been like it's just used for illicit finance. But I think when you really get into the value of open source technology and the value of on-chain technology and self-custody, it ends up being more of a friend and a tool to the regulators, right? Like you can catch things much more in real time. Things are happening in TradFi every day. The whole Bernie Madoff situation, right? Vlad's talked about that too. If all of that was on chain, it's a lot easier to capture that in real time. Yeah. And so, I think we've just been trying to take the approach of helping educate folks in Washington and really try and kind of push forward on figuring out how to be licensed here in the US. I think we've always kind of had much more of a forward-looking and approach when it comes to regulation and how we think about regulation. We've always been very invested in and committed to trying to onboard institutional liquidity.
Yeah.
And when you're talking about, institutions, they have whole compliance teams, and it's important that you're kind of thinking through the regulatory elements and implications of that in order to try and kind of onboard some of these players. And so, that's something that we've been very focused on, and we continue to kind of engage with the CFTC and working towards getting licensed so that we can open to the US market, kind of work on partnerships with folks that are based here in the US as well, and kind of bring perps in a decentralized way here to the US.
A lot of the winners that seem to have continued to just, win over the years have been the ones that have sort of preemptively regulated themselves.
Yeah.
And those are the ones that ultimately, were able to take best practices and then set the example when it came to the rest of the industry adopting those standards. Now that you're in that position, I'm curious, you've got this partnership with Robinhood, I think is a great example, because they have made RWAs and memes, but we're going to keep memes to the side just for the sake of this question, as part of their strategy that they want to continue to scale over the years, and I think Lighter is part of that strategy as well. And so as you're thinking through scaling access to RWAs and scaling access to perps, together with Robinhood and in general, how have you been, I guess regulating yourself is one way to put it, but also how have operations, regulatory, and compliance all sort of worked together so that you're ensuring that you're not, and a lot of companies have taken a less prudent approach because of the profit motive, and they've said, hey, we can make a lot of money by sort of selling out our user base, right? And then they churn their users, but they make a lot of money, and then they're off in a year or two. And you've taken a much more prudent approach. And so how do you manage the listing process, some of these features, product, to ultimately make sure that you're maintaining fair market access, you're protecting your customers, they're getting access to the products that they want, but you're doing so in a way that maintains compliance and regulatory reasons, even in the absence of there being clear rules of the road before clarity, before there are clear perps legislation?
I think building trust is really important, and that is something that, especially when you're talking about assets, finances, things like that, it's really important that you build trust with your users. And so making sure you're doing things that are, testing and ensuring the security of your platform and, the verifiability of transactions that are happening. Those, we've done those things through the way in which we've built our tech and choosing to build on top of Ethereum, which, I think has been around for 13 years and for the last 10 has operated basically without any issues. Like, those are really important design and technical considerations just to build a baseline level of trust with users. And I think, transparency around our intentions and the fact that we do think regulation to some degree is important. These kinds of markets should be regulated, not necessarily just like, here's existing regulation, let's slap that on and it works. I think, smart regulation and working to kind of get to, new market structures and things like that is definitely important. And I think, working with a partner like Robinhood, they have great brand recognition. They've built a lot of trust with users. And so things like that, I think, incrementally kind of help you build that. And yeah, I mean, there are definitely projects out there that kind of prioritize more on the economics of what they've built. But I think, we're building for the future. We're building for, what we see as the convergence between TradFi and DeFi. And so there are certain things like security and verifiability that really matter.
Yeah, and you mentioned Ethereum. I think that is just something that has gotten lost in the recent rhetoric online has been the foothold that Ethereum has in the convergence between TradFi and the on-chain economy. It's still the most stable coins. It's the most developers. It's got this really, really strong fundamental case as to why it makes sense to build there. But I'd also just love to hear from your operational perspective why Ethereum made so much sense and why it was so important to build there, and also how you've been able to take what seems to be a significant amount of market share in the Ethereum perps landscape. It feels like Lighter is the go-to perps exchange on Ethereum. How have you been able to achieve that?
Yeah, I think, again, going back to the point around security, when you talk about building an exchange and building trust with users, it's really important that you're doing that on a secure layer. I think at this point, we kind of look at Ethereum as the settlement layer for the future of finance. And so I think we're committed to building on Ethereum. I think a lot of, DeFi and assets are on Ethereum. So, having composability with all of that and being able to leverage assets on one platform as collateral on Lighter, there's a huge value proposition there.
Yeah, that is massive. Maggie, I think that's it. Where to next? Rare Evo Las Vegas, you're our final. I'm getting word that we might have one more special guest after. I don't know. Our producers are doing some things behind the scenes. We'll see what happens there. But what's next for Lighter? Just what's next for that the community might be excited about?
Yeah, I know the team's really excited. I mentioned earlier they're working on building options. That's, I think, another hard problem that they're really excited to solve. And I think there's no better team to work on that than ours. Yeah. But one of the things that I'm really excited about personally is just continuing to kind of work through the registration process and engage with the CFTC on trying to get to the U.S. market. That's a really exciting time.
Awesome. Maggie, thank you so much. Congratulations on all the success with Lighter. And it's been an absolute pleasure chatting with you.
Thanks for having me.
Absolutely. Thanks for coming on. All right. Guys, we're going to be right back, and then we're going to close out the show. We may or may not have a special guest. I don't know what's happening. It's been 7 hours with these bright lights in my face, and the producers are saying that we've got one more guest. So we're going to see what happens. Don't go anywhere.
Yo, what's going on, guys? This is Eton with The Rollup. We're going to be patrolling the streets of New York City, getting answers to the questions that you guys have most. What are people trading? What are people investing in? How much do people actually budget? We're gonna have people from all over, all different investment classes, people who are dead broke, people who are dead whales, people who are just loaded. There won't be a mayor or politician to stop us on the streets. We're going to go everywhere, all 5 boroughs. We're taking over the 212.
We get deep, you know we get deep. We get deep, we get deep, we get deep hard. You know we get deep. We get deep, you know we get deep. We get deep, we get deep, you know we get deep.
Money, power,
We get deeper. We get deep. You know we get deep. We get deeper. We get deep. You know we get deep. We get deeper. We get deep. You know we get deep.
Get into it. Leo, we are live. Guys, we've got a special guest here. So you introduced yourself as Satoshi.
Yeah, that's me. I'm the guy.
You're the guy.
I am the guy.
And so I have so many questions here. Okay.
Sorry about that.
No. It's good. It's good. I like having questions. And so, okay. You said you haven't really been in public in the last 14 years.
Not really, just never.
Never in public the last 14 years. Let's start there.
Okay.
So 14 years ago, let's rewind the clock.
Okay.
14 years.
Or more.
What's
You're
that?
Or more. You're
Or
welcome.
more. You go ahead. Let's start. I want to start where you want to start. Let's start from the beginning, and I want to hear your story.
I don't have any speeches or other stuff. If you have questions, I'm happy to answer them.
Okay, so I
do well in a QA environment, but yeah, I don't have a pitch. I mean, one thing in particular about me, whether it's back with Bitcoin and blockchain or my new tech, I never promote myself. I never say for anyone to buy anything I've made. No advertising, no marketing. Yeah, I just make stuff.
Okay.
That's it.
I just want to.
If people find value in something that I made, great. That's wonderful.
Okay. I just want to make sure that I'm understanding correctly. When you say you are Satoshi, you mean the inventor of Bitcoin?
Yes, that's correct.
Okay. Given that the inventor of Bitcoin and Satoshi's identity has remained a mystery for the entirety of its existence, the
Actually,
last 14
I revealed
years.
my identity October 31st, a year and a half ago.
October 31st, a year and a half ago.
Mm-hmm.
What happened on October 31st, a year and a half ago?
So I spent the last 15 years, after basically April 2011. Let me back up one sentence and say Bitcoin and blockchain, that was a proof of concept.
Okay.
It did not have the right DNA to be this is crazy. It was just a very basic proof of work to demonstrate having multiple write masters on a network where you can write a value to any of those nodes and then have that information replicated. Yeah. Cryptocurrency is just a balance in a wallet because there are no coins, it's just a number. So in terms of proof of concept, if you can write that number to any one node and it replicates to the others, hey, proof of concept proved. But that never had the right DNA, for many hard stop reasons. It could never be a global monetary system. It could never do retail transactions. Nobody's going to stand in line at the grocery store and wait 10 minutes for settlement, paying with Bitcoin or something. So now my new tech, the underlying engine is called Fractal. And I spent the last 15 years on that. I also made a global monetary system, full banking infrastructure, point of sale. If you look up a monetary system, like in Wikipedia, there's a whole laundry list of topics and pieces and parts that need to be implemented. Unlike Bitcoin as an example. It just does one thing. It's not robust. There's no fraud protection. There's no rollback capabilities. A lot of things. So, yes, for the last 15 years, I spent more than 30,000 hours at my desk making what I call the replacement. So, for example, blockchain, you can write one block at a time, sequentially, not asynchronously, just sequentially. And on top of that, it takes 10 minutes settlement per block. Unless, whatever it was years ago when traffic was really high, it would take 30 minutes, 40 minutes, 60 minutes. So the new engine, Fractal, instead of doing one at a time, it can do 34 billion simultaneously transactions. And full settlement anywhere in the world in a third of a second. So the difference is 10 minutes, one at a time, or third of a second with 34 billion at a time, simultaneously.
Okay, so that's fractal. Before we get to fractal.
Oh, we don't even have to talk about that.
Okay.
I'm just here to answer your questions.
So.
Right, so no, I've never been in public. The only reason I'm here, that gentleman right over there, was, was coming to the conference, and I like to play poker at Aria. So I've been here for hour and 10 minutes. So I said, hey, I'll come over with you, and just a little bit curious to see all the, I guess you'd say derivative thoughts based upon what I created originally.
So when you say you haven't really spent too much time in public over the last 14 years, no time in public.
Not too much, zero.
Zero time in public over the last 14 years.
Right.
And you say you like to play poker at the Aria.
I do.
Help me understand how you can play poker at the Aria and not be in public over the last 14 years.
Well, I guess admittedly, everybody that works in the poker room, they all know who I am.
And they know you as?
Satoshi Nakamoto.
Satoshi Nakamoto. And so...
They know what I made.
How?
But they respect my privacy.
Okay.
Yep. Yeah, I don't play large stakes or anything. You
just like to play?
Yeah.
You have a
That's
MGM...
Player's card.
Player's card. And it says Satoshi Nakamoto.
Ooh, cover the numbers.
Oh, cover the numbers. But it says Satoshi Nakamoto on this player's card.
No, it's actually a legal identity.
It's a legal identity.
Yeah, nobody bothered to look for it. Yeah, I have a legal DBA. I am Satoshi Nakamoto. Yeah.
And so you change. We don't have to get into your identity as far as like. But did you change your name from something previous to? Because you don't look particularly Japanese. And so, how did you get
that was from the white paper.
That was from the white paper.
Right.
And so you have you didn't change your name, but you have a doing business as
correct
Satoshi Nakamoto.
Yeah, like an actor, things like that.
And how did you come up with that name?
I'm sorry, I was just laughing about, I don't know, whatever the guy's name is. I don't even remember who he is. Fake Toshi guy.
Craig, right?
Yeah, that guy. Jumping around with the samurai sword and telling some story about like, 400 years ago. Some convoluted bullshit. Yeah. No, it's actually really simple. I was watching Die Hard. Nakatomi Plaza. Literally 30 seconds of wordsmithing, you have Nakamoto.
I almost spit out my coffee.
Sorry. I mean, the truth is so much easier than some convoluted story. And then Satoshi, I had this awesome Suzuki Hayabusa.
Okay.
Yeah, motorcycle.
Motorcycle, yeah.
Yeah. It takes Suzuki, once again, 30 seconds of wordsmithing, and we have Satoshi. And that's it.
Okay.
It's not more complicated than that.
I've got so many. The longer that we go on, the more questions I have. I think you can. How do you know this guy?
He is a brilliant, brilliant person. And
is he really Satoshi? The inventor of Bitcoin.
Yeah. Yeah. One of the community members.
From what community? The Bitcoin community?
No, I have a little Telegram group.
You have a Telegram group?
Yeah.
What's that? Vertison Group is the name of the group?
No. Vertison DeFi.
Oh, Vertis DeFi.
V as in Victor. ERTISAN.
Vertison.
Yep.
Okay.
Yeah. This gentleman in the Telegram group, I guess spent like the last 6 months trying to prove or disprove my identity, which for me is, it's ancient history.
So
But he wrote a book that's 200 pages.
Book that's
definitively proves. He found all the Easter eggs in the source code.
You left Easter eggs in the source code.
Oh, lots of them. The breadcrumbs have always been there. Nobody bothered to look at the source code.
Let's
They just hypothesized with, it's
So let's get into it. So this book is coming out anyway, and so let's start with the Easter egg that evidently dropped on October 31st, a year and a half ago. What happened that night? Because I don't think or that day, I don't think we got a definitive answer to that.
Okay. Well, my new tech was ready after almost 15 years.
Fractal.
Right, fractal.
Okay.
And then I did a currency on top of that just for a one-to-one comparison against Bitcoin and blockchain.
Okay.
And that's called Vertison.
Okay.
Right.
Vertison.
Yeah.
Is the name of the currency on top of the fractal
That's
network.
correct.
Okay.
Right. Sorry, what was your question?
My question was, you said you revealed your identity on
right,
October
the breadcrumbs.
31st.
Yeah. There are a lot of breadcrumbs.
A lot of breadcrumbs. So
Easter eggs in the source code, the original source code. Yeah. Like, for example, the epoch. That just makes me laugh so much. So if you look at the epoch, which is the quote beginning of time, that's technically an integer value, which means it has a maximum value. So if you're doing production software development, which I have lots of experience with that over the years, when you push something out into production, you go from development, staging, QA, production. When you push something out into production, it would make logical sense that you would set the epoch, the beginning of time, to that date. So you'd have the maximum life for your product. So, do you want Bitcoin to stop working in 2035 or 2075? Kind of makes sense, right? The epoch in the original source code is my birthday from 1970. And
that's the go ahead.
So people make this, somebody made this knee-jerk reaction. Oh, the epoch. Oh, that's a Unix timestamp for the epoch. Well, but nobody bothered. Like, there was a README, version 0.0.0 and 0.0.1 and so on and so forth. And it says specifically, this Bitcoin was developed using Microsoft Visual C++ 6.0. It runs on Windows, period. It does not run on Linux, Unix, or otherwise. And it says right in the README, maybe in the future it will. I guess nobody read that. It wasn't created with freeware, open source or otherwise. Like Visual C++ 6.0 back then was $1,200. I'm not some neckbeard having anarchist living in a World War II bunker. I've always been a professional, business professional. I've done extensive work for like 8 or 9 of the top 10 Fortune 500 companies. I have decades of experience creating enterprise-level solutions. Yeah, I am definitely not some anarchist. And that was. I'll get back to the breadcrumb thing. Let me just tangent just for a second. Yeah, the guy that did that HBO documentary, that pissed me off so much.
Okay, yeah. So I watched the Finding Satoshi, right? That was
I don't remember what it was.
Okay, I think that
called.
was the name of it. But they essentially claimed, and I don't remember. I know. The name escapes me, but it was two men that have since passed, is who they claimed collectively created
Hal
Bitcoin.
Finney?
Yes, Hal Finney. And
he received the first transaction.
From you.
Right.
So.
He didn't send it to himself.
Okay.
Well, let me
sure
touch on that HBO thing and then get back to the breadcrumbs.
Okay.
Before we, wander off too much. Right, that HBO documentary, boy, it pissed me off. Because that was in October 2024. So almost 2 years ago. And my new tech was ready. And I had intended to release the Vertison white paper on October 31st. 16-year anniversary? Whatever. Yeah. 16, 17, I don't care.
Right. Okay.
Like I said, that's it's all ancient history for me.
15 years. Yeah.
Right. But this guy with the documentary, he made me out to be, as I said, some neckbeard having anarchist living in a bunker, wanting to disrupt the Fed, overthrow the government. Whoa. I'm a suit and tie guy. Always have been. I wear suits, ties. I do professional work. Yeah, enterprise level stuff. I've had a very long and, I guess, successful career. So that made me look wrong. You know, like for example, people that work for the government or otherwise, they're still people. They still watch HBO. So having this new mindset of who I was, which is totally 100% wrong, that would put me in danger. You know, real danger.
Yeah.
Yeah, I mean, I've had 8 assassination attempts over the years.
You've had 8 assassination attempts
Oh, yeah.
on your life.
Oh, yeah, I have lots of scars to prove it. Yeah.
Let's hear the craziest one. What is the craziest assassination attempt that you can tell us about?
Well, I mean, I've been shot, stabbed 9 times, 4 home invasions with intent to hurt me, got poisoned twice, and run down by a truck. At my house.
And these were all people that discovered your identity?
Somebody knew. Right, somebody knew. Yeah, the first time was in 2011. That was part of the reason I'm like, okay, I'm out. 'Cause, yeah.
So you stopped posting on Bitcoin Talk forums in 2011 because there was an attempt on your life?
Well, that was one reason.
One reason?
You know, Silk Road, other things like that. That goes completely against my ethos. You know, I make things, my purpose of being here on this planet is to help the 8 billion hardworking people of the world. I mean, it's kind of strange. I created money, but I don't care about money at all. You know, I don't live some extravagant, crazy lifestyle.
It's a nice watch.
Oh, thanks. Okay, that's really nice.
What kind of watch is that?
Richard Mille.
Okay. How much is that?
A little under 3 million.
Well, it's a drop in the bucket. I mean, Satoshi's coins, your coins.
Yeah, the actual number is 1,112,050.
That's the amount of coins that you have in your wallet.
Which multiple wallets.
I mean, 1 million coins with Bitcoin at 64,000 or whatever it is right now. I mean, that makes you a trillionaire, right?
Well, actually, my new tech, tokenized equity has been sold of my new tech at $5,000 US per tokenized equity unit, with basically 1.85 billion in 2 purchases.
Why did you need
the
to?
new tech has a $500 billion market cap currently.
Why?
Which I own all of it.
Okay, and why did you need to sell the new tech or raise money for the new tech?
No. I have self-funded all this time. I've been developing it all in secret, in privacy, myself. I've done absolutely everything myself. Not a single human being has touched any of the new ecosystem. And, right.
But when you say that it's been sold at $5,000 per equity.
That was a couple weeks ago.
That indicates to me that it's been sold to someone, and so someone bought it, and in exchange you received.
One person bought $900 million worth, another person bought $950 million worth. And so it was a total of 370,000 tokenized equity units at $5,000 per unit.
And
I had offered, I wanted normal people to be able to have this, so I had reserved a small amount that I've offered to people on Telegram, which, there's only 19 people in the group. Can
I join the group?
Sure, it's by invitation only, but
if I give you my,
he can help you out.
He can help.
Yeah.
Alex, can you get the group link from what's his name? I don't want to just point to him and say that
Travis.
guy. Travis. Can what's that?
Yeah. Oh, do you have the YouTube? Oh, to show Rob.
Yeah.
It's Rob, correct?
Yeah, it is.
Sorry.
No, it's okay. Sure. Yeah, no, come on.
Right.
Feel free. Yeah. Come on, join us.
Yeah, I created a YouTube channel 5 years ago.
Okay.
Basically to audit my work, because no one would actually believe that one person could create everything I've created.
Is this profile picture? Is this you?
Yeah.
Yeah, that looks like you.
Yeah, that's me.
And so this YouTube has 341,000 subscribers. It has 116 videos. Guess who's back, Satoshi?
Blockchain is obsolete is actually the best one.
Blockchain
I think it's just under
There's a playlist called the Satoshi Sessions that goes really in depth
Yeah.
into the fractal technology.
There's a video on here that says hitting golf balls through plywood.
Oh yeah, that was Nokia Classic in Louisiana. Yeah. Art Sellinger was there. He was the long drive champion. So he asked me to join him.
And so, do you mind putting me in this group?
It's just a YouTube channel, but there's a
No, but you mentioned this, the Vertison Telegram group.
Right.
So
Yeah.
you can get all the tech updates that he posts for the.
Right.
Yeah, let's
Well,
find
the Tech Updates is a channel.
Yeah.
But there's a group that has, what is it, 19 people, right?
Oh, that group. So we shouldn't say that one publicly, right?
Right.
People can go
But yeah,
to
we
the,
can do.
Can you just add my handle in there?
It's the only way that
We'll do it
I.
afterwards.
Okay.
So just give me what's your handle?
I'll show it to you.
Yeah.
It's
Here, I'll just,
it's right there. Can you see it?
Just take a screenshot. I appreciate it.
That's the
Oh, it's
handle
all
right
good.
there.
Yeah, thank you so much for
I guess I'm grateful for you asking.
No, I'm grateful for you existing.
Yeah. I wasn't.
So Travis, since we got you here, what ultimately, you've been in the Bitcoin space for a while, the digital asset space since.
Not really. I
No?
mean, in 2012, one of my
2012, that's a
friends
while.
told me to get in, and I didn't.
Okay.
And then 2020, I kind of was like, okay, I probably should get in at 10K, and it was just fun and playing around. But then I just put it down for years, and then picked it up again in October, and just started researching everything in the space. And so really, just since October, I've just been going back into understanding blockchain and wallets and everything.
Okay, and so you've been around for a while, and so you realize that the identity of
you can use
Satoshi has
mine.
been a mystery for a long time. Can you just tell us what ultimately gave you the confidence and that this man sitting here is the inventor of Bitcoin, Satoshi himself?
I mean, when you sit down with him and you spend time with him, it just becomes apparent. Like there's no one else who could know this kind of stuff. So when the book comes out,
Not by
read
me.
it. Absolutely. He didn't write it. Somebody in his Vertison community wrote it.
Right.
It'll speak for
I don't
itself.
seek publicity.
But this new tech that he's building speaks for itself, in my opinion. Does it matter if he's Satoshi or not? To me, it doesn't.
Yeah.
What I've seen from his new
name
tech
is irrelevant.
It's
the
like
new
he's not,
tech speaks
he's
for
not
itself.
competing. I brought him here. I thought this would be a really cool interview. He said sure. He was all for the conference. I didn't know if he was going to come or not. I was going to come, and then he said, "Can I come?" I said, "Sure, okay." I don't know if you wanted to be out in the public, but he did. He was. He's already come out.
So if the tech spoke for itself.
Yes.
And I haven't seen the tech, so I don't know. But let's say, right,
at Vertison YouTube channel.
At Vertison, right. And so, a lot of people are going to look at the tech and they're going to see the tech, and if the tech was put out there, similar maybe to Bitcoin, in which there was no knowledge of who the developer of it was. That's not the case this time. By coming here and talking about the tech, you're saying that I am Satoshi. I am the inventor of Bitcoin. I am now the inventor of this new technology.
Right. But
people are naturally going to associate your identity with this new technology. And so it does matter somewhat in the sense that, to have confidence in a new system, they're going to have confidence in its creator.
Yeah.
And they're going to...
I mean, I've seen his original white paper in his individual studio code, basically written.
Yeah, my notes from August 2008.
Lots of stuff.
So, there's a lot of things that people typically say when they're... I think you guys can understand my disbelief.
Oh, yeah.
I mean, a lot of...
Well, this is not me revealing my identity today. That was October 31st,
so
almost
maybe
2
we should
years ago.
finish that. Let's finish that story.
Right.
Okay.
Right. Well, the new tech was ready. This time, instead of writing a white paper, I wanted to make sure that general audience and normal people could understand what I've created this time. So I decided to do a video white paper, which is on the YouTube channel.
Okay.
Now, how did 350,000 people find me? I have no idea. Because, like I said, I don't market, promote. The videos that I've released out there are intended for the general public to explain how the new stuff works.
Mm-hmm.
That's it. I don't pitch anything. I don't market anything. I never say, oh, buy this or that. Never. And I don't like publicity. But, I mean, it was a trade-off. It's like, well, what I've created this time around, for the last 15 years, it's my Mona Lisa. And Bitcoin, blockchain, to me, that's like a kindergarten art project in comparison. It's paramount. Yeah. So I weighed the options, bad for my safety. Sure, a lot of people won't believe me, but I don't really care because I was never on a mission to prove my identity. It's like, I'm me. If you don't believe it, I don't care. It has no effect on my new tech, what I do, my course of my life. So, yeah, it's actually better if people don't believe that I'm me. It's better for my safety. So, but anyways, yeah.
So
guy in the
October-
Telegram
so this
group
evidence
wrote a
that you're-
200-page book that definitively proved that I'm
So
me.
October 31st, a couple years ago, is when you put out this video. But what is it about this video that is the damning evidence that you are Satoshi?
Well, we had a lot of talks, and basically the conclusion was when people see the new tech, there will be no doubt. They'll come to the same conclusion, of where it came from in the first place, who I am. Honestly speaking, in the last almost 18 years, there's only been 2 original ideas. Bitcoin, blockchain, originally called a time chain, and fractal version. Yeah, there's only been 2 unique ideas. I'm not trying to insult anybody here at the show, but it's all derivative thought. It's blockchain, 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 blockchain. Well, yeah, I made that. So these are all implementations on top of what I already made. Not revolutionary, not unique. The only 2 unique things in the last almost 18 years were both created by me. Yeah.
There's a couple. There's a couple more things, just like the.
Go on for hours, and hours, and hours.
Yeah. Thanks for coming up, Travis. And so there's a couple more things that, are the just first things that people pop into people's minds when they think like why you haven't sold any of your coins.
No.
When it comes to
it's against my creator's pledge.
Your creator's pledge.
Correct. Which is on the website for Vertison.
Okay.
Spells it out very clearly. I do not profit from any of the things I've created. My purpose is not revenue, money, profit. I don't care about money. I don't seek attention. I'm not looking for the spotlight. I just make stuff. And I've been blessed to be able to make things or solve problems that other people couldn't solve.
Right.
So that's my purpose of being here, planet Earth, in this time, is to use those blessings that I've been given to help all the people of the world that are being taken advantage of, whether that's through crypto scams, schemes, shit coins, meme coins. It's all of it's just engineered to extract money from people that don't know any better. So I definitely quietly position myself as a guardian angel for the people that don't know any better. Like if there's one person in the world that you can trust, it's me. Because everything I've made is for them, not for me. Hence my creator's pledge. So no, that Bitcoin, never gonna move. Well, never gonna be sold. Unless somebody brute force attacks a wallet and, that happens.
Quantum.
Well, we're looking at almost 18 years now since Genesis block, so to speak. Yeah, 17 and a half, whatever. I can guarantee since then, there have been lots of very powerful computers just trying to do a brute force attack. Once again, it was just a proof of concept. Because when you generate a private public key pair and the public key is your wallet address, you're it's giving away half the secret. So, the way to brute force attack would be just generating private keys, which then has the associated public key. And if you look at all the wallets in the public ledger, if you got a public key that matches one, hey, you now have access to the funds. So, I have no quantifiable numbers, but I can definitely say There's been massive efforts for the last 17 plus years of doing brute force attacks. So like, yeah, when you see, like in the last year or so, oh, hey, this 14-year-old wallet woke up, you know? Oh, wallet from 2011 woke up. It's like, yeah, what do they call it? Diamond hands or something? And nobody would have held on to it that long, well, unless they're me, you know, because I'm not looking for money. But anybody else who bought Bitcoin, you know, over the years, they were trying to use it as an investment vehicle to hedge against inflation, you know, to have something that doesn't, you know, deteriorate in value. So, yeah, those wallets that kind of magically wake up, you know, my guess is those are the result of brute force attacks that were finally successful. Right. So, I mean, blockchain, Bitcoin, it never had the right DNA. It was just a proof of concept. I mean, just a simple idea of using the public key as the wallet address, yes, that's a huge vulnerability. You know, that doesn't work for global finance and protecting people's money. You know, I think about all the normal people in the world. You know, they're out there working a job, whether it's manual labor, professional, or otherwise, and they're doing their best in life to provide for their family, their children, you know, to leave something to the next generation. And of course, they're fighting inflation all the time. You know, you put money in a IRA or whatever, by the time you take it out, it has, you know, hardly any spending power compared to when they earned it. So one of my principles is, you know, when you earn money, like, you know, fits in your hand, right? When you're 20 years, 50 years in the future, it still has the same value. You know, it's not like pouring it through a sieve. Yeah. So, yeah, there's many hard stops in the Bitcoin blockchain proof of concept. You know, vulnerabilities that would never fly with me in a long-term situation. You know, my new tech is designed for the next 100 years plus. Yeah, can't be hacked, can't be compromised, and it's designed for all the hardworking people of the world to protect what they go out and they spend their time every day earning.
We have a chat on the live stream.
You have a live stream chat?
Yeah.
Oh, no.
And
let me guess. Oh, you're not Satoshi.
Well, they're understandably skeptical.
Move some coins.
They're skeptical.
Oh, move the Genesis block. They don't even realize that the Genesis block, the 50 Bitcoin reward, you know, for mining the block, it can't be moved. It's not in the inventory of what can be spent. Yeah, so what's in the wallet of the Genesis block, yeah, it can never move. But that's people's, you know, not insulting anybody. When I say ignorant, I don't mean it in a cruel way. It's just a lack of knowledge. You know, but in a very ignorant way, people wanted me to prove my identity by, moving, you know, Bitcoin from the Genesis block. Well, it actually can't be done. Oh, what about one of the other, you know, wallets from Satoshi era? But they, well, like I said, they lose sight of the fact that I don't need their approval. I'm not seeking their approval. You know, I only revealed my identity because of that horrible HBO documentary, and I really need to set the record straight about who I am. You know, yes, I'm a coder, developer. I started when I was 12 years old. You know, I started using C++ in 1990 for my first commercial product. You know, I've done endless work for Fortune 500 companies. You know, there's a big deficiency, in my personal opinion, for Microsoft SQL Server in 2007 and stuff like that. I was doing, as I said, consulting work, whether it was SQL optimization or coding or whatever, for a lot of really large companies. And the only replication strategy was active-passive, which meant you have one server that you can write to, and then one that's sitting there doing nothing in case they need a failover. Well, that's a huge, horrible waste of resources. And to me, it didn't make any sense. Why shouldn't you be able to write to multiple servers, multiple nodes, you know, in a corporate environment, you know, where you have 10, 20 servers Sure, mining would work for that because it's within a corporate atmosphere. Sorry, I lost my train of thought. But
you're explaining your journey through your
SQL Server.
initial, yeah.
So when SQL Server 2008 came out from Microsoft, I think it was like around August or something like that, I was really hoping that they were going to implement a much more or a stronger replication strategy and failover, but they didn't. So that's what I made. Proof of concept, demonstrating writing to multiple nodes on a network and then replicating the data with strong consistency. Eventual consistency is like what's used in Facebook, as an example. Like you make a post and maybe your friends see it, a second later, but somebody else might see it an hour later. It doesn't show up. Because what they're dealing with is they're dealing with global scale, and they're trying to retain speed. That's kind of that's the holy grail of distributed computing. Speed, scale, and consistency. So they chose eventual consistency, because it doesn't really matter, picture something like that. But if you're dealing with somebody's money, once again, they were out there, the normal people, working a job to earn this money. It can't just vaporize, turn into nothing, disappear. Sorry, got off track again. But, right. SQL Server, it was 2008. So I solved the problem with Bitcoin and blockchain, which was just a proof of concept from the data replication perspective on an enterprise level. So why Satoshi Nakamoto? I didn't want to stop getting very lucrative work with Fortune 500 companies or be on the outs with Microsoft, because most of my work came through them. Hey, I made something that defeats SQL Server. Whoa. And take a hike. And I also didn't want a first-class ticket to prison. Because at the time, there was no crypto. I made it. At this point, yes, there's wonderful adoption, from governments, institutions, normal people, which certainly is great for paving the way in the future. But, if you roll back the clock to 2008, there was no Telegram, Facebook, things like that. Social media was not a thing. The only way to really communicate with people was a message board or email. Phones didn't have GPS or things like, it's like you have to put it in context. So, I created a solution that did what SQL Server didn't. Did I use a pseudonym? Yeah, of course. Because I didn't want to stop getting work. I had a 9,000 square foot house. I didn't want to stop paying for it. And, I didn't want attention from authorities, because at that time it's something radical and new. Hence the pseudonym, which once again is just Die Hard and my Busa. No deep story on that.
And so the secret server thing explains the invention of the blockchain, but you didn't need a currency for that.
Well, see, once again, nobody looks at the source code that I made. Like, for example, the Atom system, ATOM. The idea with that was when transactions, this is all built out, not just hypothesized. So the idea was it would basically build a reputation score for nodes on the network to then optimize routing of traffic. Well, if you're using proof of work, it doesn't matter if that miner joined 10 minutes ago or 10 years ago. Everyone's treated exactly the same. So why was the whole reputation system made? If in proof of work it doesn't matter. Or, for example, how nodes find each other. It uses a publish and subscribe model, which has channels. Now, if you're just dealing with currency, it only needs one channel. Send, receive, send, back and forth. But it has 256 channels. And multiple ones are being used. So once again, why have 256 channels? And I think it's actually, this is not verbatim, but I mean, I had a comment in the source code of, hey, I don't even know if 256 channels is going to be enough. Because it was a enterprise data architecture, not a currency. Or, Bitcoin script. Well, that's actually a stack machine based upon the fourth programming language from back in the 70s. I think it was the 70s, yeah. Effectively what you're doing is you're passing a command with a predicate, multiple predicates, and it's a stack. So just like plates in a buffet, they push down and then take the top one off. Well, that's how a transaction executes. It's using Bitcoin script, which really is a stack language, stack machine. Mm-hmm. Right. Or, that's overkill if you're just making a cryptocurrency. Or, there's a marketplace built in. Why do you need a marketplace if you're doing cryptocurrency? This is in the source code, There's also reviews, being able to rate transactions. Well, it wasn't really made for a currency. Well, it's spent enterprise data, marketplace, reviews, publish and subscribe, 256 channels. Yeah. What else?
And you're saying these are the Easter eggs that you left in the source code?
No, that's just enterprise architecture.
Right.
If you look at the source code, it's drastically over-engineered and over-architected if all the purpose was to just do a cryptocurrency. That was basically a last-minute shoehorn to have a test group. Who wants to really, well, once again, didn't want to attract attention as trying to defeat, the Microsoft and Oracle, the top two companies in the world when it comes to engines. Right. So, cryptocurrency. Oh, electronic cash. Great, I'll test it. Because you always need QA. You need testing. Yeah. So, yes, if you actually look at the source code, look at the architecture, it's very evident that it was not intended for what it was used for. Much bigger.
You thought to yourself, hey, I'm inventing something here that could potentially overthrow two very large companies, and so in an effort to remove suspicion from these two companies, I'm gonna use it to leverage against something even bigger, to draw the suspicion from something even bigger, like the U.S. government, who would then see it as a threat to the U.S. dollar.
Right.
It feels like going, and if you were worried about the threat of taking on these two companies, why put yourself in a position to threaten the government, which would be bigger than the two companies?
Hence the pseudonym. And virtually perfect OPSEC, operational security, for 16 plus years. It's very difficult to be invisible.
Yeah.
Very difficult.
And you put a lot of work into being invisible, but now you're here.
Right, but I had revealed my identity October 31st, 2024, with the new white paper, new tech. Yeah, like I said, it was a difficult decision. It's like, do I give up my anonymity so I can make videos to explain the new tech, or do I just give people some black box and have the same consequences as before?
I mean, the first one worked out pretty well in terms of user adoption.
Yes, but nobody really understands how it works.
What do they not understand about it? I mean, the technology's been adopted more so as a store of value than maybe a cash system, but what else is there to understand that isn't understood
all the underlying architecture, which is right there for everybody to see.
But when you say underlying architecture, you mean blockchain?
Yeah.
But people are, you've got, maybe not using it for the best of purposes, but we tried, health records on the blockchain,
sure.
And,
I
NFTs
agree.
And different personal information,
Sorry, not real NFTs.
I mean, I also find NFTs laughable, but maybe for a different reason.
Well, not anymore. I made real NFTs. Yeah. And a tokenized stock market and a global monetary system. Yeah.
And so what are they not exactly understanding about the original invention?
Well, they understand what they need to know, but they don't understand how it all really works under the hood. I hate to say it, but experts are really not really experts.
No, I mean, we've long said that, this thing is so new and so early that, anyone claiming to be an expert is just...
And it's all very surface level detail. Yeah.
Can you, no. So I would love a couple more Easter eggs here. Like,
back to the epoch.
So you mentioned the epoch when red as an integer is your birthday.
The epoch, the start of time,
according to the Bitcoin blockchain.
Right. Yeah, the original source code.
Yeah.
Is my birthday.
Right.
And which logically, if somebody looks at it, like, why would the epoch for Bitcoin be 40 years in the past? Like you're capping off the lifespan of your product by 40 years. There has to be a reason. But the knee-jerk reaction somebody made was, oh, that's a Unix timestamp. 1/1/1970. Well, and everybody just says, oh, yeah, that's great, perfect. But like I said, if you look at the README, it says specifically, this was made using Windows tools that cost money. It only runs on Windows, maybe Linux or something else in the future. So there's no reason, logically, that the epoch would be a Unix timestamp. It's not.
So you were born on January 1st, 1970?
No, I was actually born on March 22nd, but I ended up shortening it to 1/1. So I didn't give away exactly. So it depends on what version of the source code you're looking at.
Okay, what about another, could you give us another Easter egg?
Oh, there's lots of them. Just quick tangent. So it was funny, I laugh, I've seen some YouTube videos and stuff, and like, oh, this is the usual suspects list. They're always looking for some expert in cryptography and that whole whatever. What is it called? Cypherpunk? Yeah. And I actually saw this brief interview with Adam Back a couple of years ago, and they were asking him, well, who's Satoshi? And I remember in the video he said, well, he's going to be he's never engaged with us. He doesn't show up for anything, doesn't respond, doesn't reach out, no communication whatsoever. But he said, he's going to be somebody you've never heard of before. Somebody that's not in this space. Yeah, somebody you've never heard of before. Which, because that's not my space. I'm a suit and tie professional. I am blessed to be able to make stuff that other people couldn't make. But, yeah. So, no, I don't have any interaction with any of them. But there's other factors. Like if you're trying to figure out, who is Satoshi? So first off, I'll just give you a few logical steps.
Okay.
Which nobody bothered to follow the logic. Once again, Microsoft Visual Studio 6.0. That cost $1,200 back in 2008. DevTools now are free, but not in 2008. It only runs on Windows. So you're looking for somebody who is an expert. Once again, if you look at the source code, the enterprise level architecture, that's not somebody who's new to coding or 15 years old or 18. That's somebody that has decades of experience building enterprise architectures. So that's one logical step. The epoch, that was another logical step. Why would you set it 40 years in the past? You wouldn't, unless 1970 meant something. Now, Visual C++ came at a very interesting point in time. In school curriculums, colleges, they taught COBOL, Fortran, a couple others, old stuff. Because the schools back in that era needed to develop a curriculum, which took them a couple of years. Then they need a teacher that can teach it, who needs to understand the programming. Well, C++ came out in 1990. Okay, like I had Borderlands C++. So before that came out, people were using COBOL, Fortran, and that's what they learned in school. Now, to develop a curriculum around C++ is infinitely more complicated, and it's systems level programming, not user interfaces or otherwise. So you're looking at multiple years to be able to create a curriculum and then have a teacher that's astute enough to be able to teach it. Well, what happened in 1996, 97? The web, HTML, JavaScript. Well, any teacher can teach HTML. So that whole learning C++ in school really didn't happen because of that window of the time frame of when it came out. So somebody that knows C++ coding, whether you comment on the quality of the code or not, but just enterprise level architecture and C++, that's something that wasn't learned in school. Mm-hmm. That was because you had a real business or financial purpose, like income, for using it and learning it. So if you go backwards from when C++ with Borland came out in 1990, you needed somebody that already had experience. Somebody who was, an infant in that time frame. No, that's not going to be Satoshi.
Right.
If you really go backwards and think about the academic and the other stuff, you come up with a time frame of when I was born, being from 1969 to 1973, period. It's the only circumstances where the creator would have been born. So if you look at the usual suspects list, anybody born before that, probably not, because they're probably using Fortran, COBOL, and they have a career doing COBOL programming, generally speaking. Or somebody that comes after that time frame, well, they're in the HTML and JavaScript category because that was taught in schools and easy to learn.
But even something that's not taught in school, you could learn after the fact. There's resources, libraries.
But do you want to do something that's, for somebody who's never done it before, insanely complicated, very difficult? You have to manage pointers, memory management. Developing in C++ is not trivial. Not like some of the programming languages now. There's no such thing as automatic garbage collection or any of the features that exist nowadays. So you had to have a purpose to use it, and you had to have a reason to learn it. So anyways, it really comes down to 69 to 73 for a birth year. If you look at the list of the usual suspects, that eliminates everybody except Adam Back. He was also born in 1970. But I reached out to him 6 months before the white paper came out, basically when SQL Server didn't do what it was supposed to do, asking permission to, what was this thing? Hash cache or something? Sorry, ancient history for me.
There was a few of them, Hashcash, eCache,
right.
A couple others.
And also remember, I don't talk to anybody, so this is very unexpected for me.
I appreciate you.
So yeah, I'm trying to jog my memory from a lifetime ago. So he was the only one that comes in that time frame of when the creator would need to have been born. But he was the recipient of the email. He's not emailing himself with some grand scheme. 6 months from now, I'm going to have some pseudonym and I'm going to do this thing. No, come on, seriously? It just doesn't make any logical sense. He got an email, he replied, 6 months later, here we go. And
we have people in the chat that are also saying when it comes to moving your coins and doing these things, it makes sense. But when it comes to, given that you've now kind of launched like new social media with...
No, I don't use social media.
Well, the YouTube that I have here is
is that considered social media?
Yeah, YouTube's a social media platform.
Well, they're just explainer videos.
Okay. And so given that, this new technology is coming out and you've sort of soft launched it, talked about it on your YouTube, why, and also revealed your identity on YouTube, why do that on YouTube and not Bitcoin Talk and post from your original
I don't care
Bitcoin?
about any of that.
Uh-huh. But
like
when
I said,
it comes
it's a lifetime ago for me.
Right.
And it doesn't matter to me. I was never trying to prove my identity. You know,
But
everything I put forward is just facts.
Right, but
my life is my life. That's all.
Now the next part of your life that you've talked about is this new technology, and part of this new technology is revealing your identity.
No, not at all.
The timeline suggests that you've. I understand that, but you could have rolled out the technology and not revealed you revealed your identity and rolled out the technology in conjunction with one another, and so they seem related. They seem like you could have revealed your identity, not rolled out the technology, or rolled out the technology and not revealed your identity in the case that they weren't related. But given that you did that in sync with one another, it suggests that revealing your identity is important to the new technology. And so in order to reveal your identity in the best way possible to preserve the most trust, it seems the way to do that would have been to use one of the methods that we've talked about, like posting on Bitcoin Talk or email or some of these things that have been put forth as yours.
Right. Well, the human brain looks for patterns. That's how it works. Like your eyes are trained to look for motion. Things that sit still, you don't even see them. But something moves, that attacks your focus. So looking for patterns, I can understand what you're saying, because that's what the human brain does. But making assumptions or leaps, that's part of what never revealed my identity in the first place, because people were making assumptions, making a leap, trying to find connections that don't exist. Revealing my identity, like I said, was mostly around that horrible HBO documentary.
Why did that piss you off so much?
It made me look like an anarchist, and that's not me.
But the Silk Road, put Bitcoin in a bad name. Like, there was multiple other things that...
That's why I bowed out. I don't want to be associated with any of that stuff. My purpose is to help all the hardworking people of the world. So having something I created used for criminal activities, I don't want any part of that. No, thank you. It kind of turned into a runaway dumpster fire, but it wasn't what I created. It wasn't what the intent was. So, sorry. I guess it's a lot. I'm just me. I look in the mirror. I'm just me. To me, I'm just a guy. I love my wife more than anything in the world. I love cheeseburgers, and I make stuff. It's pretty simple.
Yeah, let's run a quick. Our producers are telling us that server space or something is getting limited, so I think we're going to get.
Sorry about that.
We'll have you on again. When does the book come out? When does the book come out?
It's done. He sent me a copy. I read it. Like, damn.
Okay.
He found all the Easter eggs.
When does the book come out?
I don't know anything about the guy that wrote it.
Yeah, I have no idea. If you wanted to hold it in confidence, I'm guessing one of them could send you the book.
Would you mind sending it to me? Of course.
Right.
NDA, whatever you guys need.
Paperwork does nothing. If somebody really wants to work you over, they're going to. No signatures required.
Got it. Yeah, no, just for my own vindication,
Yeah. There was one thing. I never intended to prove my identity.
Yeah.
Revealing, like I said, it's just the facts of my life. I'm not shilling anything, not promoting anything. This tokenized stock market's been done for 3 years. All this stuff is revolutionary.
Fractal Technologies tokenized equity certificate, common tokens, 5,000 certificate number, secure, signed, trading, protected.
Yeah.
So
nobody can steal your assets. Nobody can execute a transaction without your approval.
This says Cody Was.
Just an example. It says demo right down there too.
It does say demo.
Mm-hmm. Yep. Made a global monetary system. New money for the whole world. Reloadable. point of sale. True NFTs, where it actually is what I call a portable NFT, and it lives on the chip. Digital gold.
Liberty dollars, digital gold.
Yep. Oh, that's the billion. This is the movie.
Thor: The Dark World.
Yeah. Yeah. How do you make an NFT out of a multiple terabyte Hollywood movie? Well, I did. Yeah. Anyways, I was never intending to prove my identity, but I did. I signed a message right after Donald Trump got elected. And yeah, people said, "Oh, that's fake," because EC 255119 has,
Sorry.
didn't exist in 2008.
You said you signed a message.
I did.
After Donald Trump got elected the first time or the second time?
Right, second. It was
the second time. So
offering him
recently, in the last couple of years.
Yeah.
You said congratulations, and you said this message it was EC what?
25519.
25519.
Right. And people say, "Oh yeah, your key is fake," because even though you can go on any of the public key servers and validate the fingerprint. It's funny. Like I don't use Twitter, well now X, but I had posted on there in my my bio the fingerprint. Nobody bothered to check.
Wait, so what is this EC25519? This is because it's not an elliptic curve that's used in Bitcoin.
Correct. Right. Bitcoin's all SHA-256. But signing a message digitally, yeah, I had a key from 2008, which is registered at Satoshi at bitcoin.org, and yeah, the method I was using was EC25519, which everything back then was like RSA. So people say, "Oh, well, that elliptic curve didn't exist. It only came out in like 2014 in like Bouncy Castle or 2013 with OpenPGP." Well, that's if you want to use some freeware implementation because you can't do it yourself. If you actually look on Wikipedia, that elliptic curve, the white paper for that, which provides all the logic for the math, was in 2005. Like everything I do, I don't wait for some, third-party product to be able to do an implementation for me. If I need it, I make it. So I wrote my own implementation based upon the white paper that described all the math of how EC 25519 worked. So no, my key's not fake. Sorry, I'll skip all the curse words. Because it is kind of annoying. Like, everybody out there seems to just look for reasons for me not to be me.
Well, but it's because you choose not to do the ones that would definitively prove that you are you.
Could be a brute force attack. I did sign a message. Well, whatever. But also, it doesn't really matter to my life. I mean, I spent the last 15 years.
Like you said, it's just annoying.
Yeah, it's like, mosquitoes. It's just.
Right.
Yeah. I spent the last 15 years developing. No money, no income, from that. Self-sufficient, self-supported. I never wrote any white papers because most people nowadays, they write a white paper because they're looking for funding. I write a white paper after I do the work, which is just describing what I made. Because I don't care about anybody else's money. I did very well on my own long before any of this.
You playing poker tonight?
Hell yeah.
Let's go play some poker.
Yeah.
All right, we're gonna wrap this up, guys. It's been like 7 hours, 8 hours. I have no idea how long
so
it's
exhausted,
been.
I'm sure.
It almost feels like I'm dreaming.
Well, I'm sorry to talk your ear off.
No need to apologize. This has been,
I do feel badly.
Why? You don't need to feel bad.
Your time is valuable, just like everybody else.
Well, it was a fun time. It was fun chatting with you.
That's a nice suit jacket. It is.
Appreciate that. Guys, that's it. Travis, we appreciate you. Satoshi?
Nice to meet you, Rob.
Good to meet you too, Travis.
Nice to meet you.
Thank you.
I already know you. Yeah. Yeah, I guess thanks for bringing me here. Yeah, this was impromptu, unexpected.
Likewise.
Yeah.
All right, guys, we're gonna call it a day. That is also not how we planned on ending the show.
Yeah, my mouth is so dry. I never talk to anybody.
All right, guys. We're gonna go play some poker.
Yeah.
So shout out to all the sponsors on the show, and we couldn't do it without you guys. And much love, everyone behind the scenes. Alex, Broderick, everyone watching, everyone rocking with us in the chat. Freedom Guy, Andy's in the chat. One Armed Bandit, Jin R. We've got a whole
Such
cast of characters here.
Very clever names.
Birds 1811. We love you guys.
Yeah.
Signing off from Vegas, the Aria. It's been one heck of a show, guys, and we will see you next time. Peace.
Very well done. Thank you.